stellar, 10, 11-week run there at the end of 2023. We got a professional in the Bloomberg Interactive Broker Studio, Joe Mazzoli. He's the Managing Director of Trader Education at Charles Schwab. Joe, again, that last finish we had there in 2023, I haven't seen anything. I've been doing this a long time. I haven't seen anything like that in a while. What did you guys at Schwab make of that performance we saw both in the equity markets and in the fixed income market?
For me, there's one word: rotation.
Yep.
I think that was a big change from what we saw basically all of 2023. When you think about the fact that in March of 2023, you had, the financial meltdown, if you will, that's when mega cap just really caught a bid, right? Everybody said, we want to move into companies that have high free cash flow. We feel a little bit more comfortable with that. I mean, people are looking at these mega caps as almost like I don't want to say a hedge, but maybe a safe haven. And then as you get towards the end of the year, what happens? You get a dovish Fed, if you will. You get CPI that's come down quite a bit. And then people say, hey, we can feel more comfortable rolling back into maybe some of the sectors that hadn't performed as well. And that's exactly what we saw from our clients.
Now, new year, new things that you guys are launching. I want to get into that Schwab Trading Activity Index. So what exactly does this offer? What data comes out for December?
Yeah, it's a cool name, Stacks,
yeah.
right? People remember that one, Stacks. I like that one. Basically, Stacks it's a behavioral index, right? So we're looking at kind of what our clients are doing, their trading activity in their accounts. So what's interesting is we use we have millions of clients, right? So we look at a sample size and we say, what are the net buys versus what are the net sells? And we use that to come up with a median, sample, and that gives us a number, generates a number. So right now, for December, we generated a number of about 44.5. And the range traditionally is around 30 to 70, 35 to 70. So it's actually on the moderately low end, but it is a step up from what we saw in November. And interestingly enough, you might have thought that given the strength that we saw in December, that would be higher. But I think when you look at the equities that were bought and that were sold, it makes a difference. So we had net buyers, but the equities that were bought were Pfizer, Alibaba,
Really? Okay.
NVIDIA, and the ones that were sold, these were the ones that were a little bit, that had already moved up. Your Apples, your Metas, these are, and even Tesla. So there was a rotation, and like I said, the rotation that we saw within our clients kind of mimicked what you saw in the overall market.
So what are you telling your clients these days? I mean, is it, Tom Keene has a nice expression, the courage to be in the markets.
Yeah.
What are you seeing from your retail clients? Are they in the market? Do you feel like they're fully invested? They're cash. Another thing I hear about is there's $6 trillion of cash on the sidelines. What are you seeing at your place?
Well, we had, the old saying, right? Time in the market versus timing the market.
Yep.
That's hard for me because I'm a trader, right? And for me, I like to look at different indicators, and that's kind of how I look at the Stacks, right? If you're a short-term trader or a day trader, Stacks probably doesn't help you a lot by looking at sentiment. But if you're an investor and you think about what are all the tools that I have in my toolbox, right? You got your fundamental analysis, you got your technical analysis. Well, now you have that sentiment analysis that helps. Okay. So, what we're telling clients right now is, be patient. I think we expect some volatility throughout the year, and I think a lot of that has to do with the fact that, in the fixed income market's pricing in 5 or 6 cuts. We don't see that many. We see about 3 to 4. So as you get closer to that March date, what's going to happen if it doesn't look like the Fed's going to cut? Does that start to creep volatility back into the fixed income market, which you saw last year, in turn, created equity volatility as well?
Joe, I got to touch on CPI. That came out. Do you think from the figures that came out from it, I mean, is that showing that it's going to take a little bit longer for these rate cuts to happen?
Yeah.
How long? Yeah.
Well, I mean, in my opinion, think about it this way. I don't think anybody ever thought that it was going to be a straight line down, right? The straight line down to 2%. It's a bumpy road, but we've made a lot of progress. I think instead of, we're not talking deflation, we're talking disinflation, but it's going to take some time. I noticed that on the Fed Watch tool, you went from about a 65% chance of a cut in March down to 59% or 60%. They're still pricing in a lot of cuts. And I just don't know if you're going to get that. Maybe you get that in March, but I think that the Fed's probably going to say, if we make this cut in March, let's play wait and see, and let's see what happens from there.
So the story today, Joe, for us here at Bloomberg Radio and TV is these Bitcoin ETFs.
Yeah.
So now there's 11 ETFs that if people want to get exposure to, I'm going to call it this asset class. I'm not sure if Gary Gensler would agree. And ETFs have been such a growth story. I mean, nobody knows it better than the good folks at Schwab. What are your clients? How do you think they're going to react to this opportunity, this investment opportunity?
Yeah, I mean, I think there'll be demand. I do. I think there'll be demand for the ETF, especially when you think about client accounts, right? If you want to trade futures, you have to have a certain level of, we call it level 3, right? That gives you permission to trade futures. So if you have the ability to do that through an ETF, it opens up a lot more possibilities for IRA accounts, for clients who don't have margin trading ability. So I think there will be demand there. What I also question is also, where does Bitcoin fit within an investment portfolio?
Right.
I think this idea that in 22 and 23, it was meant to be, a hedge, or it was meant to be an alternative asset. I mean, basically what it did was it became a levered asset of the NASDAQ, right? So I don't know exactly where it fits, but, that's up to the clients to decide.
So speaking of where things fit, I mean, so we talk about CPI, we talk about Bitcoin. We can't forget jobless claims came out today, lower than expected. So where does the labor market fit into the picture?
Well, it's interesting because even though you got a good print on last Friday for non-farm payrolls, even though you got jobless claims below, look at the revisions.
Yeah.
The revisions are actually moving in the wrong direction. So I think that's something to kind of keep an eye on. You can look at that headline flash number and it paints a rosy picture. But when you look at the revisions and when you look at kind of we don't look at just that number. We look at the momentum and we look at what's happening over the last 6 months or so. You're starting to see the JOLTS numbers come down, right? Job openings are less. Even though you're getting jobless claims that are better than expected, it's still moving in a different direction. One thing I would keep an eye on, I would absolutely watch this, is the low tick that we saw in unemployment was 3.4%. If it gets to 3.9%, when you get that 0.5% move, that's that trough to peak or peak to trough, however you want to look at it, that's an indicator that maybe things aren't as rosy as we believe.
How about volatility, real quick? I got the VIX here at 13.
Yeah.
Are you surprised by the low vol?
Shocked.
Yeah.
I mean, it's interesting because with everything that we've seen in the market in 23 and heading into 24, I would think, given tomorrow, being kind of the big day for the bank earnings, you would have seen a lot more hedging in some of those names, or even in the XLF. Well, one of the things that I'm looking at right now is that XLF is trading at an implied volatility in like the 10th percentile.
Right.
Meaning 90% of the time it trades at a higher vol. There's just not a lot of hedgers stepping into the market. Could that have something to do with the zero DTE options? It's a possibility, yeah.
Yeah, interesting. All right, I got to ask you, Lone Tree, Colorado. Are you based in Lone Tree, Colorado?
No, I'm a Bay Area guy.
You're a Bay Area guy.
I'm a Bay Area guy. I live in Danville, California.
Okay, because I looked at it's just on the bio. There's a Schwab Way in Lone Tree, Colorado?
There's a Schwab Way, yeah.
So did Schwab relocate some people from the Bay Area to Denver area?
So there's a big group in Denver. There's a big group down in Fort Worth. And we still have our office in San Francisco.
How's San Francisco these days?
San Francisco. You're just not getting a lot of people come downtown anymore. It's right. A little sad.
Yeah, I mean, it's just, when people...
Still a beautiful city.
It's a great city, and I'm thinking at some point, man, it's going to turn. I don't know when that's going to be, but I know there's a lot of issues there. But I always tell my friends that are coming in from overseas, we're going to come in with the family for 4 or 5 weeks to see U.S. I say, okay, you can go to New York, you can go to Vegas, you can go to Miami, whatever.
Yeah.
Have to go to San Francisco.
No, I agree.
And have to go to the Bay Area.
Yeah.
I still think that's the case, but it's amazing what happened there. I mean, so the commercial real estate, like we have issues here in New York City, but there's a lot of other stuff.
In comparison.
Yeah. So, but if you're in the Bay Area, downtown, it's pretty dead, right?
It's pretty dead, and it also depends upon what time you go down there, right? I'm working market hours. I'm getting in at 4:35 in the morning. It's a different site than maybe 7 or 8 o'clock when everybody else is getting in. So it looks a little bit different. I have hopes. I have hopes for the Bay Area. Like I said, I live out there. It's a beautiful area. It's just we need an influx of people. Problem is, people are leaving California.
Yeah, exactly. Well, you're going to dump of snow up in Tahoe, so I'm sure you'll be heading up there. All right, Joe Mazzola, thanks so much for joining us here. Joe Mazzola is the Managing Director of Trader Education at Charles Schwab. They've got the Schwab Trading Activity Index, STAX. It's launching this week, and Schwab clients can access it under STAX on the Think or Swim platform. How cool is that? S&P 500 off 0.8%, so we're seeing a little bit of a bleed there in the market on the back of that CPI data. Well, more coming up. This is Bloomberg. Let's get some company news right now with Denise Pellegrini.
Hey there, Paul. Well, we were talking about bank stocks and earnings and financial markets just a second ago there. Bank stocks set for that high-stakes earnings showdown. Wall Street's most influential execs, they'll be giving investors their latest take on the U.S. economy when they report tomorrow. We'll be hearing from J.P. Morgan Chase, Bank of America, Citigroup, and Wells Fargo. You know, a gauge of U.S. bank stocks gained 23% last quarter. We're also keeping an eye on those weight loss drugs because sales of weight loss drugs like Wegovy could be fat this year, but they still face some headwinds. We get more on what's happening from Bloomberg's Steve Rappaport.
The rapid adoption of meds used for weight loss has helped make the drugs instant wonders. The boom helped fuel gains for shares of Novo Nordisk, maker of Ozempic and Wegovy, and Eli Lilly, the maker of Mounjaro. They're now among the most expensive Big Pharma stocks, and Big Pharma's weight loss bonanza is just beginning as demand skyrockets. But it's unclear whether drug makers can keep up the production because supply is a constraint near term, and the price is also an issue. The new semaglutide-based drugs can cost $1,350 a month, and it's unclear how much or for how long insurers will cover the cost. Steve Rappaport, Bloomberg Radio.
All right, thank you, Stephen. Restaurants in focus because apparently restaurant operators will likely automate more parts of their business this year. This is according to Pop Menu, which says customers can expect more interactions with smart tech when they dine in person, place orders, or make reservations. And Peeps has unveiled some new flavors for Easter. This includes a Rice Krispies treat flavor, icy blue raspberry, sour strawberry, and s'mores graham cracker. And those are some of the stories we're following for you this hour. I'm Denise Pellegrini. This is...
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. You have 10 of the 11 major industry groups in the S&P 500. They are lower right now. Utilities and financials, they are leading the declines. Energy, the best performing group. Oil prices recovering from Wednesday's losses. West Texas Intermediate, that is up 3% right now. Wall Street also digesting that hotter than expected inflation report from the Labor Department this morning. But, you know, it hasn't had a real big impact on the bond market, where the betting still is on rate cuts from the Fed sooner rather than later. We have the 10-year yield pretty much unchanged, 4.03%. The 2-year, which is more policy reactive, that's actually down 2 basis points. We're at 4.33 there. As for the major stock averages, the S&P 500, 37 points lower. That is down 0.8%. 47.45 on the index. The Dow Jones Industrial Average down 245 points. The Nasdaq 100 is lower by 137 points. That is a decline of 0.8%. Let's get an update on some of those Bitcoin ETFs. The iShares Bitcoin Trust, that's up 21%. And then you have the Grayscale Bitcoin Trust. That is up right now just 0.25%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Lisa and Paul.
And John, the underlying Bitcoin XBT is only up 0.25% here, 46,000. It was as high as 49,000 earlier today. So kind of giving up the gains here. Interesting to see how this is all transpiring here. So we'll keep an eye on it. We'll talk to the smart people who know stuff about these.
Well, I head to the barber shop later today. That's
So then you'll-
the topic
Finally!
du jour
you go.
numero uno.
Exactly.
All the people who can least afford to get wiped out.
Yes, exactly.
They're the experts.
Tip your barbers well. All right, we got a professional coming on now. David Kudla, he's a founder, CEO, and CIO of Mainstay Capital Management here. David, kind of an historic day here, I guess, if you're somebody who has, an inkling towards crypto and the ETF space here. What do you make about kind of what we're seeing here with these Bitcoin ETFs? What are you telling your clients? What's the talk around your shop?
Well, this really is a monumental step in the history of crypto. The spot ETFs have been denied by the SEC for nearly a decade, and now they're finally here, 11 of them. And so, every event like this, it brings Bitcoin more and more into the mainstream. And when you see the companies that are offering these ETFs, these are well-established, many of them well-established financial companies. So, we've made that decision really years ago, but this is another step. Bitcoin is here to stay. We can call crypto or Bitcoin an asset class in itself, but this has been important in terms of the ongoing acceptance of Bitcoin among retail investors and even institutions.
Now, David, I'm looking at your notes here, and one thing that stands out to me is you call it the Magnificent Five. That's what it should be this year. Explain that for me.
Well, we talked a lot on the show last year about the Magnificent Seven and those that were shorting NVIDIA all year and didn't work out for them. The Magnificent Seven finished the year near its all-time high. NASDAQ 100 finished the year at an all-time high. And so, if we take out Tesla, we take out Apple, we have five left. We can call them the Fabulous Five. We've got all kinds of names for this. But those five, especially NVIDIA, just in these first initial trading days of the year, doing quite well. And what was expected was a rout of technology stocks, especially these mega cap tech stocks by some, and we're not seeing that. We're seeing that they're holding up well and continue to hold up well, even if it's only 5 of the 7 that are doing well. So maybe we'll call those the Fabulous Five for now.
So what do you think about that, David? Again, we've got, the S&P, at or near all-time highs here. And a lot of people, you're right, and particularly after the big surge we had at year-end last year, what do you think the risk is of a meaningful pullback here at some point in 2024 in risk assets, particularly stocks?
Yeah, well, we had a near 10% pullback in March of last year because of the banks, then a more than 10% pullback from July 31st into October. So, we expect those kind of pullbacks through the year. But if we look at the fundamentals for the market, we're going to see growth slowing. We're seeing GDP growth slowing from that torrid pace of 5% last quarter. We're looking at single-digit earnings growth, bond yields, and the Fed has paused on rates. We expect them to cut this year. In an environment like that, we have to have a positive outlook for really both stocks and bonds in 2024. Maybe not the pace of this year, but certainly high single digits to low double digits for a gain in the indexes, and there will be pockets where we'll see considerable more growth in that.
So, David, would you say then it's still a good time for fixed income investors?
Yeah, I think so. And, the approach that we've taken, especially last year when bond yields were on the rise, is we just moved to the very shortest end of the curve for our income investments, for our income-oriented investments. We were in ultra short-term bonds, even floating rate, and those did quite well. We think we're going to stay there this year, but in the fourth quarter, we started adding duration. So it's almost a barbell approach of the shortest end of the curve, ultra short-term bonds that have a high yield. We like that yield. And we expect with the Fed rate cuts, the 10-year has some room to come down, and we'll get some capital appreciation on the intermediate term and longer into the curve. So we can play it both ways this year and expect that bonds will do quite well.
Hey, David, one of the things is I try to think about how this market could perform in 2024, again, after the great year-end rally we saw in stocks and bonds. I come back to earnings, and as a former, research analyst, earnings still matter to me. I see the S&P 500 up, kind of the streets got it up in terms of earnings growth in 2024, like 11, 12%. How do you feel about that kind of number? Do you think there's earnings risk in this market?
I think there is some earnings risk. There was a lot in terms of multiple expansion this last year. We're at somewhere around 19 and a half times earnings now for the S&P 500. So, we do need to see, we want to see some decent earnings this year so that we can continue even without the multiple expansion to have some growth. And that's what's interesting about the mega cap stocks. Those had tremendous growth last year and expected to have more growth this year. Some areas we don't expect as much. We're avoiding the defensive sectors. We want to be in the growth-oriented sectors. We think that's a place to be this year. And even without multiple expansion, we think there's room there with the earnings outlook we have. With even a little bit more multiple expansion, we could see a decent year for gains.
I want to touch on the latest CPI print that came out. Do you think it's going to have a major effect on pricing for the Fed in the near term, or will that January reading, will that have more of an impact?
Yeah, it was interesting. We had about a 65% coming in today, about a 65% chance of the first rate cut in March. With the inflation read, it fell to about 60. Now it's back up to 65. So we're right around a 2/3 chance that we get that first rate hike in March. We still believe that, and we think that we'll see a series of rate cut. We'll see a series of rate cuts this year, and we just expect that because inflation is under control. Today's read for both headline and core came in a little bit hot. I think it's more about getting to target. The Fed target of 2%, we'll probably get there by the end of the year. If they try to get us there quicker, that's where they have the opportunity for another policy mistake. So we hope they're patient and let it come down so that they can stay on that pace for maybe a few rate cuts this year. We're anywhere from 3 to 7, depending on the dot plot, to some of the most aggressive outlooks for rate cuts, but certainly rate cuts are on the way.
And I guess a policy mistake would be pushing us into a recession. How concerned are you about that?
Not very. Okay. Not very concerned. Our base case has been that we actually avoid a landing. We avoid a recession. They achieved a soft landing, and we re-accelerate from there. If we get a recession, we think it would be very mild. I mean, we are seeing growth slow. We'll see a lot slower growth in 24, but we certainly don't see a deep recession that was feared some time ago. If we get one at all, it'll be mild, but we think we could skate through without a recession at all.
All right. That would be what they call a soft landing, I guess. David Kudla, thanks so much for joining us. David Kudla is the founder, CEO, and CIO of Mainstay Capital Management. He's also the founder and sponsor of Engage, the world's largest student stock pitch competition and conference hosted at the University of Michigan. So I think that's very cool as well. Bitcoin, it is now off about 0.3%. So again, we had just under $46,000 per token here, 45,800. Intraday had reached a high of 49,000 there. So some movement in the crypto space. I'm looking at kind of my benchmark on for some of these new Bitcoin ETFs, the iShares Bitcoin Trust, ticker IBIT. It is up 20%, and about 24 million shares have traded so far. So a lot of volume going into this particular ETF. With our news in Washington, D.C., let's head down to Amy Morris.
All right, thank you, Paul. Former President Donald Trump is in court in New York today to attend closing arguments in the civil fraud trial against him. Now, he's not expected to speak out in court after the judge rejected a request because the former president wouldn't agree to the restrictions on what he could discuss, but he did talk with reporters on his way inside.
Because it is an unconstitutional witch hunt. It's election interference at the highest level. It's a disgrace. It's in coordination with the White House and Joe Biden because he can't win a campaign fairly.
Trump says he plans to have a news conference later today. Secretary of State Antony Blinken says no one wants to see war escalate in the Middle East. On the tarmac before departing Cairo, Egypt, Blinken addressed concerns of an escalation.
There are lots of danger points. We're trying to deal with each of them. Lebanon, where we want to make sure through diplomacy that we can create enough security and a strong sense of security. No one wants to see escalation there. Israel doesn't. Lebanon doesn't. I actually don't think Hezbollah does. So we're working on that.
And Secretary of State Antony Blinken says the best way to marginalize Iran is through a Palestinian state. The U.S. wants Ukraine to sharpen its plan for fighting as its conflict with Russia heads into its third year. National Security Advisor Jake Sullivan is expected to raise the issue with Vladimir Zelensky next week in Davos. More on that with Bloomberg's Bill Ferries.
The broad concern is that the U.S. would like to see Ukraine with a clear battle plan that can show some progress in the coming months.
Bloomberg's Bill Ferries reporting there. Harvard University was sued by Jewish students who claim the school has failed to punish campus anti-Semitism that soared after the Hamas attack on Israel and helped lead to the ouster of President Claudine Gay. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Lisa.
All right, Amy Morris, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio, and we're also streaming live on YouTube. In just moments, we're going to bring you a discussion with Bloomberg's Michael McKee with Loretta Mester, talk about all things Federal Reserve. That'll be coming up in just moments. Before then, we want to check in with Molly Smith. She is Bloomberg's economics reporter. Molly, we're going to hear with Michael McKee and Loretta Mester in just moments. We got the CPI print today. I'd love to get your take on it and how you think our Federal Reserve might interpret it.
Yeah, I mean, I don't know that it's necessarily a game changer in the broader picture of inflation has been trending down, even though we obviously didn't get the cleanest reading on this one today. But what really stood out for our group was that these sources of disinflation that we've been getting in recent months didn't continue in December, primarily on the goods side of the economy as well as energy. Those have been providing some really nice drags to the overall figures of inflation in recent months, and that just didn't happen in December. So provides maybe a little bit of question going forward of how many more or how much more improvement you can get on the supply side of the economy that's going to drive more goods disinflation, and as well services inflation still very strong. So the composition of that, not great for the Fed, but obviously they care more about the PCE inflation report, not this one. This is the CPI. So the strengths that we saw in some of the categories here today aren't going to register in the PCE report. So as long as that one keeps trending toward 2%, that's their goal, I think they'll be still pretty happy.
Yeah, and break down some of those sectors for us. I mean, which one stood out to you the most? I know shelter is huge for CPI. Which one stood out to you?
Yeah, I mean, it was more so on the good side today, even though shelter, as you mentioned, still pretty strong, and we've been waiting for that one really to weaken, and it just hasn't been happening yet. So shelter's still pretty firm, but on the good side, everybody was expecting a pretty notable drop in used car prices. That didn't happen. Same with apparel. So maybe there's just, still pointing to some consumer strength there, because you would have argued based on the promotional activity at the end of the year that those prices should have come down. So those were really the big ones that surprised, and as well as within services, car insurance was a really big one that rose.
20%, that's crazy.
Yeah, that was the biggest annual increase since 1976.
Not that I'm a car industry. I mean, what happened? Do we know? Is there anything underlying the data, or is it just kind of a quirk in the data?
No, I mean, I think that is legit. That I know in particular, I think the largest insurer in California had already, projected that both home and car insurance were going to go up notably this year, that those premiums would rise. So obviously not just a one-state story. I'm sure this is across the country, but I would have to look more closely into that.
Yeah, and one other thing is just rents. I thought rents in New York City were starting to come down, but then we had Bloomberg had a story and it's like, not so much. So the cost of housing is still an issue there for the inflation.
Yeah, I mean, that one is a really tricky one to parse out in the CPI because there are a few quirks in how it's calculated. It's really just more a lagging indicator is the thing that, we only get the changes reflected from real-time rents when you are renewing your lease or terminating it or switching to a new one. So that only happens maybe like a couple times a year. So it is a lagging indicator in the CPI.
See, when we talk about New York City real estate, another go-to person.
Oh, boy.
Are we okay?
Yeah, hopefully won't be renting for a lot longer.
Right.
So tennis and real estate.
Tennis and real estate. You're our go-to person for
I don't know
tennis
if
and
I
New York
would say
City real
tennis,
estate.
but
Yes,
I mean,
of course.
or real estate, sorry. Tennis, yes. I'm definitely the girl.
All right, so we're moving forward on closing on this major real estate transaction in the Upper East Side of New York?
Yes, details to come.
Okay.
Cannot be the only thing that I've signed a contract, but closing TBD.
Okay, all right. All right, so what do you expect to hear from Loretta Mester, the Federal Reserve Bank of Cleveland today?
Yeah, I mean, I don't know that she's going to necessarily, or no Fed official, of course, is going to come out and say that, like, this is, great inflation reading. Of course, they know that it's a bumpy path to come down. That's not, shocking. But I think, what I would hope to hear from her is if she has any more thoughts on what the
That's very interesting. The approval of these spot Bitcoin ETFs by the SEC seems to be a significant development for the cryptocurrency market. It will be interesting to see how this impacts the price of Bitcoin and other cryptocurrencies in the long term. Here are some additional thoughts I have on the news. The fact that the SEC approved 11 ETFs all at once suggests that there is a lot of pent-up demand from investors for these products. This could lead to a further increase in the price of Bitcoin in the short term. However, it is important to remember that the SEC also warned of the myriad risks involved in investing in cryptocurrencies. This is a valid point, as cryptocurrencies are a highly volatile asset class and there is a risk of losing money if you invest in them. It is therefore important for investors to do their own research before investing in any cryptocurrency, including Bitcoin. They should also be aware that the price of Bitcoin is likely to be very volatile in the future. Overall, I believe that the approval of these spot Bitcoin ETFs is a positive development for the cryptocurrency market. However, it is important to remember that cryptocurrencies are a risky investment and investors should do their own research before investing in them.
A little bit of a decrease in the core. What do you take away from it?
Well, Mike, first, thanks for having me. It doesn't really change my view of where we are. I think, if you think about where we start the year, the economy and monetary policy are both in a good place. Inflation today is in a much better place than a year ago, and we've really seen this discernible progress on the inflation. But the December CPI report shows that the job isn't done yet, and that we're on the FOMC, as you know, are committed to finish the job of getting inflation back to our 2% target. But the important thing to realize is that disinflation that's been happening has happened while the labor market conditions remain healthy. So that's given us an opportunity, I think, to really, look at where the economy is going, how it's going to evolve at the beginning of the year, and really assess, right, whether the economy is evolving as we expect it to. My own forecast is that we'll continue to see inflation move down this year. We won't get to our 2% goal this year, but we'll see continued progress. And we'll see continued progress in the product side of the market of getting things into better balance, and on the labor market, getting supply and demand into better balance there. So I think we're in a good spot to really assess conditions as they come in, and to really evaluate the balance of risks around both of parts of our mandate. And so I'm kind of, obviously we don't want to see the progress in inflation stall out, but I don't think this report suggests that's happening. It just suggests we have more work to do, and we're committed to do it.
Housing is one of the more interest-sensitive sectors, and yet shelter prices have gone up. Do you have a problem with housing, and are the delayed lags maybe going to hit it? What's happening there?
I mean, housing is complicated because of two things that have happened, obviously. Supply has been constrained. This was before the pandemic even. There was constrained supply of housing, and now the pandemic exacerbated that. At the same time, demand for housing changed during the pandemic as well, as people wanted to move or have a larger house. So the typical play of higher interest rates in the housing market has been affected by supply and demand conditions that are not typical. I do think we're going to need to see housing inflation continue to move down. We're going to need to see goods inflation continue to move down. We're going to need to see shelter, core shelter, housing continue to move down, inflation in that. All three of those components are going to need to see more progress. And there's research here at the Cleveland Fed that suggests you can't take one of those out. We're going to have to see that. And we'll likely need to see some adjustment in wages, although we have seen wage growth come down again to be much more in line with a 2% inflation.
There are some people who look at the wage numbers that we saw in the employment numbers last Friday and the CPI today in terms of real earnings, and the Atlanta Fed wage tracker, 5.7%. What are the chances that wages are going to push inflation back up again?
Well, you talk to district contacts and wage setters, and what they do say is there's been discernible, the labor market they would characterize as still tight, but it's not nearly as tight as it was before. There's still, jobs that demand higher wages, but the rate of increase of wages has come down. So again, we see the adjustment coming. If you look at a lot of different indicators in the labor market, what you see is that supply and demand are coming into better balance. Part of that supply, the labor force participation rate has gone up. People are coming back into the labor market, which is great. I think that's a really good development. And that's helped us in a number of ways because we've been able to do the disinflation at the same time labor market conditions remain healthy. And that's made us not have to face a hard trade-off there. We knew what the job was. Job one was to get that inflation that was exorbitant under control. We have had good progress there, but we just have more work to do there. But this year is going to be one about really looking at the balance now between both parts of our mandate. And so we're going to be focused on, and I certainly will be focused on making sure that we continue to get inflation on a sustainable and timely path back to 2%. While we can maintain healthy labor market conditions.
You mentioned district contacts. I'm wondering what they're telling you about their pricing power now, whether they intend to keep trying to get some additional price margin as we go along, or whether they have tapped out on price increases because customers are pushing back.
So we hear mix, as you would expect, right? So we definitely have had our contacts tell us that pricing pressures have eased, and from their side, in terms of their input prices, they're come down, but also their ability to pass on past increases has been, it's harder now, right? Customers are pushing back, not uniformly. So some firms have been able to maintain pricing power, but there's fewer firms that say, we're not getting pushback. They have to sort of work to get those price increases in. But at the same time, they've been able to maintain their margins because you've seen goods prices and input prices come down. And so, wages haven't come down that much, but in terms of other input costs, they have come down. So firms have been able to maintain their margins.
We're getting mixed pictures as well from indicators like initial jobless claims, which have been flat on a seasonally adjusted basis, but on a non-seasonally adjusted basis have spiked in the last few weeks. I'm wondering what your business contacts in the district are telling you about their plans for their labor force. Are they hiring? Are they status quo? Or are they beginning to think they might have to let some people go?
So we're not hearing much at all about letting people go. I mean, you do hear from bankers that, in areas where they're not making a lot of loans like mortgages, they've already reduced staff there. But there isn't the kind of staff reductions that one would expect to see if the economy was slowing materially. A lot of our firms are still looking for workers. They're still looking for workers, especially with hard to find skills. But they do say there's more applications. and that fewer of their staff were quitting to go look for another job. So the conditions are still healthy. They still have plans to hire in areas where they need workers, and they don't really have plans to lay off any workers at this point. Their order books still look pretty decent. One thing that did happen is because it was so hard to find workers and all the effort that went into, we do still continue to hear from firms that say, we're going to do what we have to do to keep our workers on staff because it's just so costly to the firm if we lose workers and then we need to go back into the market to hold back. So that's a good thing in the labor market in terms of keeping people attached to the labor market. And that's why I have, in my own, baseline forecast, I have the unemployment rate, which is extremely low right now, ticking up a little bit, but not really moving up that appreciably. And that's what I mean by we can get inflation down by continuing to keep some restrictiveness in our monetary policy, but we can also have the labor market remain healthy as we do that.
Janet Yellen, you know her, and she knows a little something about monetary policy, said last week that the economy has achieved essentially a soft landing. Would you agree or would you push back?
I think we're aiming to achieve a soft landing, and I think the incoming information that we've seen and how the economy has evolved has been consistent with that. But when you look out, there are some risks around the forecast. And of course, my forecast is basically a soft landing. And so you wouldn't want to say, okay, job done, we're on a good path to a soft landing. It's basically made it. We just have to keep attuned to the fact that, we need to calibrate our monetary policy so that we are achieving the soft landing, and we have to be attuned to risks around that and risks to both sides of our mandate. I mean, in some sense, last year, it was the inflation part of the mandate had to have our focus. Now, as the economy has come into better balance, right, the risks have become more in balance as well in terms of both sides of our mandate. And I think that's the job this year, is to make sure that we're calibrating our policy to maintain healthy labor markets, even as we continue the process to get inflation back to 2%.
Okay, if you're calibrating your policy, how do you calibrate it? Market thinks that May is the most likely month, but there's still a very good chance that you might cut rates in March. Where are you?
Well, I mean, it's hard to predict the future, as you know, and it's really going to be dependent on how the economy evolves. I think March is probably too early in my estimation for a rate decline, because I think we need to see some more evidence. I think the December CPI report just shows there's more work to do, and that work is going to take restrictive monetary policy. But I do think that as we see continuing disinflation, and we could get more evidence that is convincing that inflation is on a sustainable downward path to 2%, then I think, we'll have that conversation about, okay, is it time now when we look at inflation, but also importantly, inflation expectations, right? Is it time now to move the inflation, or move our Fed funds rate when monetary policies start that process of moving it back to a neutral rate? And what I would say is, I view sort of the soft landing scenario, right, as being the most likely, but I do think there's risks around it, and we have to be attuned to both sides of the mandate. So a reduction in the funds rate that is because we try to keep monetary policy well calibrated to what's happening on the inflation side of the mandate and employment side. That's different than having to cut the rate because we're heading into a recession. So, rate decreases that keep the real rate, not from rising. So when the inflation and inflation expectations begin to come down, right, if you didn't do anything to your funds rate, you'd actually be sort of, passively saying a tighter policy. That's the part of the evaluation that we're going to have coming up. But right now, the evaluation, I think, is, and the policy evaluation is, how long are we needing to keep interest rates and monetary policy at this restrictive stance? The next phase will be about, okay, is it now we've seen the conditions we need to start reducing the funds rate and reducing our funds rate back to a more neutral stance. I don't think we're there yet. I would like to see more evidence that the economy is progressing as we expect it to, as I expect it to, before we can do that.
Well, let me ask you this. In terms of timing, Lori Logan says the Fed should begin to talk about tapering QT. John Williams says no. Which side would you be on?
Well, I can never say we shouldn't be talking about some issue, right? Because I think this is something that's going to be coming up. John, I think, rightly pointed out when he gave his remarks earlier this week that the balance sheet reduction is going as it's been planned. And we did announce when we announced that start of that in May, of the plan in May 2022, that at some point as the balance sheet and reserves come down, we're going to want to sort of reduce the pace of the reduction and then, normalize. But we still have a lot of reserves in the system, so we don't have to do that imminently at all. I think there's time, and I'm sure this year will be when we start having the conversations of what that plan would look like. And as we also committed to is we'll make sure that market participants and the public know what the plan is well before we implement it.
Well, we can certainly help you with that. We want to welcome you back quite often between now and the end of June when you leave the Fed. Thank you very much to Loretta Mester, the president of the Federal Reserve Bank of Cleveland. Now,
all right, that was Michael McKee and Alex Steele speaking with Loretta Mester, the Federal Reserve Bank of Cleveland president there, getting the sense of kind of how this Federal Reserve views the inflation data we got today and how it views its policy here. And I guess the markets are clearly expecting some easing of rates in 2024. I guess the question is, of course, when. Stuart Paul joins us. He's Bloomberg Economics and a crazy heliskier we're learning here today who survived a trip out west. Stuart, talk to us about kind of how you guys in Bloomberg Economics are looking at the inflation picture. We got some CPI data today as another data point.
So yes, we did get CPI today. We saw an upside surprise in the headline, and core came in line with expectations at 30 basis points month over month for both the core and the headline. Most surprising in the data today was an upside surprise in auto prices, contributing about 2.5 basis points to headline CPI growth. The reason why it's so surprising, and to Loretta Mester's point about monetary policy needing to remain restrictive, is that auto prices are some of the most interest-sensitive spending items in the CPI basket. Housing would be another, but it acts with a lag. When you have monetary policy in a restrictive stance, you would expect to see auto prices coming off, but to have auto prices just contributing further and further to inflation, it suggests that monetary policy makers are going to need to keep their foot on the brakes. Paul, to your point, the question is for just how long? Well, looking at other data, looking at the labor market, for example, there are pretty wide cracks under the surface of the labor market that's going to warrant a monetary policy pivot. And we think that pivot is going to take place in late Q1, probably at the March meeting. So if we start seeing rate cuts, the question would then be just how much further could something like auto prices go? Well, if auto prices do start rising, it would only be because again, monetary policy pivoted, and that would be because you see labor costs and the labor market deteriorating a bit, allowing the Fed to sort of get closer to that 2% average inflation target.
So how many cuts are we talking? I mean, did the market jump the gun in penciling in as many as 6 Fed rate cuts?
We think that there are going to be 5 rate cuts,
Okay.
basically every meeting for 4 meetings, and then switching to a quarterly pace of cuts thereafter. So 1 cut in Q4. But yeah, 6 is probably a bit much for this year. 125 basis points worth of cuts in 2024 seems about right to us. Again, we're on the more pessimistic side in terms of the growth outlook. We're on the more pessimistic side when we interpret the labor market data. So we're thinking about 125 basis points is appropriate.
What is the Bloomberg Economics kind of recession model or GDP model kind of showing you for this year?
We're seeing a shallow recession. The question is, when do those recession dynamics begin? Some of those recession dynamics, and you look at some of the labor market indicators that the Fed often looks at for considering when recession might have begun and in timing monetary policy, those cracks under the surface started widening in October, right? So do we think that we're in a recession right now? No, but the dynamics that typically precipitate a recession have been turning, they have been in motion, and so it is likely, we think, that we see a recession likely beginning in Q1, but depending on how shallow and how short, it's up to the NBER to make that final decision.
Stuart, I can see you're a smart guy. You got your PhD at George Mason University in economics. What were you doing jumping out of a helicopter to go skiing? Explain to me where you just came back from.
I will go anywhere to find the good snow.
The good snow. Where'd you go this time?
So this past week, I was in Alta and Snowbird in Utah. Nice. And look, I cannot recommend going heli-skiing and Snowbird enough. We're here in the Interactive Broker studio. Paul, I'm sitting about 6 feet away from you. We were in a helicopter flying through the Wasatch Mountain Range, landing on peaks around the canyon, no larger than this distance between you and me right now. It was absolutely crazy. And Paul, when you go out to Utah, you should go do it.
All right, I'm going out in March. This is what my day is going to look like. I might get up for first tracks, early tracks, that kind of thing. When I see the nice blue groomers, they can be steep, but I'm not doing any of that crazy bumps. I'm a gentleman here.
I stick with Mountain Creek in Jersey.
I'm going out there. Then I'll do 4 or 5 runs in the morning. I'll get a nice lunch, maybe a little glass of wine, 4 or 5 runs in the afternoon. Okay. And then I'm in the hot tub, and it's après ski, baby. That's how you do it. You do it something different.
I do something different. I'm on the lift at 8 a.m., no breaks, last on the mountain at 4 p.m.
And are you one of those knuckleheads that's got the app on your phone that says like how many miles of terrain you've skied and all that kind of stuff?
No.
Okay. You're just hard. You're old school.
Those are for we lose count. We're happy to lose count. That's what I'm up to.
That's good. 2 ways to attack the big mountains out in Utah and Colorado and all that good stuff. They're finally getting some great snow, which I can see because I follow all of them on social media, so they're bombarding me with who they're finally getting dumped on, which is good stuff. All right, Stuart, thanks so much for joining us. Stuart Paul, he's an economist. He's a crazy heli-skier. We appreciate getting a few minutes of his time. We're going to have more coming up. This is
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in, get the global macro view with Nancy Curtin, partner and global CIO, head of investment advisory at Alt-I, get her thoughts on these markets. And then Bloomberg Intelligence, Jody Laurie, she's a credit analyst with Bloomberg Intelligence. She covers autos, cruise lines, some really cool stuff. I want to ask her about Hertz EV reversal. They're selling like half of their EV fleet because there's not much demand from their customers for EVs. We'll talk about that. Plus, every time I get on, I talk to her about the cruise business and what's happening there, the economics I'm just fascinated with there. So we'll hit that as well. Jeffrey Cleveland, chief economist at Payden & Riegle, he's going to join us to give us his thoughts on this eco data we saw today, inflation coming in a little bit hotter. So we got lots to happen in this next hour. We're going to kick it all off like we do here at the 12 o'clock hour. Charlie Pelley.
Thank you very much, Paul Sweeney. And here's what's going on. Stocks lower across the board, right to the numbers. CPI Thursday, S&P down 39, down another 39 points, down 0.8%. S&P now at 47.44. The Dow down 243, drop there of 0.7%. And the Nasdaq Composite Index down 147, a drop there of 1%. 10-year 4.03% for the 2-year that's yielding 4.31%. 1%. Gold down $6.50 the ounce to 2017, drop there of 0.1%. Bitcoin, though, the big story today. All of the ETFs started running today. We've got Bitcoin higher now by 0.1%. Right now, 45,985 on Bitcoin. West Texas Intermediate up 2.6%, 73.22 for a barrel of WTI. Inflation accelerated in December as Americans paid more for housing and driving, challenging investor bets that the Fed will cut rates soon. CPI increased 3.4% in the year through December. Cleveland President Loretta Mester told us moments ago that March is probably too early for a rate cut.
It doesn't really change my view of where we are. I think, if you think about where we start the year, the economy and monetary policy are both in a good place. Inflation today is in a much better place than a year ago, and we've really seen this discernible progress on the inflation. But the December CPI report shows that the job isn't done yet.
And among Bitcoin ETFs, the Bitwise 10 Crypto Index fund up now by 0.3%. A dramatic reversal at Hertz on its commitment to EVs. And a regulatory filing, Hertz Global Holdings said it does plan to sell a third of its U.S. electric vehicle fleet and reinvest in gas-powered cars because of weak demand and high repair costs for its battery-powered options. Right now, Hertz shares, they're down 3.8%. Tesla is tumbling by 3.2%. Recapping stocks lower across the board with the S&P down 36, drop there of 0.8%. Bitcoin up by 0.3%, 46,064 on Bitcoin. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thanks so much. We appreciate that. As always, Lisa Mateo, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Global Radio, and that's where you will find us. As Charlie just reporting, we have a modest sell-off here in the marketplace today. Let's see where the action is under the hood with some individual names. We do that with Norma Linda. She joins us. She covers all the equities and all the markets for Bloomberg News. What are you looking at?
So we're seeing red across the screen right now. We have all sectors in the red apart from energy. That's the only sector that we have in the green right now. This is all coming after that CPI report that came in a little bit stronger than expected. And of course, Loretta Mester just said that the report does show that the job is not done yet. We may not get rate cuts as early as March. Looking at individual stocks, taking a look at Paramount Global, that's ticker PARA. Those shares are falling for their biggest drop and lowest intraday level since November. That's down as much as 6.8%. Paramount Global is the biggest laggard in the S&P 500 right now by percentage after Redburn cut the stock along with Warner Brothers Discovery to neutral, saying that linear advertising is at a negative tipping point and consensus expectations are failing to fully reflect the impact across the media landscape.
It's interesting because this is a stock, Paramount, Viacom. Think about it for the old folks like me. Viacom was the name there. It's probably widely reported or speculated that it might be taken out in some consolidation of the media industry. So this analyst here going on a little bit of a limb, downgrading the stock on fundamentals, which is fine. But you always know you might have some potential buyer out there that's going to come in and buy this thing or parts of it and shoot the stock up. So we'll have to see how that plays out.
Right, definitely. I mean, obviously the big story today has been crypto-linked stocks. So they are reversing earlier gains after the SEC's landmark decision to approve ETFs that directly invest in Bitcoin. Coinbase is now down as much as 7.4% today in trading. I'm keeping an eye on some of its peers, Robinhood as well. We had Citigroup's Christopher Allen say that Coinbase has been rallying on better crypto activity, but the revenue contribution is not material enough to warrant such a response.
All right, I'm looking at the underlying spot Bitcoin ETFs. We've got iShares, Bitcoin Trust, IBIT, that's up 22% here. Again, 26 million shares of volume, $650 million being traded here. And the Grayscale Bitcoin Trust, some people think that people may be selling that and maybe buying some of the other ones. That's pretty much flat on the day, but again, a lot of volume, 32 million shares there. So that's the underlying Bitcoin ETFs are in fact trading today.
Right, and I mean, it's interesting looking at the volatility, especially with these stocks being up in the green when I spoke to you about 2 hours ago, and now they're dipping back into the red. So definitely a sector to watch. But quickly wanted to move to Lucid, as we were talking about EVs earlier. The electric vehicle startup Lucid is falling as much as 7.6% for its lowest level on record, after the company's fourth quarter delivery beat was overshadowed by broader signals about troubles in the EV industry. Obviously, we spoke earlier about how Hertz shares are also falling after that rental car company made a strategic decision to sell about 1/3 of its global EV fleet, and that's about 20,000 vehicles from its U.S. fleet. So some context, Lucid is based out of Newark, California, and specifically manufactures luxury EVs.
Yeah, that Hertz news, I did not see that coming at all.
I don't think anyone did.
No, and it just puts a real exclamation point, if you will, on the story that's been building really over the last couple of months, that maybe that the end market demand for EVs isn't as strong as maybe Detroit thought it was, and as maybe some of the market thought it was. So
we just had Volkswagen yesterday talking about that, live, and they were going strong. They were behind it.
Yeah, so it's I think what Volkswagen was saying yesterday is hey, this is a long-term global move here. It's happening, and we're gonna have some fits and starts, and maybe this is one of them. So one of it's just simply the price. I mean, you got to bring the prices of these things down.
Definitely.
And that's kind of the big thing. So maybe some of the early adopters, Matt Miller made the point, the early adopters, the tech people, the EV people, they've already kind of bought their Teslas or whatever else they're going to buy. Now you got to get the regular people.
You got to get us on board.
You got to get us on board.
And even with that tax credit, is it still is it still worth it sometimes?
Exactly. All right, Nora, thanks so much for that report. Nora Melinda covering all the markets for us here for Bloomberg News. Let's get right to it. Nancy Curtin joins us right now. She's a partner, and she is, I just lost all my notes there. There we go. She's a partner at Alt-I. Hey, Nancy, give us your thoughts on these markets. I just kind of want to get, we had such a strong move in the markets in that fourth quarter of last year. I think that took a lot of people by surprise here. What did you make of that move, given the economic backdrop, the Fed backdrop? What did you make of that move in risk assets last year?
Look, first of all, I would say we were well positioned. We were slightly overweight equities. We had added in June to mid-cap. That wasn't the best performer. S&P 500 really was the Mag 7 that drove the lion's share of gains last year. But we did believe that the U.S. would be able to pull off a soft landing, that ever-elusive soft landing. That's still what we think will happen. So we were positioned for that. We had a nice run there with equities. Even mid-cap, went up 19%. From its lows in October. So a very pleasing end to the year. But we also made good money in credit as well, that would have had much less risk than equity. So overall, a very, very pleasing year for our clients. But we were well positioned, therefore, for the rally coming into the end of the year. So that was good news.
Yeah. So Nancy, what risk do you see in the markets?
So look, we entered 2023, everyone pessimistic and worried about the outcome and positioning, super cautious. We're now in what I call, extreme greed territory. In other words, sentiment has gotten very, very positive. Most of the market commentators are talking about a soft landing, except for that, so our view is, and this is really near term, we invest long term for our clients, but you asked about some of the risks, and that is after a 12% gain, trees don't grow into the sky. We need a pullback or a consolidation. Having said that, positioning is not really that overextended. Yes, people have increased weights, but remember, let's not forget about that 5.8 trillion sitting in cash. That's going to have to find a home at some point when the Fed cuts rates, which we think will happen, kind of May, June this year. So, risk near term, a consolidation healthy, sentiment a bit stretched. Don't think the Fed's going to cut rates, in the first quarter. Maybe the inflation number today is some validation of that, but still a constructive outlook for 2024.
We're speaking with Nancy Curtin. She's a partner, global CIO, and head of investment advisory at Tiedemann Global. Nancy, one of the things I want to ask you about is just kind of, I come back, I'm an old equity research analyst. I think earnings matter. I look at the S&P 500 this year, the earnings estimates out there looking for 11 or 12% earnings growth. Does that seem okay to you? Do you think there's some earnings risk in this market as we look forward throughout this year?
So let's just put it in context. Like, we think the Fed will cut rates. We think the ECB and the UK will cut rates. We think China, pretty torrid time last year, will provide some fiscal or monetary stimulus, not crazy stuff, not bazooka. But what does that mean? It means the global economy will grow more in 2024 than it did last year. So we think the combination of an economic recovery, maybe even a global synchronized recovery, lower inflation, that's lower input costs, lower interest rates, that's lower borrowing costs. M&A, look at what's going on in the energy sector, the healthcare sector, a huge amount of M&A kicking off this year. And you put that in context with technological innovation, productivity, improvements, efficiency. So yes, we do think towards the back end of the year that the earnings recession that we had last year is finished, and we can get to that kind of 10 to 12% earnings growth that's expected this year.
And Nancy, one of the things you say is private markets. That's a key to drive returns. Why is that?
So there's kind of illiquidity premium. In other words, private markets, I think people view as riskier. They're not necessarily riskier, they're just less liquid. And I'll give you two examples of where we're investing in private markets. One is in private credit. As you know, high yield did, 11.5% last year. But in high yield, you're kind of way down in the credit spectrum. So we did private credit, semi-liquid, so you're not giving up a lot of illiquidity. The manager that we selected was up about 15%. But the important thing, it was senior secured, high up in the capital structure, very profitable companies. So we think we've got a very nice return in credit for less risk than what high yield was able to do. So these are the kinds of things that you can do in the private markets. We think infrastructure, for example, is another interesting area where we might be able to get kind of in that low double-digit returns. And then finally, private equity is a way to play some of these long-term secular themes around decarbonization, energy transition, of course, and the evolving business models with Gen AI. So we like to have this broad-based diversification, customized to individual client circumstance and need, a comfort level of illiquidity, but we're finding some very, very nice returns.
Hey, Nancy, I'm glad you brought up the private credit business. I've been in this business a long time, and I think the private credit, the growth in private credit has just been extraordinary. One of the most extraordinary things I've seen in financial markets over the last 30 some odd years. And why not? It makes sense. And if the banks are pulling back, if there's institutional capital out there that's willing to be lent, then it seems like a good opportunity. Some people are concerned about the lack of, I guess, regulatory oversight for this growing pool of capital. Do you share in any of those concerns, or how do you guys get comfortable with that?
Yeah, it's a risk. And I did get uncomfortable as I saw, every day a new credit fund being launched, right? That is an issue. The particular manager that we selected had a portfolio already in place, so I wasn't taking blind risks, so to speak. Okay, you're going to find some credits out there that will give me 10%. I don't know about that. So we did like the construct of the portfolio. It does concern me, but I think there's also a market share shift here, right? Maybe the overall credit in the economy is the same. It's just banks have less. And alternative credit providers have more. And as long as you've done your homework around underwriting standards, hey, they may be better actually than banks at some of these kind of credit lending opportunities. So, remains to be seen. I did get worried last year at the launch of credit funds, but we really like the manager that we chose, and I think that came through in the numbers.
Nancy, I want to touch on Bitcoin. We had 11 ETFs out there. I got to ask you about this. How are you advising your clients?
So first of all, we don't own Bitcoin, and just because there's an ETF, we're not suddenly going to rush in. But I want to say a couple of things about Bitcoin. Number one, what happened today makes Bitcoin accessible in a way that didn't happen before, right? A, it's in a regulated structure. B, the fees are not crazy, 20 basis points. You've got competition that provides liquidity, and you've got much less complex custody arrangements. So this is a big step forward, I would say, for the Bitcoin industry. But I want to step back and say, what are the use cases of Bitcoin? Let's not look at the here and now and today. And I think there is something happening here. We're doing more research on it, which is what's the convergence between Bitcoin and Gen AI? And I just throw out something to think about, right? Bitcoin, in essence, is an internet currency. It allows you actually to pay for things in fractional shares, right? Micropayments. So think about a world in which 4.2 billion, mobile users around the world help train large language models and get paid for that in Bitcoin. Or think about a world in which excess GPU processing capacity, lots of idle capacity, you get paid for that in Bitcoin. So I think it is important to think beyond current Bitcoin to what some of the use cases are, and that could be quite powerful. We're doing a lot of research in that area.
All right, Nancy, thank you so much for joining us. We always we always appreciate getting some of your time. Nancy Curtin, she's a partner, global CIO, and head of investment advisory. The firm's name is Alt-I Tiedemann Global, and we talked about a lot of stuff going across equities, fixed income, private, public, and talking about some of the Bitcoin and the crypto out there. It's a big day. S&P 500 off 0.7%. NASDAQ off 0.8%. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Denise Pellegrini.
Yeah, we're looking at those breaking headlines from Boeing, Paul. U.S. aviation regulators have opened a formal investigation of Boeing that follows, of course, last week's accident everybody's talking about on one of its passenger planes. The FAA announcing the decision, saying the plane maker's manufacturing practices need to comply with the highest safety standards they're legally accountable to meet. And the investigation, of course, a result of that mid-air blowout of the so-called door plug on that 737 MAX 9 jet operated by Alaska Airlines. We have a major deal in the energy industry to report as well. Chesapeake Energy agreeing to acquire rival Southwestern Energy for about $7.4 billion. More on that deal from Bloomberg's Charlie Pellet.
Denise, this is an all-stock deal, and it will create one of the largest American natural gas producers. Oklahoma-based Chesapeake is paying $6.69 a share, and the takeover of Texas-based Southwestern is expected to close next quarter following needed regulatory approvals. The acquisition expands Chesapeake's holdings in two key drilling regions, the Marcellus Basin in Appalachia and Haynesville Basin in Louisiana and East Texas. The deal also positions Chesapeake to compete better against its big domestic rival, EQT. Charlie Pellet, Bloomberg Radio.
All right, thank you, Charlie. And we've got a lot of angry football fans out there. NBC Universal is where they're directing their anger because the Miami Dolphins and Kansas City Chiefs game will not be broadcast outside those two markets unless you've got Peacock. That's got a lot of people upset.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. Stocks lower across the board. Wall Street looking at a volatile session. Stocks down, bonds whipsawing after hotter than anticipated inflation data tempered bets on a Federal Reserve cut in March. Bitcoin paired gains after surging past 49,000 for the first time since December of 2021. Trading commencing for the first American ETFs that invest directly in the biggest cryptocurrency. Dave Kudla is Chief Investment Strategist at Mainstay Capital, and he was a guest this morning right here on Bloomberg Markets.
You know, this really is a monumental step in the history of crypto. The spot ETFs have been denied by the SEC for nearly a decade, and now they're finally here, 11 of them.
Bitcoin right now up 0.2%, 46,024 on Bitcoin. S&P lower by 36, a decline there of 0.8%. Dow Industrials down 225, a decline of 0.6%. And we have got right now the Nasdaq Composite Index down 132, down 0.9%. 10-year yield 4.03% with a 2-year 4.32%. Gold down $8 the ounce, down 0.4%, while West Texas Intermediate crude is up 1.8%, 72.62 a barrel. Again, recapping, S&P lower by 34, drop there of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Lisa Mateo and Paul Sweeney, we're live here in the Bloomberg Interactive Broker Studio in New York City. We're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. Lisa, I don't know if you know this about me, but I generally don't care for credit analysts.
No?
Yeah, they're kind of glass half empty people. They think they're not going to get paid back. They always, like, I'm an equity analyst, so I'm very optimistic, and I think the stock's always going up and that kind of thing. But I make a big exception to that with our next guest, Jody Lurie. She's a credit analyst with Bloomberg Intelligence. She writes great research, good stuff, cool sectors she covers, and we're glad to get a few minutes of her time. Hey, Jody, Hertz. I did not see this coming. They say they're going to sell 20,000 EVs in a shift back to gas-powered cars. What's going on there? What's it mean for the credit?
I'm so glad that you like me as an exception to credit analysts. So yeah, Hertz is a name. Speaking of like, dislike, I feel like Hertz is a name that people either love or love to hate. And so it really just depends on which side of the coin you're on. That said, it's sort of an interesting scenario. So you have a relatively new CEO who came in, they take a big stance of, we're going to buy a ton of electric vehicles to outfit our fleet. We're going to invest in charging stations. We're going to make, you know, the rental car system work for EV. And, you know, they had very aggressive sort of plans with that and hummed along. And then third quarter happened and they said, well, actually, the damage and collision related to EV isn't as efficient as your traditional internal combustion engine cars. And so now they're backpedaling and they're saying, all right, we're going to sell off a third of our fleet, a global fleet. They didn't necessarily say from where, but we're going to sell it off over the next year. And we are going to take that money and put a portion of it into internal combustion engines. So it is a little bit of a backtrack, kind of an interesting scenario, to say the least. Not necessarily something that gives as much confidence from a bond perspective.
Now, they're talking about because of elevated costs. That's a reading. But dig into some of those costs. And what are we talking about?
Sure. So they talked a little bit about it on the third quarter call, and then they mentioned it a little bit in their press release today, that the damage and collision is a little bit higher than they expected. And so it's eating into EBITDA and cash flows. And so to benefit from the cash flow generation that they're seeing, because guess what, used car prices are still in general relatively high as compared to what they were a few years ago. They aren't getting that same value when it comes to EV, right? And I think part of that speaks to the fact that the EV market is so much younger. We don't really know how to model out depreciation the same way that we do for cars that have been around for 50, 60 years. And so I think that's really what it comes down to, is that they have this element of growing pains as a result of the fact that it's still a relatively new industry. They took a bold stance related to it. And something that we like to highlight, both Hertz and Avis have been doing this over the past few years, more a function of their counterparties than necessarily them, but they've taken on more what you call risk vehicles as opposed to program vehicles. What risk vehicles are is the companies go and buy vehicles and take the risk of selling them in the aftermarket, as compared to program vehicles where they work with a GM, a Ford, you name it. They buy a certain amount of vehicles and then they have a commitment to basically put those vehicles back at a declared price. And so you don't have that put element as much for their fleet as they used to have. We've seen that sort of erode over time for both companies.
So what's it mean for the credit here? I mean, I'm looking at the FA function. Quite frankly, the data's a little wacky. I'm not sure. Kind of give us a sense of where the leverage is, and kind of what the forecast is. What do the credit folks think about Hertz credit?
Sure. So leverage is actually relatively low if you look at it as a company leverage or a corporate leverage standpoint. You have to, when you look at these companies, it's sort of complicated because they have their vehicles, which are financed with asset-backed securities, right? And then you have the corporate leverage, which is financing other operations and other elements of the business. And so Hertz's leverage is relatively low, much lower than it was historically. It's below 2 times, but it has been creeping up each quarter. And so, they come out of bankruptcy, they wipe the slate clean, they have a nice balance sheet, and they tap the debt markets. They started to give back to shareholders, and they did all this all the while that the used car market was particularly good and they had all these tremendous tailwinds. Now, used car prices have been going down, not to levels what they were in 2020 or earlier, but they have been going down. And those tailwinds that they benefited from in 2022, where they had record EBITDA levels, it's sort of eroding. And so we don't necessarily see top line activity. So the revenue element, the consumer piece of rental cars being negative, we actually see that as a relatively big tailwind this year, particularly as there's more business travel. At the same time, it's these sort of functions related to outfitting your fleet, getting rid of your fleet, rotating your fleet. That's always the piece that can bring some troubles.
Now, I want to take this to Paul, you're a travel guy and
Sure.
you're a jet setter. So I want to take this to the leisure outlook for travel. Have you ever done a cruise, Paul?
No, I have not.
Okay. But apparently the rise in leisure activities is helping the cruise market. Is that correct?
That is very correct. That is spot on. So, people like to joke rising tides lift all boats. But here, I would say it's true. The cruise lines are the names that I think there were a lot of people who sort of wrote them off for dead a few years ago. They've been this tremendous turnaround story, repaying their debt load, bringing, improving their balance sheets, focusing on credit quality and, ratings improvements. And they've been saying all the right things. They've been trying to time the market as they can. Some have been a little bit more successful than others in terms of pricing. But that said, they're all committed to deleveraging into this year. And we're seeing that booking rates are also still pretty positive. Consumers are latching on to the narrative around cruises. And so I think there's still a lot of momentum around the cruise industry, at least going into this year.
Yeah, one of my clearest memories of the early days of the pandemic was the cruise companies rushing out to the corporate bond market, and because they knew probably better than anybody that their business was going to be shut down. They probably didn't know it would be shut down for this long, but they needed the cash just to survive. So just take, for example, I'm looking at Royal Caribbean. They had, at the end of 19, $11.7 billion of total debt. By the end of 2020, it was $20 billion of total debt. So almost double their debt load as they kind of loaded up. Where's the leverage of this cruise industry? Where is it now? Where are you guys in the credit space kind of think it should be?
Right. So where it should be is always, as a credit analyst, you say the lowest possible you can do while being a good level of investment grade. So, but that said, outside of that, I mean, if you look at a name like Royal Caribbean or like a Carnival. So Carnival, they had their peak debt level was about 36 billion. They've now brought it down to below 31 billion. And so that's a tremendous, sort of cut into their debt load. And so it's less of an issue related to refinancing their debt to push out the maturities, more so actually bringing down the debt load because what they have currently is not sustainable, even with their large fleet. That said, I think management is looking to get somewhere below 375 if I had to guess. The only reason why I say that is because that's where the raters have guided historically what they need to stay investment grade. Both Royal and Carnival have communicated that they want to be investment grade, Royal by 2025, Carnival by 2026. I think, we've modeled out all scenarios where they could make it there. They could take a little longer to get there. I think it's really dependent on a few things. Number one, the fact that the consumer still has an appetite to go on cruises, but more so, geopolitical risk, different sort of ways that there can be a monkey wrench in this whole process. And so provided they can still sort of maneuver these regional issues such as Russia, St. Petersburg was a big port, and then you had Tel Aviv, which was a big port in Haifa. And so they had to sort of design around those situations and are constantly adjusting. I mean, they adjust for weather all the time, but now they're adjusting for weather and geopolitical risk.
Jody, always a pleasure to speak with you. Jody Lurie, credit analyst of Bloomberg Intelligence. She follows the travel, the leisure, lodging, gaming, restaurants from the fixed income perspective. She knows those industries backwards and forwards, so we love chatting with her. And again, that news that kind of jumped out at a lot of people this morning was Hertz to sell 1/3 of their EV fleet in a shift back to gas-powered cars. Simply put, the demand from their customers just isn't there, so they need to adapt there. So very interesting. Right now, let's head down to Washington, D.C. We'll get world and national news with Nancy Lyons.
Thanks, Paul. The UN's International Court of Justice at The Hague has been hearing arguments today in a case filed by South Africa, accusing Israel of committing genocide against Palestinians in Gaza as its war against Hamas continues. The court's president, Joan Donoghue, opened the proceedings by detailing the concerns from South Africa.
South Africa asserts that the relevant acts are attributable to Israel, which has failed to prevent genocide and is committing genocide, and which has also violated and continues to violate other fundamental obligations under the Genocide Convention.
Israel, which rejects the allegations, will present its defense tomorrow. Secretary of State Antony Blinken, meanwhile, has wrapped up his latest Mideast tour. He did secure support from Arab and Muslim nations to begin planning for what happens after the war. Former President Trump is in a New York courtroom today for closing arguments in his civil fraud trial. Arriving ahead of the court proceedings, Trump called the case political interference.
We have a level of detail in our defense that nobody's ever had. This is a case that should have never been brought, and it was brought, and it's very unfair.
Trump, his adult sons, and business associates are all accused of inflating the value of real estate in order to get more favorable loans. The judge is not allowing Trump to speak during these closing arguments after the former president refused to respond when informed of the requirements for speaking. Major change is coming to the New England Patriots. The NFL team parted ways today with coach Bill Belichick. The 71-year-old was in the middle of a contract he signed in 2023 worth a reported $25 million a year. But since the departure of quarterback Tom Brady, the Patriots have struggled, missing the playoffs in 3 of the last 4 seasons. Belichick has given no indication that he plans to retire. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. CPI Thursday. We've got stocks trading lower. The Dow, the S&P, NASDAQ 100 index, and yes, Russell 2000 all in the red, all around trading desks. The prevailing view today is that the CPI was not great, but it didn't move the needle on expectations for the Fed's course. Right now, the S&P trading lower, down 32 points, drop there of 0.7%. Dow Industrials down 199, down 0.5%. NASDAQ down 122, drop there of 0.8%, while the NASDAQ 100 index, chock full of those big tech names, down 123, a drop there of 0.7%. 10-year yield right now 4.04% after the CPI report, with a 2-year yielding 4.32%. Gold down $9 the ounce, 2015 drop there of 0.5%. West Texas Intermediate crude up 1.4%. The big news though, the Bitcoin ETFs, they're up and running or scheduled to be up and running today. Bitcoin up now by 0.1%, 46,021 right now on Bitcoin. Well, as for the overall market outlook, Brooke May is managing partner at Evans May Wealth, and she was a guest this morning right here on Bloomberg Markets.
We have a 5,200 to 5,400 price target on the S&P for next year. Nice. And while 60 days ago that seemed pretty lofty, it's a lot more probable now. When we look at where that's going to come from, it's not necessarily multiple expansion as much as just earnings growth.
And again, she said 5,200 right now, 47.53 on the S&P. And by the way, you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. So again, recapping, U.S. stocks are trading lower, but among certainly the Bitcoin ETFs today, the Bitwise 10 Crypto Index Fund up by 0.6%. Again, recapping, S&P down 29, little change there, down by less than 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, we appreciate that. Thank you very much. Lisa Mateo and Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. All right, ECO Go for the economic calendar. We had that inflation print, as Charlie was just talking about. I mean, the headline print, 0.3% growth month to month. That was higher than the prior period, noticeably, and higher than the consensus of 0.2. So a little spooky there. But if you back and look at I think what the economists call the core, when you X out food and energy, kind of came right in line, 0.3%. That's even with last month, and right in line with the consensus. So, kind of depends on how you want to look at it. The stock market's taking it a little bit on the chin here. But let's talk to somebody who actually does this stuff for a living, Jeffrey Cleveland. He's a director and chief economist at Payden and Regal. So, Jeffrey, thanks so much for joining us here. When you dig into this inflation report, what did you see? And then what do you think the Fed's going to see?
Well, I think you got to look at 0.3 month to month, which is, I would say, a little bit above what would be consistent with the Fed's target. In the last year, core CPI is up, let's call it 4%, 3.94%. Big chunk of that coming from shelter, which is up just over 6% year on year. There's an interesting wedge that has opened up between this core CPI gauge and the measure that the Fed prefers, though. The Fed prefers that core PCE gauge, which we'll get later this month. And that's been pretty soft in the last 6 months. Monthly average rate of change in core PCE has been around 0.15. And the monthly average rate of change in the last 6 months in core CPI has been closer to 0.3. So a little bit of a divergence there. So it leaves the Fed, I think, in a little bit of a conundrum. Do you just emphasize core PCE, or do you acknowledge this gap that's opened up in core CPI?
So Jeffrey, what did you not like on that report that just came out?
Oh yeah, pre-COVID, core PCE and core CPI month to month rate of change very similar, right on top of each other pre-COVID. So the fact that core CPI is still printing 0.3, that tells me that inflation could settle in the 3 to 4% year-on-year rate range, just hover in that range. And for me, that's too high. I think it needs to get back closer to 2%. So that's what I didn't like. So it's not a worrisome inflation. I'm not an inflationista, but it does tell me. I think the bond market is wrong here. Again, I think we've had this conversation many times on this program. The bond market is looking for the Fed to start cutting rates soon and then cut rates like 6 times this year. And if you have 3 to 4% core CPI, that's probably not going to happen, in my view. So that's the biggest takeaway from this report for me.
Jeffrey, we have a school of thought that's represented by some guests that come on here that say inflation is, in fact, closer to 2%. If you look at real-time data, that this data that the Fed looks at is just too much in the rearview mirror. How do you think about that discussion?
Well, yeah, I get that all the time from my bond trader colleagues. They say, "Oh, you got to X this out, you got to X this out, and once you X all these things out, then you're fine." No, Paul, I'm a simple man. I look at core PCE. Yes, you have to acknowledge it's closer, more consistent with 2%. But I think you also have to look at core CPI, which is, like I said, more consistent with, let's say, 3 to 4%. I also like to look at median CPI. The Cleveland Fed puts that out. I like that because, that gets around the let's X this out, let's X that out. It looks at the median price change. So last month, that was up 0.4% month to month. And in the last year, it's up 5% year on year. So, Paul, for me, if I had to pick one, I would go with that. It tells me there's a bit more inflation than my bond trader friends want to believe. So I think there's a little bit more inflation than those 2% folks or the zero inflation folks.
So when you're taking all that into consideration, what's your take? I mean, as far as rate cuts, are you thinking March? Some are saying June. Where do you think it's going to start to happen, and how many cuts?
Yeah, I mean, all of that said, it's reasonable by mid-year. You could envision a core CPI year-over-year reading that gets down to 3% or maybe below. And importantly, we heard from Chair Powell last month that the Fed, doesn't need to stay at 5.5% on Fed funds if inflation moves below 3%. So I think by mid-year, you could get to a situation where we could entertain a reduction in the Fed funds rate. My only beef with the bond market is they anticipating rate cuts sooner, and they're anticipating quite a bit more rate cuts this year than I think it would be justified by the inflation trends that we're seeing.
Jeff, what's a data point or collection of data points that you look at that maybe the average person doesn't?
Well, I think that median CPI, it's a bit quirky. It comes out, with a lag. So, CPI comes out at 8:30 Eastern, right? And then some point during the morning, you get to look at the median CPI. I like that, and I've talked to clients about this over the years because they're uncomfortable with economists doing X food, X energy. So I think the median, just looking at that median price change is really good. It gives you a sense, I think, through various cycles, it's getting us a better read of underlying price pressures. So I would point to that. And that's, like I said, 0.4% increase for that index in the month of December. And it's up roughly 5% in the last 12 months. So I like that. I think we should look at that for the inflation story.
Now, as far as the Magnificent Seven, it's really dominated the stock market. Do you think people should pay, in 2024, should people pay more attention to the mid, small cap stocks? I mean, kind of looking at opportunities for the Davids instead of the Goliaths?
I think people should pay attention. I'm a bond market economist, so I'm completely biased. And what's moving equities? It's rates. So you should pay attention to what is going to move rates markets. That'll be your cue for equities. If you're a believer that inflation is going to cool off, the Fed's going to reduce rates, Fed funds rates comes down, and maybe 5-year treasuries, 10-year treasuries rally, then I think you should be bullish on equities. I mean, really across the board. But for me, it's really the equity market is being pushed around by what's happening in rates. So you got to have a rates view first. So this could be the bond market economist bias here, but that's how we approach things.
All right, Jeffrey, thanks so much for joining us. As always, Jeffrey Cleveland, he's a director and chief economist at Payden Regal, giving us his thoughts on this inflation print. Again, came a little bit higher than I think, just certainly on the headline, just a little bit higher than people were looking for. So maybe that might give the Fed some reason to maybe be a little bit, pause a little bit and maybe push those rate cuts to maybe further out in 2024. The S&P 500 in reaction to that data off 0.5%, NASDAQ off 0.6%. Also want to call out Bitcoin. It's a big day. It is up 0.7%, 46,275. This is Bloomberg. get some company news right now with Denise Pellegrini.
All right, thank you. And we're keeping an eye, Paul, on what's happening over at Boeing because the FAA now opening a formal investigation into what was behind that mid-air blowout of that so-called door plug on the 737 MAX 9 operated by Alaska Airlines on Friday. The FAA does say it is seeking to determine if Boeing failed to ensure product safety, and the safety regulators are also asking Boeing for evidence and a statement within 10 business days, and Boeing shares they are lower on these headlines. Sources say Morgan Stanley is close to agreeing to pay under $300 million to settle a trading probe. The bank expected to pay between $200 and $300 million. No criminal charges for the bank expected in this block trade probe, according to sources. Home builders have a little less curb appeal today. KB Home reporting a drop in average selling price last quarter from a year ago. More from Bloomberg's Tom Busby.
The Los Angeles-based home builder reporting a year-over-year decline in its average fourth quarter selling price and is also forecasting weaker housing revenue for this year. KB Homes also getting slammed by a downgrade from an analyst at Seaport Global Securities who warns of risk to margins. Analysts at Evercore, though, have a more positive view, citing impressive guidance across all important metrics this year. Evercore also says additional upside remains for KB Home if market conditions continue their recent trajectory. Tom Busby, Bloomberg Radio. All
right, thank you, Tom. And shares of KB Home, they are also trading lower this hour. And we have this headline now from the Wall Street Journal. Novartis backing away from its pursuit of cytokinetics. We'll be telling you more on what that means in just a few minutes.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, we have a modest sell-off, we'll call it here. The S&P off about 0.5%, NASDAQ just about the same. The Russell, the small cap stock, the Russell 2000 off 1.3%. Yields fairly steady. We got the 10-year Treasury now at 4.04%. WTI crude oil, it's up about 1.3%. Again, some more concern in the Mideast, $72.30. Bitcoin, it is up 0.8%. 46,300. It had been as high today intraday as 49,000 as we have the Bitcoin ETFs, the spot Bitcoin ETFs beginning trading today, 11 of them. So we're keeping an eye on those new securities. Right now, let's go down to Washington, D.C. We'll get world and national news with Nancy Lyons.
Thanks, Paul. Iran now admits that it captured an oil tanker off the coast of Oman, heightening tensions in the world's most important trade lane for global crude supply, according to Iran's semi-official Mehr news agency. Iran seized the St. Nicholas, quote, in retaliation for the theft of oil by the U.S. That ship was previously known as the Suez Rajan, which was involved in a high-profile American sanctions bust-up that ultimately led to the removal of 1 million barrels of Iranian oil. Well, President Biden wants 500,000 electric vehicle chargers across the country by 2030, and he's deploying billions to meet that goal. We get more from Bloomberg's Amy Morris.
The Biden administration is rolling out $623 million in competitive grants to states to help build out a nationwide EV charging network.
I've never done that.
The spending comes as the government faces criticism for a slow start on federally funded EV chargers breaking ground. Winning projects include EV charging stations at apartments in New Jersey, charging docks for e-bikes and e-scooters in Arizona, and hydrogen fueling stations for trucks in Texas. Electric vehicle sales grew by only 1.3% at the end of last year. In Washington, Amy Morris, Bloomberg Radio.
Hertz Global Holdings says it plans to sell a third of its U.S. electric vehicle fleet and reinvest in gas-powered cars due to weak demand and high repair costs for its battery-operated options. The rental giant, in a regulatory filing, says the sales of the 20,000 EVs began last month and will continue over the course of 2024. Harvard University is now facing a lawsuit from Jewish students who claim the school has failed to punish campus anti-Semitism that has soared after the Hamas attack on Israel. The suit says Harvard administrators failed to enforce policies that should protect Jewish students from anti-Semitic speech and conduct. The students cite a civil rights law that's been used to sue New York University, the University of Pennsylvania, as well as the University of California at Berkeley. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Paul and Lisa.
All right, Nancy Lyons, thank you so much for that. We appreciate it. Some news crossing the Bloomberg terminal right now. Cytokinetics sinks as much as 28%, extending an earlier drop after the Wall Street Journal reported that Novartis has backed away from its pursuit of the drug developer. Novartis, which had been pursuing the biotech for several months, backed away sometime in the past day or two, the Journal reported. So we'll have all the reporting on that. We'll follow up. Another story in the Bloomberg terminal, just talking about the L.A. mansion tax. The revenue there falls far short of projections. Amid backlash in a tough housing market, a new tax intended to fund affordable housing is bringing in far less money than expected. The tax known as Measure ULA was pitched in 2022 as a fix to Los Angeles' dire housing crisis. Passed by ballot measure with 58% of the votes in favor. The measure created a new land trust transfer fee on real estate transactions over $5 million and directed the proceeds to affordable housing projects, tenant protections, and homelessness prevention efforts. Researchers projected it could earn the city upwards of $900 million annually, money that could start bringing people off the streets. But since Measure ULA went into effect in April, it has only raised about $142 million, far off track of reaching that estimate. So we'll have to keep an eye on that. Looking at these markets here, S&P 500 off 0.5%, NASDAQ off a little bit more, 0.6%. Small cap Russell is off about 1.35%. So we're seeing a little bit bigger moves down on some of the small cap stocks. Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now, our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from DC's top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The debates are over. Now the final stretch to Iowa. Welcome to the fastest show in politics this day after the final Republican debate before the caucuses. Not to mention Chris Christie's decision to drop out of the race. Is that too little too late for Nikki Haley in New Hampshire? We'll get into it because Chris Christie thinks so. You heard the hot mic comments. We'll get the lay of the land on the Granite State ahead with Andy Smith, director of the University of New Hampshire Survey Center, out with polling this week that made a lot of news. Consumer prices up more than expected. We'll talk about the trajectory of inflation later this hour with Jared Bernstein, chair of the White House Council of Economic Advisors. And we'll have analysis, of course, from our signature panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour, so let's get rolling right now with a look at Wall Street. Charlie Pellet has an update on trading from New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. You've got the political debates, and I got the debate on Wall Street. How hot was that CPI report? What does it mean for March and the Federal Reserve? Stocks right now lower across the board. S&P down 27, a decline right now of 0.6%. We have got Dow Industrials down 146, decline there of 0.4. NASDAQ down 93, decline there of 0.6%. Russell 2000 index of small cap shares down 1.4%. 10-year now at 4.02% with a 2-year that's yielding 4.31%. Gold down $8.50 the ounce to 2016, a decline there of just about 0.4%. West Texas Intermediate crude up 1.2%, 72.20 a barrel on WTI. CPI Thursday, not just CPI Thursday, but also Bitcoin Thursday. A lot of those ETFs scheduled to be up and running. Bitcoin right now up 1%. Has been a volatile day for Bitcoin. 46,411 right now on Bitcoin. Consumer Price Index increased 3.4% in the year through December, the most in 3 months. Administration reaction to the CPI report from Heather Boucher, a member of the President's Council of Economic Advisors.
When you think about that annual number for headline inflation, 3.4%, that is less than half the pace that it was a year ago. So certainly that is the overall trend moving in the right direction. Over the past 3 months, the pace of inflation was 1.8%, lower than the prior 3 months. So although we did see an uptick in December, overall the trends had been moving in the right direction.
And coming up later this hour, right here on Sound On, we will have Jared Bernstein, chair of the Council of Economic Advisors. Dramatic reversal at Hertz today on its commitment to electric vehicles. In a regulatory filing, Hertz Global Holdings said it plans to sell a third of its U.S. electric vehicle fleet and reinvest in gasoline-powered cars. Hertz Global Holdings down 0.3%, down 3.4%, I should say, on Hertz. Tesla now lower by 2.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Right, Charlie, thank you. Welcome to the Thursday edition of Bloomberg Sound On. Little Friday, we're glad you're with us here as America recovers from the final Republican debate. And for that matter, Trump Town Hall before we get to Iowa. And we were watching, of course, so you didn't have to, and we'll be walking through some of the highlights and lowlights over the course of the hour here. The only thing hot, it seems, in Iowa or New Hampshire right now are the microphones. Just ask Chris Christie. You heard this as he prepared to make the big announcement that he was dropping out of the race. Not to be a spoiler, he was being honest on a mic wired up behind the scenes before he came out the podium. A lot of folks seem to have read this. Few seem to have heard it. Have you heard what Chris Christie said about Nikki Haley? Remember, the whole idea was here, he's got double digits in New Hampshire. He drops out. Those voters, 65% of them, according to the CNN UNH survey, may just jump on board Nikki Haley, and then we've got momentum in a real race. Except he doesn't actually believe that.
Yeah, I mean, look, she spent $68 million so far, just on TV. Spent $68 million so far, $59 million by DeSantis, and we spent 12. I mean, who's punching above their weight and who's getting a return on their investment? You know, and she's going to get smoked. And you and I both know it. She's not up to this.
She hasn't even.
She's going to get smoked. You and I both know it. She's not up to this. Did it matter what he said after that? That's where we start our conversation with Andrew Smith. I've been looking forward to this. And if you're a listener of this broadcast, you've heard Mr. Smith before. He is the director of the University of New Hampshire Survey Center and knows the landscape in New Hampshire as well as anyone. And as I mentioned, the CNN UNH poll that came out earlier this week made a lot of waves. And Andrew, it's great to see you. Welcome back to Bloomberg Radio. I wonder what the thought was. Great to have you. The thought in New Hampshire, as Chris Christie, apparently a darling of New Hampshire, decided to drop out of the race. Did he cancel out his message with the off-mic moment?
No, I don't think so. I think it's a one-day story. It's important to remember that Chris Christie is not beloved among New Hampshire Republicans. In fact, since we've been measuring favorability ratings and some other numbers, he has by far the lowest favorability rating of any of the Republicans running in the New Hampshire primary, including Asa Hutchinson. We see that 60% of likely Republican primary voters have an unfavorable opinion of Christie. And in a poll that we did back in November and earlier polls, we're seeing 50 to 60% of New Hampshire Republican primary voters say they wouldn't vote for Christie under any circumstances. So he had a very hard ceiling on his attempts to grow his support in New Hampshire, and it really wouldn't have mattered how much money he spent. He was pretty much capped just by being the person who's been attacking Trump for so long.
Well, so it sounds like he was just looking at his own numbers and came to grips with reality. Is that fair?
I think that's a fair assessment of it. He really has no chance in any of the other early primary states, certainly not in Iowa. He's been banking his entire campaign essentially on New Hampshire, and he hasn't really gotten much of anywhere. It's also important to remember that voters in New Hampshire, despite there being campaigns are going on, are just really making up their minds right now. Exit polls have shown historically that upwards of 40 to 45% make up their minds over the final weekend of the race, and upwards of 15 to 20% make up their mind on election day. So I think he's seen that he doesn't really have an avenue in New Hampshire because of that hard ceiling of unfavorability. He certainly doesn't have any capacity of doing well in Iowa or South Carolina, the next race, or even Michigan. So he had to do well in New Hampshire or get out. And I think he read the cards and said, it's better to get out before I lose more money in this game.
So is this advantage Nikki Haley? I referenced your poll from earlier as we consider second choices. 65% of Christie supporters said that they would turn to Nikki Haley if he was not on the ballot. Is that a number you expect to see turn over?
It's kind of hard to say because, again, there's a week and a half left and we'll see what happens in Iowa. If DeSantis stays in, if DeSantis drops out, how big or not Trump's margin is in Iowa. So there's still some things to happen between now and Election Day. But if you think overall about the Republican electorate, we've had a consistently 40% or so of people in New Hampshire that have been behind Trump. And we're seeing 80 to 90% of them say they definitely decided who they're going to support. So I think Trump's got his base there, but I don't think it's going to grow that much because people know who Trump is. They're not waiting for anything new to hear from Trump that's going to make them lean his way. So we have about 40% for Trump, about 60% who aren't necessarily for Trump. And those are the voters that all of the other Republican candidates were going after. Haley seems to have done, I think, the best job of threading the needle of not attacking Trump, and so as not to tick off the MAGA base, but also to let people know that she's the alternative to Trump. And I think that Christie dropping out, his supporters aren't necessarily big Haley supporters, but they know that they're not Trump supporters. And they're going for the person who's not Trump. And I think that right now is Haley, and that's why she's likely to pick up most of the support that Christie has.
Well, and that would be a pretty big deal if your poll has Donald Trump just single digits in the spread. She's within single digits of Trump. You add the Christie vote, he's at double digits. And we've got a real race here, Andrew.
I think so. I think that, again, it's important to remember voters in New Hampshire don't make up their minds until the end. They're really just starting to pay attention now. You've got that block of people that don't like Trump that are, and probably aren't that politically engaged, who are really starting to pay attention to this race. So she's peaking at the right time, and I think she could make it close. This has happened before. If you go back to 2008 with John McCain, who peaked at the very end of that race. Hillary Clinton coming back and peaking in New Hampshire in 2008 on the Democratic side as well. This is not an unusual sort of phenomenon. The flip side of that is Ron DeSantis a year ago was leading this race. He had 43% and Trump had 30%. He peaked way too early before the race really got engaged and before voters were paying attention.
You'll be glad to know Rick Davis, who's on our panel every day, will be following you and has some pretty interesting insights, having managed John McCain's campaign in New Hampshire. Andrew, remember the crying moment, the emotional moment that Hillary Clinton had? You're referring to her kind of last-minute turn to her benefit in New Hampshire. Does Nikki Haley, or by the way, we haven't even mentioned a guy named Ron DeSantis, do they need a moment like that? Because they're going to come flying to New Hampshire the minute the Iowa caucuses are over. And they'll have a week to make a difference, basically, to your point, with those late decision makers in New Hampshire. Does Nikki Haley need to have a human moment, have a catalyst like that that'll get people's attention?
I don't really think so. If you remember that 2008 cycle with Hillary Clinton and Barack Obama, there were already only two candidates. Obama had come off of a win in Iowa, and there were only 5 days between Iowa and New Hampshire. The things that happened with Clinton were that there was that debate on Saturday night where the moderator asked her why she was unlikable and how did that make her feel, and she said it hurt her feelings, and Barack Obama said snarkily, "Well, you're likable enough, Hillary." And then she had that humanizing crying moment there, and it really galvanized support from Democratic women to say, "Oh yeah, she is being picked on again. This is sexism again in the party. Let's go for Hillary here." I don't think we have that dynamic going on this time around. It's really Trump versus the non-Trump, and I think Iowa is going to make the decision for DeSantis as to whether he's in the race or not after Iowa, because his polling numbers here in New Hampshire are declining. He's now in 4th place in New Hampshire, even behind Vivek Ramaswamy, or he's in 5th place, excuse me. He's behind Vivek here. So he doesn't have much of an opportunity in New Hampshire, I think, to grow his support. It's been declining for a year. And if he doesn't make an extraordinary showing in Iowa, I think his campaign has to make the decision to pull the plug.
Wow. You do wonder in the next week how much of this field is going to clear out. Emerson is out with new numbers today as well, as we spend time with Andrew Smith at the University of New Hampshire. It looks in New Hampshire like this, in this poll at least, Trump 44, Haley 28, and then Christie 12. DeSantis is in single digits. How much noise is in these numbers? You've made the point several times, Andy, that people make this decision late in New Hampshire, and you've got the unpredictable nature of, 40% of voters being independent. How much stock do you put in any of these polls of the week or so out?
I've been doing polling in the New Hampshire primary for a long time, and historically polls have been wrong as often as they've been right, because voters make up their mind so late, because so many people tell us that they're going to vote, but they actually don't. Turnout is always the most difficult thing to estimate in any election, but especially in a primary election. New Hampshire, we have same-day registration, so anywhere between 10 and 15% of the electorate are people that aren't even registered, and those people are often missed by other polls who use lists of voters who've been previously registered to vote in the state. There are a number of other methodological issues that make polls quite different in the state. So I, as a pollster, I would tell anybody about primary polls, use them as a very fuzzy gauge of where the election is at any time.
I hope you're going to meet up with us when we're up there. We'll meet you in Manchester, right?
I'm looking forward to it.
Excellent. This is great. Andrew Smith, he's the director of the Survey Center, University of New Hampshire. A great conversation. Thank you for the insights, Andrew. Think about this conversation that day we go to vote in New Hampshire. We'll see how much has changed in just this limited period of time as we assemble our panel. Rick Davis, the aforementioned, alongside Jeannie Shanzano, Bloomberg Politics contributors. I'll start with you, Rick, since your name came up a little while ago. You've had a little bit of time to think about the impact of this Christie departure. What does it mean for Nikki Haley?
Yeah, I think it's exactly what Andrew said. The vast majority identify her as their second choice, who sit on Christie on the ballot yesterday. Remember, too, that's with Christie in the race, right? So 65% say, if something else changes, we'd be willing to go and sit on Haley's ballot. Now that he's out of the race, that number could go up. It's unlikely to go down because the consideration is that at the time he was still in the race. So it's all upside for her. And I think definitely adds to the notion of momentum, which is even more important than polling and money right now, because New Hampshire is a momentum state. And as he said, you want to peak, next week.
Mm-hmm. That's kind of leaving us scratching our heads when it comes to the polls, right? I mean, this idea of momentum is abstract enough, Jeannie, that it's very difficult to quantify. When I look at a UNH poll that shows Trump ahead by single digits today, an Emerson poll, he's ahead by, 16 points here. USA Today, Suffolk had him up by 20. Do any of them matter?
No, I think Andrew is right. And it's, I think people should listen to him when he says many voters in New Hampshire are just now starting to pay attention. The news today about a dropout, I bet you many people in New Hampshire are focused on Bill Belichick rather than Chris Christie, to be honest.
No, that's right.
And so, the reality is that while we watch this day in and day out, for voters, they are just starting to pay attention. And I think this thing can move. That said, to imagine that it moves 20, 30 points in, when you look at some of these polls that have Trump that much ahead, that's hard to imagine, but anything can happen. So I think a lot rides on what happens in Iowa and the momentum Haley can get out of there, if any, to move her into New Hampshire. I mean, that's really her path forward.
You heard the hot mic remarks at the beginning of our conversation here. Here's what he actually said on the microphone a few minutes later.
Because I want to promise you this. I am going to make sure that in no way do I enable Donald Trump to ever be president of the United States again. And that's more important than my own personal ambition.
Okay, that's great. But Rick, he says she's going to get smoked. Which one does he believe?
He's a politician. He doesn't believe anything. He does what the pollsters tell him to do. No, that's a very cynical view, but it's not too far off the mark.
Well, look,
he's a lifelong Paul. I mean, what he says in public and what he thinks in private, even off of a hot mic, you can't trust any of it. It's obviously not in his interest to have Donald Trump president again, because I have no doubt that if Donald Trump's president, he will find some way to go after legally Chris Christie. So it's in his personal self-interest, professional self-interest, to see somebody else win. If he's cynical enough to get out of the race one day and hope it helps her and say at the same time, she's a loser. Yeah, that's just who he is. There's a reason he's got so many negatives, I guess.
Well, I'll tell you what, Trump on Fox News last night says he's liking Chris Christie already a lot more. We'll walk you through the debate in the town hall next with Rick and Jeannie. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, Russell 2000, all in the red. Down day, CPI Thursday, and the S&P now lower by 18 points. Drop there of about 0.6%. NASDAQ lower by 52, down 0.1%. The NASDAQ 100 index down 43, drop there of 0.3%. Dow Industrials down 95, a decline of 0.3%. 10-year yield 4.02%, with a 2-year that's yielding 4.32%. Gold down $8.50 the ounce to 2016, drop there of 0.4%. West Texas Intermediate crude up 0.9%, 72.05 a barrel. It is also Bitcoin Thursday. A lot of those ETFs about to trade, if not trading already. We've got Bitcoin now up by 0.9%. Bitcoin 46,355 on Bitcoin. And among Bitcoin ETFs, the Grayscale Bitcoin Trust ETF right now up by about 0.9%. Bank earnings, next big event for Wall Street. Tomorrow morning, we'll be hearing from the likes of JP Morgan Chase, Citigroup, Wells Fargo, and Bank of America. Citigroup shares down today by 2.4%, and Wells Fargo, among the banks, lower now by just about 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We were watching, so you didn't have to, the split screen night. Did you see either of them, the final Republican debate or the Trump town hall? You know, he skipped them all, including last night, the last debate before Iowa, to go on Fox News this time and counter-programming the whole thing, which you might suggest was a pretty good strategy after what we saw last evening on the stage on CNN. Ron DeSantis, Nikki Haley, boy, not fans of each other, going for broke here, spending the first hour beating each other up, the second hour going after Donald Trump. And Nikki Haley did go there on the 2020 election, said it out loud.
That election, Trump lost it. Biden won that election. And the idea that he's gone and carried this out forever to the point that he's going to continue to say these things to scare the American people are wrong.
Let's reassemble our panel. Rick Davis and Jeannie Shanzano come along. Bloomberg Politics contributors. I'm sure you were both up late going through the highlights and the lowlights here. Why don't we start with the debate, then we can move to Donald Trump's escapade last evening. Jeannie, Nikki Haley had an important moment there. I don't know what the ratings look like or how many people may or may not have been influenced, but to actually share the stage with Ron DeSantis and go at it, that was probably the chippiest debate that we have seen yet in the cycle. Did it make any difference?
No, you know, the words that kept coming to my mind were really aggravating. I mean, they both did fine. All they did was fight with each other. I did the split screen thing, and you had Trump there basically on an infomercial, very subdued, very calm. And then you had those two going at each other. You know, you played that clip from Nikki Haley. She didn't really get to the criticism of the faraway frontrunner until the second half of the debate.
That's right.
And, you know, I don't know what you guys found, but like this idea, liar, liar, pants on fire, you know, DeSantisLies.com, anybody under the age of like, you know, I don't know, 50, I felt like it was like retro because nobody looks at websites like that anymore. That was like in 2008 when Obama was running and we were all applauding that they had a website for their campaign. You know, she didn't do anything really groundbreaking. She kept repeating that. And of course, Ron DeSantis was fine, but I don't think he made any headway. So I just thought the winner here was Donald Trump, as it has been throughout all of these debates.
Well, I'll ask you both about Trump's performance here. How about Ron DeSantis last night, Rick? It was interesting watching him go through the motions one-on-one. That's not something that we've had a chance to witness yet. Very rehearsed in a lot of cases, going for the money line, trying to get the applause line and so forth. He even fell into his remarks, apparently like kind of had a brainwave and thought he was debating Gavin Newsom at one point as he called her the governor of California. Listen to this back and forth.
In the state of Florida, we're ranked #1 for economy of all 50 states by CNBC, #1 for
Highest cost of
education.
living.
She was ranked number 50 in education when she was governor of
Highest
California.
insurance.
Well, I think that was actually from his prep from the Gavin Newsom debate on Fox. Rick, how did he do?
Yeah, look, I mean, it was really rehearsed, right? I mean, like,
Yeah.
I think the easiest night where the moderators, Jake Tapper, and they just stood back and let these guys go at it, and it was really all just talking points. I mean, I don't think I've ever heard a debate where the word liar was used in every single sentence, and it got a little exhausting. I mean, like, I kind of give tropes to Donald Trump because, like, at least he only had an hour town hall and you didn't have to suffer through another 60 minutes. I mean, like, 120 minutes of that stuff was more than any voter in any state will ever want to watch. So you're right. No telling who watched, how they were impacted by that. They didn't distinguish themselves poorly. They look like professional politicians, you know, beating each other up. I don't know how that helps either one of them in Iowa. And, you know, I'm not exactly sure how any of that helps Nikki Haley in New Hampshire, since that's her top focus. But the bottom line is I agree with Jeannie. You know, good night for Donald Trump.
So it was a tree that fell in the political woods on CNN, on Fox, and I'm assuming that a lot more Republicans saw that. Rick, to your point, that would be the viewing habit. It was an attempt at normalization, at least in my view. Lines like, I'm not going to have time for retribution, or this one on the dictator. Here's Trump.
I said, I'm going to be a dictator for one day. We're going to do two things. The border, we're going to make it so tight you can't get in unless you come in legally. And the other is energy. We're going to drill, baby, drill. After that, I'm not going to be a dictator. After that, I'm not going to be a dictator. So
that's what had been said.
So you weren't saying that if the press picks it up. So I said, I'm going to be a dictator for one day. They cut it. They go, I'm going to be a dictator. But they cut the rest of the sentence. No, I am not going to be a dictator. I'm going to manage like we did. We were so successful.
I am not going to be a dictator, Rick. Interesting here, as Donald Trump is apparently listening to his advisors.
Yeah, my guess is they pulled that, and it was not a pretty picture to voters, regardless of whether it's one day or, you know, every day of your presidency. American voters don't want a dictator at all. And so walking that back the way he did, I'm not exactly sure it was very convincing. First of all, he said, yeah, I'm definitely going to be a dictator for the first day. But then again, I'm not going to be a dictator. And he blames the media, which, by the way, to most Fox viewers, they don't consider Fox the media. They consider that the truth teller. And, you know, maybe that works for the crowd that was tuned in. But what a cakewalk for Donald Trump. I mean, you know, the people asking questions, each one started out with how great Donald Trump is. And by the way, I'm almost embarrassed I have to ask you a question. But here you go.
Well, you know what issue they did get into? Really interesting, Jeannie. This is a recurring theme this week. And it's a theme that started here at Bloomberg, I dare say, because the idea of being afraid to talk about entitlements has been a big concern here in Washington, you know, as we nibble around the edges of the budget. And our interview with Nikki Haley has been coming back again and again and again, and her stand on potentially raising the retirement age was referenced in both of those shows last night. It came up by Ron DeSantis in the debate, and Donald Trump brought it up in the Fox town hall. Let's listen to what he said.
DeSantis wants to cut Social Security and Medicare. Nikki Haley wants to cut Social Security and Medicare. Nikki Haley wanted to raise the age from 65 to 74, 75.
So where did that come from? That was from our interview with Nikki Haley on the 24th of August, to the point now where not only was Donald Trump ready for that line of attack last night, Rick and Jeannie, but it has apparently been put into an official ad, a Trump campaign ad that dropped this morning in New Hampshire. Here he is.
To secure retirement, Nikki Haley's plan ends that.
Social Security, Medicare, how would you manage the entitlements? Oh, boy.
We say the rules have changed.
Okay, so
We
that's
changed retirement
from our
age to
interview here on Bloomberg. Jeannie, does that mean that this, in fact, will be a major issue on the campaign trail? We're going to forget about it after the primaries?
Whose voice did we just hear on that ad? Was that you, Joe?
Yeah, I'm afraid.
I'm glad to hear that Trump and his team and everybody is listening. And it's a really important issue. And we heard it, to your point, in the town hall. We heard it in the debate. There was an extended discussion by DeSantis and Nikki Haley arguing back and forth about the very issue that you asked her about way back in August. And now they have her on tape. And, you know, economically, she is probably right to raise this. We do have an enormous problem, but everybody from DeSantis to Trump to Biden knows politically it's a loser. And so that's why they keep bringing it up. And of course, I think we will hear Joe Biden bring it up as well, if potentially, and it's a big if, you were to see somebody like Nikki Haley, you know, win the nomination. I mean, this is Rick Scott all over again, and they are just waiting on her for it.
Rick Scott all over again, Rick Davis, makes me think that this will not be an issue on the campaign trail when this goes to the general.
Yeah, you could just tell that Nikki Haley really tried to walk it back, conditioning the comments she made to you in that interview. My guess is we're going to see you in other campaign commercials besides just Donald Trump's before the end of this. But that's only if Nikki has any life after New Hampshire. So let's hold our breath and hope that Joe becomes an issue in the general election campaign.
God forbid. We don't want to become the story. Rick Davis and Jeannie Shanzano, great analysis. And they're going to be back with us after we tackle some issues with Jared Bernstein. I've been looking forward to this conversation as well because we've got important news today that I haven't even gotten around to yet, and that's consumer prices. You've been hearing about it throughout the day on Bloomberg. CPI day, with data showing inflation up more than expected. And we want the view from the White House, as always, and a chance to spend some time with Jared Bernstein, of course, chair of the White House Council of Economic Advisors. He's with us, as you can see on YouTube, from the White House North Lawn. Mr. Chairman, it's great to see you. Before I ask you about CPI, I wonder your thoughts on this conversation about the retirement age, about managing, potentially reforming entitlements, Social Security and Medicare. Is that something that the administration plans to weigh into?
I think we already have, in the sense that our budget continuously extends the solvency, Medicare, Social Security. These are critical programs that this president has not only pledged to protect, but has continuously provided proposals to do so. Now, look, I mean, one way to do this is to continue to pursue his fair taxation agenda. Not a dime of higher taxes under $400,000 AGI, but he has a robust agenda to enforce fair taxation. Part of that, by the way, is blocking people from millionaires and billionaires from evading taxes by making sure that the IRS is adequately funded. And what have the Republicans done? They've actively worked against that funding, tried to cut it, and in fact have extracted reductions there in some of these budget deals. That's basically a shadow tax cut for tax evaders, and that's not okay for wealthy tax evaders, and that's not okay with this president.
At some point, though, the retirement age is going to have to be lifted, Jared, isn't it? We're living longer. It's just a different world now.
Look, Social Security is such an essentially important program for our seniors, and it is one of the most effective, efficient programs we have. We're going to continue to protect it, to bolster it, and to make sure it is there for generations to come.
Maybe you'll end up in a Trump ad as well, Jared. I wonder. On this CPI day, how are you feeling? I'm looking at the headlines here. U.S. inflation accelerates, tempering case for Fed to cut rates. U.S. inflation picks up as goods prices halt months-long decline. I could keep going here. Is the moral of the story that this matter of inflation, the trajectory, does not in fact move in a straight line? Because we were talking about Goldilocks a couple of weeks ago. Jared, how do we decipher this one?
Yeah, that's exactly the right way to tee that up. Any month can bump one way or the other. And I know, Joe, I've emphasized this in our discussions. We at the Council of Economic Advisors make a point out of never overemphasizing a particular month. And in fact, by the way, if you look at the pace of a headline CPI inflation over the past 3 months, annualized, it's still 1.8%, and that's because the last 3 months were 0.1.3. So do the math, and you get that kind of underlying trend remains the friend of those who want to see inflation continue to come down. You mentioned goods prices. I think the unsnarling supply chains is very much baked in the cake, and we saw goods prices continue to be very low. So look, I mean, core inflation, very important to the Fed. Core inflation, of course, hit expectations. The 0.3 was expected, 0.3 was delivered. So we see that prices continuing to ease, job market remaining strong, and the combination of those two is delivering real wage gains, which we also learned about this morning. And that's a trend, not a blip. We've seen real wages up about 1% over the past year, and they've been rising now for a while. Very important to our working families.
Well, we've talked before as well, Jared, about the last mile, that it's in fact, it's that last 10 pounds that are so hard to lose here. Are we going into the most difficult part of this inflation battle?
I mean, I think we'll have to see. I certainly understand those arguments. I mean, one question there is there more room to run on the economy supply side? Can we continue to improve supply chains, and can we continue to see labor supply increase, especially among prime age workers? And I think the answer to both of those is yes. So I'm not ready to sign up for this last mile argument, though it's something we're of course going to be keeping a close eye on.
Okay. That's fascinating. Do you worry about the impact of what's going on the Red Sea? Jared, you've referred to supply chains and goods prices here, and we're looking at these massive tankers going all the way around Africa because of this security threat at the moment. Is that going to reach consumers at some point?
Again, this is something that, whether it's our national security, our economic team, monitoring extremely closely. Operation Prosperity, as you know, is a coalition effort in effect to help escort ships and keep commerce going in the region. Now, I think the important thing there is to just cut right to the punchline and look at the impact on gas prices. At least thus far, it's been a very limited impact. I woke up this morning and the national gas price was $3.08 a gallon. It was below $3 in 30 states across the land. And remember, in June of 22, that price peaked at north of $5 a gallon. So that's been very welcome to American consumers at the pump. It's also helping to keep consumer spending strong, and that's been at the core of our recovery. So limited impact thus far, but very much, of course, on the watch list.
I'm spending time with Jared Bernstein, chair of the White House Council of Economic Advisors here on Bloomberg. I'm sure you're dialed in on this potential for a tax deal on Capitol Hill, Jared. I'm kind of amazed that we're even having this conversation right now when we're not even sure if we can fund the government or, dealing with the border or so many other issues that we could talk about. But apparently we are on the verge of a deal between the Democratic-led Senate and the Republican-led House that would restore the enhanced child tax credit in exchange for more friendly business taxes. I wonder if the White House is in favor of this, if you have a sense of the contours of what the economic impact of that might look like.
Well, I think it's a really important practice not to for the White House to comment until the president goes first when it comes to ongoing negotiations. So I'm not going to give you a White House readout. What I will say is that President Biden has consistently supported a child tax credit expansion, much like the one he put in place in the rescue plan. Now, he's talked about the importance of paying for that. And again, that takes us back to a tax agenda that injects a significant fairness into the code, particularly for those at the top of the scale and particularly for those who want to evade taxes by giving the IRS the resources it needs. But look, the child tax credit reduced child poverty in half, and then it expired, and child poverty went way back up. It is one of the greatest investments we can make in this nation to have as low a child poverty rate as possible. And what we learned from earlier versions of that debate, the numbers I just cited, is that the child poverty rate is a policy decision. And our decision is to try to keep that as low as possible, and that certainly connects to a robust CTC.
Well, there was a lot of concern about the expiration, of course, the child tax credit. We talked a lot about as well the expansion of COVID-era funding for child care programs, the child care cliff, they called it. We went over that cliff, Jared, and I wonder if the landing has not been as hard, forgive me if I'm using the wrong expression here, as some had feared.
Well, maybe I would probably hone the expression a little in the following way. Just the way that was constructed, it was more of a phase down than a cliff. But look, the bottom line is still relevant. We really want to make sure that anyone who wants to join this labor market and work the desired number of hours and weeks they want ought to be able to do so. And especially for caretakers who are, of course, disproportionately women, that means adequate access to affordable childcare. I would call this, in fact, President Biden would call this one of our more important pieces of unfinished business as we go forward. Again, we have robust proposals in our budget, fully paid for, to expand access to affordable childcare. And it's not just an important micro issue for people at the kitchen table, which is what this president cares so much about. It's also helpful to the macro economy by boosting labor supply.
Well, this is remarkably happening at the same time, as I mentioned. We talk about government funding. Next Friday would be the beginning of a shutdown if this doesn't work out. And I know that Speaker Johnson is under immense pressure from his right flank in the House to not do a continuing resolution. Jared, I'm just wondering if you see the odds of a shutdown rising and what economic impact that would have.
I think it's really hard to put odds on these things, but I think the people who watch it closely took those odds pretty far down when it looked like there was, if not an agreement, a proposal from Speaker Johnson on the top lines for the appropriation bills. Let me put it this way. Again, these are ongoing negotiations that I don't want to lean into from this particular podium. But what I will say is this. You and I have just had a good, robust discussion of all the things that are going right in the U.S. economy. Low unemployment, inflation easing, real wage gains, actual cost reductions in key areas of consumer spending, whether it's gas, milk, bread, eggs, airfares, TVs, and so on. The idea that we would want to kick the ball in our own goal with an unnecessary government shutdown when I think majorities on both sides want to avoid that is absolutely counterindicated right now. So I just am urging anyone who is in that in those negotiations to avoid that possibility.
It's like a recurring nightmare, Jared. It's always a good and robust conversation with the chair of the White House Council of Economic Advisors, Jared Bernstein. Great to see you, sir. Thanks for joining, as always, here on Bloomberg. I'm Joe Matthew in Washington as we reassemble our panel for their take on this. Awfully important, arguably more important than any other issue that we're talking about on the campaign trail. Yes, we have abortion, we have national security. There are so many directions we could take, but you know the economy, if you listen to Bloomberg, is by far the #1 issue. And as we bring Rick Davis and Jeannie Shanzano back into the conversation, I'm looking at this new Harris poll, Rick, that Axios conducted with Harris, and it's pretty remarkable. 76% of Americans agree with the following statement. Economists say things are getting better, but we're not feeling it where we live. 6 in 10 people, Rick, say they are triggered by trips to the grocery store. How do you unwind that in the next year?
You know, look, I think what we just heard from Jared Bernstein, administration needs to go out and pitch the success story. And frankly, we've talked a lot over the last year about the White House's sort of, lack of robust communications policy when it comes to the economy. And the idea that you can launch your entire economic policy as something, dubbed Bidenomics is undercutting the success that this administration has had on every aspect of the economy that's improving today. So part of it is just form over substance. But there is actually a lot of polling, not the Harris poll, that shows that people actually are feeling the benefits of the economy, both in things like the Michigan Consumer Sentiment Index going up by a historic amount recently. Still a long way to go before this administration looks at re-election, but a positive sign. And in other polls, Bloomberg's own poll, when asked, do you feel like your economy is improving at the state and local level? Most of our voters that we polled said yes. They don't feel it in the national level, but they feel it at home. So there's something there to work with if you're this Democratic administration, but they're far from being able to say, mission accomplished.
Although if you read the president's statement, it did sound like, he was pretty pleased with the report this morning, Jeannie. And of course, it's his job to say that. You know, we talked a lot about last mile here, and we could have some difficult months before things get, I guess, under control in a more positive way for the administration. But the folks talking to this Harris poll cite groceries. Number one, 72% cite groceries, 56% gas prices. Also pointing to rent, housing costs, and a large number of women, 43% of women, rate their financial situation as poor. How do you read these numbers?
You know, they are very concerning. And I think that's why we want people like Jared Bernstein, who makes so many important points, talking to you consistently if you're in the Biden administration. Because, you know, what he does is he talks not just about the polls that we hear an awful lot about, like Harris and Fox, but he also talks about the consumer measures, which show that confidence is way up. Now, that's just 1 month, December, but up 10 to 14 points in 2 different measures. He also talks about the reality when you compare the economy at the turn of into the new year versus the economy, the turn of last year. We are in a very, very strong position that most economists said we wouldn't be in. No recession, gas prices way down despite what's going on in the Middle East. Spending is up, inflation going down, and of course, unemployment historically low. So I'm not saying we can convince people to feel better about their own personal situation, but I do think the administration believes, rightly so, that there is a lag effect here. And the very strong numbers we are seeing are going to hit Main Street. And I think they are hoping they're at the right time. And to Rick's point, if they can get the messaging right and keep getting people like Jared Bernstein out there to talk about it, it is going to help them make this case, because the reality is, in comparison to economies around the world, we ended 2023 and introduced 24 in probably a much stronger position than anyone could have hoped. I mean, that's why you have Donald Trump, to bring up politics, out there saying he hopes that the market crashes in the next 12 months. It's over 37,000. That's amazing. Nobody thought it was going to be there. He's hoping it crashes because he knows if it doesn't, Joe Biden owns this very good economy, and that's bad news for him.
What do you make of this potential tax deal, Rick? Is this real? The idea of, we're talking about a $70 billion proposal, and Bloomberg is reporting on real details today. It would be evenly split between corporate tax cuts and the expanded child tax credit, as we just discussed with Jared Bernstein. It sounds like some sort of economic prisoner swap. Do they just cancel each other out?
Or bolster each other, right? Depends on how you look at it, Joe.
Sure.
Look, we know that the extension to the CTC was a very hot political topic, you know, before the summer. And we do know that there were a lot of Republicans who wanted to try to find a way to do something in this area. But it's so dang expensive, right? I mean, when you talk about $60 billion, that's a fraction of the overall plan that was funded during the first 2 years of the Biden administration. So the fact that something can get done in this area, I'm sure, would be beneficial for both sides and their constituencies. And as Jared Bernstein said, you know, who can be opposed to decreasing childhood poverty? So I think that it shows you that there's still a communication and things can get done. Maybe this gets wrapped up in a big omnibus that can be passed, which gives everybody something, right? Border security, child tax credit, small business, Ukraine funding, Israel funding. I mean, like, this could really be an interesting, January, February.
It sure could. We'll see if Mike Johnson can keep his job through it, because that's a lot of stuff to get done here, Jeannie. And I am compelled by Jared Bernstein's lack of response there, not wanting to step in front of the president here. It makes it sound like we do have news coming. You can read about this tax deal in the works on the terminal and at Bloomberg.com. Great conversation with Jared Bernstein and our panel, Rick Davis and Jeannie Shanzena. We'll have some final thoughts ahead. Dare I say this out loud? No Labels is making noise after Chris Christie dropped out yesterday. We're just going to have to touch that next. I'm Joe Matthew in Washington. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pettit, just getting word that the California State Teachers Retirement System Chief Investment Officer Chris Ailman is stepping down in June after almost a quarter century directing investments for the second largest American public pension fund. Sources tell Bloomberg a U.S. national security review of Nippon Steel's takeover of United States Steel Corp is unlikely to conclude until late this year and could extend into 2025, far longer than the companies have previously signaled. Hertz Global Holdings plans to sell a third of its American electric vehicle fleet and reinvest in gasoline-powered cars due to weak demand. And with more, here's Bloomberg's Denise Pellegrini.
Charlie, the sale of 20,000 EVs began last month, and it will continue over the course of this year. Word coming in a regulatory filing, and there is a cost to this. The rental giant says it expects to record a non-cash charge in its fourth quarter of $245 million related to incremental net depreciation expense. Hertz says it expects the sale to better balance supply against expected demand of EVs. In October, the CEO said the company would scale back on EVs, which had made up about 11% of its total fleet, with Teslas representing 80% of that. CEO Scher said EVs come with higher repair costs compared to the rest of its cars, and he says that cost has hurt its bottom line. Charlie.
And that's Denise Pellegrini reporting. Hertz shares down now by 4.2%. Tesla lower by 2.6%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We carry on live from the nation's capital, and glad you're with us on the radio, on the satellite, and on YouTube. Kaylee Lyons will join the conversation in just 5 minutes, and we'll have some final thoughts ahead. From our signature panel with news coming out of No Labels today, you're going to want to hear about after we check world and national news. Do that with Nancy Lyons now in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The Pentagon's internal watchdog will be looking into the circumstances around Defense Secretary Lloyd Austin's hospitalization after he suffered complications from prostate surgery but then didn't tell the White House for days. Bloomberg's Nick Wadhams is following the story.
The big question that the Inspector General is trying to answer is whether the procedures in place for notification when a senior leader is unavailable or falls ill are up to date, and whether Lloyd Austin followed them.
Bloomberg's Nick Wadhams reporting congressional Republicans sent a letter to Austin yesterday demanding an explanation from him and other Pentagon officials. Some star power today on Capitol Hill as the Senate Banking Committee took up legislation to help stop the flow of fentanyl into the U.S. Musician Jason DeFord, also known as Jelly Roll, says he wants to be part of the solution. He admits he was part of the problem before serving time in prison for drug dealing and other crimes.
I hurt people. I was the uneducated man in the kitchen playing chemist with drugs I knew absolutely nothing about, just like these drug dealers are doing right now when they're mixing every drug on the market with fentanyl, and they're killing the people we love.
DeFord is urging passage of the bipartisan Fend Off Fentanyl Act, which targets Chinese chemical suppliers and Mexican cartels. Hertz is selling off about 20,000 electric vehicles from its U.S. fleet as demand for EV stalls. Bloomberg News Detroit Bureau Chief David Welch says costs played a role in that decision.
Hertz said that they had a much higher repair cost for EVs because of the electric components. Supply chain isn't as mature as it is for conventional cars, so it costs them a lot more money.
That's Bloomberg News Detroit Bureau Chief David Welch. EV sales slowed sharply over the course of 2023, rising just 1.3% in the final quarter. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe.
All right, Nancy, thanks. Just breaking on the wires of the Associated Press. Larry Hogan is stepping down from No Labels. And it's got a lot of tongues wagging around here, people wondering what this means. The former Maryland governor, of course, national co-chair of No Labels, who had flirted with this idea of a No Labels presidential candidacy, not to mention his own run, stepping down from the board now, and what I read is a possible sign of a 2024 bid. But wait, there's more. NBC News adding a layer to the story with the headline, No Labels engages Chris Christie allies on a potential third-party run. This all following, of course, Chris Christie's decision yesterday to drop out of the race, and I've got to hear from the panel on this while they're still with us. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. What's Larry Hogan got up his sleeve here, Jeannie, and could Chris Christie get back in the race?
Yeah, I mean, Chris Christie, he called it a fool's errand, this no labels approach. And, that was a few months ago. So if he does indeed turn around that quickly, we're all going to have whiplash. And I think it's possible Hogan pursues this, but I do agree with Nancy Pelosi. The danger here is to democracy, because this very well may ensure that they are a spoiler, and Donald Trump marches right in, and I think that's what many Democrats should be concerned about.
Well, Rick, No Labels has said on this show that it will run a candidate if it's Trump versus Biden by Super Tuesday. Do you think we're doing this?
Well, it's hard to tell, and it's hard to tell what impact it's going to have because, they're not on all 50 state ballots at this stage. I know they're working to get on, but the reality is that someone would have to do some pretty sophisticated polling to know whether or not Chris Christie, in this instance, takes more never-Trumpers, who probably are voting for Joe Biden anyway, away from Joe Biden. It's not likely anybody who was for Christie is going to be for Trump if he's in the race.
Fascinating stuff. We'll have more on this as we learn it, of course, and we'll talk it out with our great panel. Rick Davis, Jeannie Shanzano, thanks to both of you. Kaylee Lyons on the way in next, because Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover them.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lyons on Bloomberg Radio.
It is cold in Iowa and New Hampshire, but the mics are hot. Just ask Chris Christie. Welcome to Hour 2 of Sound On, this day after the former governor dropped out of the race, but not before a hot mic moment made clear that even he thinks Donald Trump will win. We're going to talk about the impact of that decision and as well the final Republican debate, not to mention the final Trump town hall before Iowa, with Kyle Kondik, the managing editor at Sabatos Crystal Ball, the University of Virginia, will be with us as Kaylee Lyons joins the conversation. We were watching Kaylee, so they didn't have to.
Exactly, as we always do, even though it is
screen it, or was it
one and then the other?
Okay.
YouTube is a wonderful thing, Joe. You can catch us on YouTube, of course, but also you can watch back what you didn't watch live.
Yes, absolutely. Really sort of fascinating to see just the two of them on stage. Knife fight in a phone booth, as they say. We heard the word liar more times than we could catalog, while Donald Trump was sitting on the stool, calm and collected, kind of normalizing things for an hour on Fox.
Yeah, really interesting contrast, because Donald Trump, while he was appearing there, didn't actually come up that often in this debate between DeSantis and Haley. Yes, they took their barbs. Ones we've actually heard multiple times now. The idea that he added, $8 trillion to the deficit was brought up.
Indeed.
Multiple times. Both of them said he should be on that stage with them, but instead, mostly they were just poking one another. And Nikki Haley said DeSantisLies.com a lot.
A lot, yeah. That's just so funny. It felt sort of dated, to be honest. But what was it? Ballistic
podiatry.
Ballistic podiatry.
Or I guess if you're Ron DeSantis, that's code for shooting oneself in one's foot.
The man with the inserts and the boots, the high heel guy, is accusing her. What was the point of that?
I can't answer that question.
Because of the high heel remarks that she makes that kick you with the, I don't know. What a night. We're going to go through all of it with Kyle. You see what's happening. The Houthis are talking.
Yes.
Even though we're not talking.
Well, yeah, this has been the question. What does the U.S. do as the Houthi rebels, militants, have not let up in the Red Sea, despite the U.S. task force, the coalition the U.S. is leading? Defense and deterrence doesn't actually look like it's deterring much at all, but the Houthis basically suggesting if the U.S. were to go on offense, they would respond to that.
A big response, they say. Nick Wadhams has that, our national security expert at Bloomberg. He'll be with us a little bit later this hour, and we've got to keep the beat on what's happening on Capitol Hill because it's getting more complicated by the minute. Is Speaker Johnson really going to do a CR here? Boy, it's a tough crowd for him at the moment. And Jonathan Tamari from Bloomberg Government will join us a little later.
Apparently Mike Johnson is now being pressured to renege on the deal he just made days ago with Senate Majority Leader Chuck Schumer. It's a sticky situation if I've ever seen
When you hear from the Freedom Caucus, you would not want to be Mike Johnson. So we've got a lot, as usual, to talk about. There are no slow days around here.
Never. It's exhausting.
But forget August, January. Let's do Wall Street. Charlie Pellet gets us rolling every hour with trading in New York. How's it look, Charlie?
Yeah, I'm keeping the beat on Wall Street for you. Lots of moving parts as well. Lots of fascinating stories today. Bitcoin Thursday, CPI Thursday. Pick your moniker because we got Banks Friday coming up. The Dow, the S&P, NASDAQ, all lower right now, but the key takeaway perhaps, we are off session lows. 8-point drop right now in the S&P. 47.74, drop there of just about 0.2%. The Dow now down 40, decline there of 0.1%. NASDAQ down 19, drop there of 0.2%. 10-year yield now at 4.00%. We've got the 2-year yielding 4.29%. Spot gold down $5 the ounce, drop there of 0.3% to 2019. West Texas Intermediate crude oil up 1%, 72.05 a barrel. Bitcoin, major story today. Bitcoin now up by 1.2%, well off session highs. Bitcoin now at 46,492 as those ETFs get up and running. Well, around trading desks, the prevailing view is that this morning's consumer price index was not great, but it did not move the needle on expectations for the Fed's course. Administration reaction to the CPI report from Jared Bernstein, chair of the President's Council of Economic Advisors, who was interviewed right here on Sound On.
Core inflation, of course, hit expectations. The 0.3 was expected, 0.3 was delivered. So we see that prices continuing to ease, job market remaining strong, and the combination of those two is delivering real wage gains, which we also learned about this morning. And that's a trend, not a blip.
The first U.S. ETFs that trade directly in Bitcoin off to a strong start. Billions of dollars changing hands in a historic first day of trading for the long-sought investment vehicles. Among some of the ETFs that are running up and running today, we've got the Grayscale Bitcoin Trust ETF up now by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hi, Charlie. We thank you. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew alongside Kaylee Lines. How many days to Iowa? 5?
4.
4? And we've got 9 days to a possible shutdown. I'm still really compelled by how all of these are going to smash together over the next week. Iowa shut down New Hampshire, or is it Iowa motion to vacate New Hampshire?
Good question.
We're going to be in early states while some wild stuff is going on here in Washington.
Wild indeed. I mean, it's already happening. It's
That's
already
true.
wild. It could potentially get more wild as we get closer and closer to a deadline. That is what tends to happen.
Right.
The clock starts ticking louder and faster. But if you're Mike Johnson right now, probably figuring out how you can fund the government and keep your job, or is that simply not possible? These are two binary outcomes.
Or is your name just still Kevin? Because that's what it feels like. We'll talk more about that with Kyle ahead because you might have seen Chuck Schumer is not waiting around. He's starting the cloture process on a CR today. So we'll talk a little more about potentially being jammed by the Senate as we all try to recover from our debate hangover. Was that an exercise in futility? I don't know if we've seen ratings yet, but I just don't feel like that moved the needle for a lot of people.
Well, we heard a lot of what we had already heard from Nikki Haley and Ron DeSantis to a large part, at least when it comes to contrasting them with the current frontrunner, Donald Trump. I think the question is, did one of them succeed in getting farther ahead of the other? If not getting closer to Trump, did one gain and one lose? I don't know that we have
Nikki
a sense
Haley's
of that
waiting
yet.
around for all the Christie voters to show up for her. So it might have just been a wash of a night. Kyle Kondik joins us from Sabato's Crystal Ball at Kaylee's alma mater, the University of Virginia. Kyle, it's great to see you. I'm sorry if you had to endure all of that as well. I'm sure you did. Did it make a difference?
Probably not. We've been waiting for some post New Year's Day more Iowa polling, and there's been a couple came out today. Suffolk, and then Iowa State just dropped one a few minutes ago, and Trump's over 50 in both of them, and Haley and DeSantis are close to each other, but very far behind Trump, in the 15 to 20% range. I think they were tied at 14 in the Iowa State poll. So, I mean, maybe we're in for some sort of huge surprise here on Monday night, but all of the indicators are that we have so far is that Trump is going to win this thing going away.
Well, Kyle, do we need to redefine what surprise actually means when it comes to Iowa? Because sure, it would be absolutely astounding if Trump didn't win, but could the surprise actually be in the margin? How close to him is enough that even second place feels like massive news?
So the Trump campaign has noted accurately that of all the contested non-incumbent Republican Iowa caucuses over history, the biggest margin of victory is 12 points. And so they're sort of setting the bar like, hey, we win by more than 12 points, that's good. I personally don't, if they win by like 13 or 14, I don't think that that's some sort of impressive performance given what the polls are showing now, which is more like he's up by like 30 points. What is the difference between a good performance and a bad one? I don't know, maybe that's like 40% or something like that, which actually, given the polls, he's consistently been over 40% would seem maybe not that great. So there is, there's maybe a higher bar for Trump to impress in Iowa, but if he matches the polls, he will have done that. I also think it's probably fair to treat Trump differently than you would in a normal non-incumbent race, because he is sort of like a quasi-incumbent, given that he's he's aiming for a third straight Republican presidential nomination and has already served the term as president before. So I don't know where I'd put the number necessarily, but just matching or slightly exceeding that historical 12-point margin, that probably is not good enough to be impressive. And in fact, I think would probably be disappointing if it's close to that number, again, given what the polls say.
Well, of course, everyone's banking on a surprise in New Hampshire because it's New Hampshire. Of course, it's not a surprise if you're expecting it. But after Chris Christie dropped out of the race, Kyle, I wonder your thoughts on the impact it could have on Nikki Haley. We've seen polls that show Donald Trump and Haley within single digits. This would make up the difference there. But we also heard from Christie himself, hot mic, she's not up for this. She's going to get smoked. Which Christie's right?
Look, I would not be surprised by Haley winning in New Hampshire. I think she frankly needs to win New Hampshire to really justify staying in the contest, frankly. Her home state of South Carolina votes like a month after New Hampshire. And so you kind of enter like a little bit of a dead period. There are contests in Nevada in early February, but there's a caucus that's actually awarding the delegates that Donald Trump's probably going to win easily. And then there's like a beauty contest primary that Haley's competing in. She's not competing for the delegates, which she'll probably win comfortably. I don't know what you really do with that. So after New Hampshire, the focus will really go to South Carolina. But again, the coalition Haley is building is kind of centered on more moderate voters. A lot of independents can cross over and vote in the New Hampshire primary, and probably will, and are probably inclined to support a candidate like her, particularly with Chris Christie out of the race. If Haley can't win there, and let's say Trump wins Iowa and New Hampshire, I don't know if there's much of a rationale for anyone else to even continue, given that, I guess at that point, the only real threat to Trump would be some of these legal matters he's dealing with. But he would have, he would have basically stopped DeSantis in Iowa and stopped Haley in New Hampshire. But again, I could definitely see Haley winning New Hampshire, but that's not enough to make this thing a real horse race. I think Trump would have to lose South Carolina too in order for us to go into Super Tuesday and say, hey, this thing has really opened up.
Well, Kyle, doesn't it matter who else is in the race at that point? Do you think we could see a further thinning of the field between Iowa and New Hampshire? If Ron DeSantis can't actually get number 2 in Iowa, do you think that means he's out?
It could. I mean, it's a decision. It's up to him. Although you have to look at like whether he would have the resources to continue, et cetera. But he's banked everything on Iowa, and I think his polling has suffered certainly in New Hampshire. If he can't finish ahead of Haley in Iowa, he's certainly not going to finish ahead of her in New Hampshire. So I think it could potentially be curtains for DeSantis if Iowa doesn't turn out in some sort of positive kind of way for him.
What do you make of this? I don't mean to sneak up on you with it, Kyle. This no labels news that we're hearing about just in the last hour here. Larry Hogan is stepping down from the no labels board in what some see as maybe the best indication yet that he, too, plans to run. No Labels itself, separately being reported, is in touch with allies of Chris Christie. Is this just noise, or are we going to have a third-party candidate?
I find that difficult to handicap. I actually had not heard about the Hogan news until you just mentioned it. He would be sort of the logical person to run. And, look, I think from the Democrats' perspective, a Chris Christie or a Larry Hogan heading the No Labels ticket, I mean, that's probably worse news for Joe Biden than it is for Donald Trump, because they have appealed to the kind of like lapsed Republican voters that may more naturally be Biden voters as opposed to Trump voters in a head-to-head matchup. So, I think it's also possible that No Labels just sputters out and doesn't run anyone. But that's one of the many wild cards. It's interesting that like the primary season is not that exciting, but there's a whole lot of other stuff about this 2024 election that is exciting and interesting. And the potential roster of third-party candidates is part of that, which is, again, still up in the air. And, these candidates would have to get ballot access, or No Labels is trying to get ballot access for their person if they run someone. So that's one of the moving pieces here.
Well, there's also moving pieces in the background, Kyle. Joe and I were just discussing it. Here in Washington, we're in this big showdown over spending. We're facing down a potential government shutdown with the knowledge that the Speaker of the House, Mike Johnson, has a very close relationship with the former president. And I'm conscious that I may be overthinking it here, considering I, from where I sit, pay very close attention to the 2024 race and to Congress when not everyone else does. But could Trump be damaged if there is a government shutdown and it's perceived as him having some influence on that? Because this could be happening while people are making choices in primaries.
I doubt it in the short term. I mean, look, if we have like an entire year of chaos in the House and maybe you have like a government shutdown in late summer or in the fall, which I doubt Republicans would allow to happen. But I mean, who knows? The Republican conference in the House just seems basically ungovernable. So I don't think that this stuff matters in terms of the actual 2024 presidential election. I mean, look, we have, the presidential candidates, who the nominees are, they end up becoming basically the leaders of their respective parties. I think that a lot of the election results kind of flow from what happens in the presidential race. And so I don't think that the chaos in the House is all that meaningful. It's certainly meaningful for the operation of the country, though. And I guess, see why the markets would care about it, and why people who follow this stuff closely would care about it. But in terms of political impact, I'd say probably not much, at least in the short term.
You wonder to what extent Donald Trump has his thumb on the scale in the House, though, Kyle, with the Speaker talking to him on the regular. You talked to him and Joe Biden apparently yesterday alone. And we're hearing some pretty loud noise from the Freedom Caucus here. And you wonder to what extent the discord is being fed by the former president.
It's quite possible. I mean, the former president demands total loyalty, but he doesn't necessarily give it back in return. He's been sort of a chaos agent in the past in terms of his dealings with his fellow party members in the House and the Senate. I doubt that the former president is being a constructive player in trying to resolve these things, and quite possibly the opposite.
Finally, Kyle, we only have about 45 seconds left, but would a shutdown make it change the odds of how many seats may flip in terms of the House majority come November? Because we got to consider the down ballot here too.
Again, in the short term, I don't really think so. But again, it's quite possible that you'd have this sort of volatility continuing throughout the year. And I would think that would probably help Democrats on the margins. But again, I think we're still far away from that potentially being important. There's such a churn of news and stuff that I just think these things can be easily forgotten, even though I don't want to downplay. They actually have clear real world importance. I just don't necessarily know if they're going to be dictating election outcomes, here in January looking ahead to November.
Well, Kyle, it's good to see you. Kyle Koenig at Sabato's Crystal Ball, where he's managing editor at the University of Virginia Center for Politics. We thank you, as always, Kyle. Stay in touch. We'd like to talk to you once we get some actual voting to discuss. It is kind of crazy to think about that on Monday. It won't be a poll. It'll be real.
Real numbers, 4 days away.
Yeah, and we'll be there for it. The weather is another matter. We'll talk about that later this hour, too, because that'll be another point of history in Iowa. With Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a volatile session today. Stocks down, bonds whipsawing after hotter than anticipated inflation data. Tempered bets on a Federal Reserve rate cut in March. Right now, we have got the S&P 500 index well off session lows, but still down 9 to 47.73. A drop there of 0.2%. Dow Industrials down 55, a decline there of 0.1%. The Nasdaq Composite Index down 23 points, a drop there of 0.2%. Bitcoin advancing 0.9% as those ETFs begin trading. We've got Bitcoin at 46,317. Spot gold lower a little change, down 0.2%. 20.20 now the ounce on spot. And West Texas Intermediate crude up 1%, 72.06 for a barrel of WTI. Well, the big question on Wall Street is how today's CPI report will play into calls for the Fed's next rate move. Here's Cleveland Fed President Loretta Mester.
I think March is probably too early in my estimation for a rate decline, because I think we need to see some more evidence. I think the December CPI report just shows there's more work to do. And that work is going to take restrictive monetary policy.
And Mester spoke with our Michael McKee this morning on Bloomberg Radio. There has been a dramatic reversal at Hertz on its commitment to electric vehicles. In a regulatory filing this morning, Hertz Global Holdings said it plans to sell a third of its American electric vehicle fleet and reinvest in gasoline-powered cars due to weak demand and high repair costs for its battery-powered options. Today, Hertz down 3.96%. Tesla trading lower as well, down by 3.1%. Recapping, stocks lower, S&P down 10, down 0.2%. Bitcoin up 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Welcome back to the fastest show in politics, where we don't just talk domestic politics, though we do talk about that a lot, but geopolitics as well, Joe. We've all been paying attention to the Red Sea as there has been growing concern about escalation there. And of course, still ongoing attacks from the Houthis, another Iranian proxy, against vessels in the Red Sea. And now a warning, Joe, comes out from the leader of the Houthis himself. Will confront the American aggression. Any American attack won't go unpunished. It does not feel like the temperature is getting lower.
That's for sure. These are remarkable headlines that we're seeing here in the region, and to be hearing from the Houthis promising a big response if there is, in fact, some sort of concerted effort from the U.S. or U.S. and allies. Everyone's waiting for something to happen here. We actually mentioned this with Jared Bernstein last hour, and the impact, Kaylee, that these Red Sea shipping issues could have on inflation. This is something that has a lot of tentacles when it comes to the economy and national security.
Yeah, what does it mean for goods prices when a lot of these goods are stuck on ships that are having to go the long way around the coast of Africa as a result of these tensions? Let's get more on this now. Nick Wadhams is joining us. He heads up our U.S. national security coverage here at Bloomberg. He's here with us in studio. So, Nick, a big response. I would imagine this was the concern of the U.S. when they're considering, okay, do we continue to deter and play defense or go on offense? Just how big of a response could we realistically be talking about here?
Right. I mean, that is the big question that we're all trying to figure out, because obviously what we had this sort of series of events where the U.S. said, okay, listen, to the Houthis, if you keep up these attacks, there will be consequences. Then almost as if on cue, the Houthis launched this series of attacks that was the biggest we had seen yet. And now, okay, U.S. and its allies, chiefly the U.K., kind of have to do something to respond, also to try to restore deterrence. But the Houthis are not seemingly cowed by it. So the question is, well, what do you do? I mean, do you launch a series of airstrikes that tries to eliminate the Houthi command structure? Do you play a sort of preemptive strike situation where you take out satellite installations or ammo depots or whatever else? So I mean, I think that's very much the live debate within the administration, trying to maintain this balance between, okay, establishing deterrence, but also not wanting to do something that's just going to provoke even more attacks on global shipping, which would defeat the whole purpose of what they're trying to do in the first place.
General Mark Kimmett was with us around this time yesterday, as a matter of fact, and talked about the mission here. This is kind of a layup for the U.S. They're largely fixed targets, and we could do some pretty heavy damage from a distance. Is this a cruise missile attack, or would we have different options?
I mean, there are a lot of options. The U.S. has obviously advanced fighter jets more into the region. Cruise missiles from the ships that are in the region would be an option. So, I mean, the U.S. has no shortage of options when it comes to military attacks. But, you know, the big question there is, obviously, the U.S. had been saying for some time to the UAE and the Saudi Arabians, hey, you guys, we want you to cool down your war with the Houthis. Now the U.S. risks being pulled in even further into the conflict in the Middle East. I mean, this is something they have not done before to the Houthis, direct involvement. It puts them even closer into potential conflict with Iran, which supports the Houthis. So, I mean, this isn't as simple as just firing off a few Tomahawk missiles. There are real big implications here that they're going to need to weigh.
Well, I'm glad you brought up Iran, because we also had separate news today. Iran capturing an oil tanker off the coast of Oman, saying that it was, quote, in retaliation for the theft of oil by the U.S. Is this a sign that Iran is perhaps more willing to engage in direct conflict than we maybe previously thought? Because to this point, it's the proxies largely that have been doing the work for them.
Right. I mean, that's true. Iran has been very content to sort of stay behind its proxies and not come out in front. So I think there was a lot of surprise with the administration. This was sort of a holy moly situation this morning when these headlines started to come across. And again, the big question there is, okay, are we actually going to see a situation where the U.S. and Iran are in some sort of conflict? And if it's not direct conflict, there is at least the very real possibility of miscalculation.
Or an accident.
Or an accident. What are they going to do about that ship that now has these guys in black masks on it? I mean, are they going to try to eliminate them and take back control of the ship? And, I mean, what does that mean? You can just see all sorts of ways in which this would spin out of control.
Is holy moly on the DEFCON scale? I'm curious if there's a number
holy moly one. I think it's, it is. It's way high up there.
This is the stuff the national security guys know way more about this.
Exactly.
All this is happening, Nick Wadhams, while the Secretary of Defense is in the hospital.
Right.
And apparently the Pentagon is going to be conducting its own investigation now into how he kind of fell off the map for a couple of days.
I mean, it's an extraordinary story. We know that Lloyd Austin is an intensely private man. He was admitted for surgery because he had prostate cancer, and then he had complications from it that, he was in the intensive care for several days.
Yeah.
The big issue we're trying to figure out is the Pentagon says, okay, he is back at his duties. He has the full authority at as we're talking about, a very chaotic time. But he is still in the hospital. He was admitted on January 1st. It is now the 10th. I mean, he is
11th.
It's been 11. So he's been there for 10 days.
With an
and
infection.
The question is, why is he not? What is happening? Why is he not able to be dismissed? So there are those questions, but then there are obviously the bigger questions about chain of command, and we still don't have answers to that.
Well, on the subject of the chain of command, what could be the likely outcome of this investigation? Is this just figuring out procedure for next time, if there is a next time, or could this actually result in some kind of consequence for Secretary Austin? Like, what happens when you're at the top of the chain in terms of discipline?
Well, I mean, that's a good question. Republicans in Congress are saying there has to be some sort of consequence. Somebody needs to take the fall for this. Who is that going to be? I mean, President Biden has, indicated he has full faith in Lloyd Austin. Obviously, as we're talking about with the Houthis, very bad time to lose your defense secretary. So I think that the review is going to look at, okay, why were there not procedures in place where there's something automatic? Okay, the defense secretary goes into the hospital. That automatically would trigger a notification to various people. And why did that not happen? It seems, and how did the White House not even notice that Austin was out for however many days, 4 days before they even learned about it? So they got to get to the bottom of all those questions. I think reasonable expectation is that they would talk consequences maybe after the whole Houthi situation at least becomes slightly less chaotic.
It's remarkable that we're still asking these questions this many days later. The president has said he will not accept resignation from Lloyd Austin. Should he have said that?
I mean, you know, there's a big question there for President Biden, and one that Republicans are really trying to play on, which is what does it say about your command of your own national security apparatus if you didn't know?
Yeah.
We do know, however, also that President Biden really does not generally like to fire people, and he does have faith in Lloyd Austin. Obviously, he sees this as a distraction at a time when you've got Ukraine, you've got Gaza, you've got the Houthi situation. So I think they feel very much in the White House that they want to ride this storm out. The question is, will circumstances allow them to do that?
Well, to your point on this just being a distraction, could this turn into a scenario where the story just isn't going away? There's continued attention called, and for the effectiveness of the Department of Defense, you decide.
Absolutely.
Perhaps.
I'm surprised the candidates and Donald Trump didn't make more hay out of this last night. When you talk about competency within the administration, this is not a great look.
It's a great point, but again, they were mostly going after each other, at least in the case of Nikki Haley and Ron DeSantis, to really bring the current administration or former into it that much. But yeah.
So in the meantime, Kathleen Hicks is running the Pentagon.
Well, they say that Defense Secretary Austin has been restored all of the
from
authorities
a hospital bed.
From a hospital bed. But they say that, you know, he now is making the calls.
Amazing. Okay.
He's making the decisions and things like that. So he's got it again. But again, this is just one of the many questions we're still trying to figure out. Can you do that when you're in a hospital bed? And if you're still in the hospital, what does that mean? Or is he operating, you know, at full speed?
Can you turn a single hospital room at Walter Reed into a
situation
I
room?
think they probably can. I mean, it is a military. I'm sure they have, you know, suites.
If the days continue to tick by, they're going to have to give us a photograph from that room at some point.
I think that's true.
I don't know that they will, but we'll see. Great to see you, Nick.
Hey, pleasure.
Nick Wadhams runs our national security team here at Bloomberg, the best in the business. As we turn to world and national news now, Nancy Lyons picks that up from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. With a partial government shutdown just 8 days away, House Speaker Mike Johnson is actively discussing reneging on spending levels that were agreed to with Democrats after he received some pushback from his far-right colleagues. He told reporters today he's made no commitments. That increases the possibility of a shutdown, and that worries Jared Bernstein, the chair of the White House Council of Economic Advisors.
The idea that we would want to kick the ball in our own goal with an unnecessary government shutdown when I think majorities on both sides want to avoid that is absolutely counterindicated right now.
Jared Bernstein speaking with Bloomberg Sound On. Former President Trump has been in a New York courtroom today for closing arguments in his civil fraud trial. He spoke briefly during closing arguments from his attorneys, saying the case was not consumer fraud, but a fraud on him. The judge asked Trump's attorneys to control their client, and the judge eventually cut off Trump after about 6 minutes. Trump speaking at all was unexpected because the judge ruled he could not make a statement since he never responded to the court's ground rules. Trump, his adult sons, and business associates are accused of inflating the value of real estate in order to receive more favorable loans. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks a little changed right now. The first American ETFs that directly hold Bitcoin are off to a strong start. Billions of dollars changing hands in a historic first day of trading for the long-sought investment vehicles. As of 1 p.m., over $3.5 billion worth of shares have traded between the 11 U.S. spot Bitcoin exchange-traded funds. Right now, we do have Bitcoin advancing by 1.5%, well off session highs today, but at 46,633 on Bitcoin. S&P now down 0.1%, down 3 points, 4780. We've got the Dow little change, down 4 points now at 37,687, down less than 0.1%. And NASDAQ now flat on the day, indeed just turning higher, up by 1 point right now, 14,970 on the NASDAQ Composite Index. 10-year yield, 3.98%. We do have the 2-year yielding, 4.26%. And spot gold up 61 cents the ounce to 2025. West Texas Intermediate crude up 1%, 72.05 a barrel. Bitcoin worth repeating today, up by 1.4%. Weekly jobless claims continue to run low. And with that story, here's Bloomberg's Vinny Del Giudice.
Initial jobless claims held steady at a historically low level, while the total number of workers receiving unemployment checks fell to the lowest since October. There's evidence labor shortages persist in some industries. This week, the National Federation for Independent Business reported many employers still find it hard to fill openings and attract quality applicants. Vinny Del Giudice, Bloomberg Radio.
Pay raises are on the way for many Tesla workers. Tesla has notified employees at its Fremont, California car plant of pay increases across its U.S. factories, the latest bump by a non-union automaker, by the United Auto Workers that they're trying to organize. Tesla is joining the likes of Toyota, VW, and Hyundai in hiking pay at U.S. plants after the UAW secured historic labor contracts last year for workers at Ford, GM, and Stellantis. Right now, we do have Tesla shares down today by 2.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
It begins on Capitol Hill, this idea of a stopgap funding measure to avoid a government shutdown next week. Yeah, we've seen this movie before. Last time it also ended, well, 2 times ago, Kaylee, with the firing of the speaker. The idea was Mike Johnson got one try at this, and we're living under that laddered CR now. That's what starts to expire next week. He vowed in November to never do it again.
Yeah, he also had an agreement with Senate Majority Leader Chuck Schumer on what the top line figures would be for appropriations, $1.66 trillion. And apparently, maybe the deal is not a deal because he's getting pushed to renege on that. And Johnson says he's made no commitments.
But he did make a commitment, like 3 days ago, on that deal.
Yes.
I'm getting confused by the way, that was the re-agreement, as Jack Fitzpatrick discussed, because we already had that deal back in June. Our lives are just officially Groundhog Day now. This is Chuck Schumer. He's not waiting for Mike Johnson, by the way. The Senate Majority Leader took to the floor this morning. They're moving ahead with their own plan on a stopgap.
Unfortunately, it has become crystal clear that it will take more than a week to finish the appropriations process. So today, I am taking the first procedural step for the Senate to pass a temporary extension of government funding so the government does not shut down on January the 19th.
So now we're hearing talk of Mike Johnson maybe wanting to come up with his own CR just so he doesn't get jammed by the Senate.
Everybody's always getting jammed by someone.
The whole jamming thing, it's really very funny. Everybody's got an ego is what that means.
Yeah, let's not put Jonathan Tamari in a jam, but we do have some questions for him. He covers Congress for Bloomberg Government. Jonathan, what's exactly going on? Do we have a deal on top line figures, or is that changing?
We have a deal at this moment, but there is a chance that it will change. A number of hardline Republicans came out of a meeting with the speaker today saying they believed he was going to change things, that he was going to put forward a more conservative version of things. The speaker came out and said, no, I haven't made any commitments. And so did some other of the Republicans who were in that meeting. So there's pressure on him to change things, but we're not quite sure if he's going to. Let's remember, this is the second time that Republicans have negotiated the spending level. Kevin McCarthy did it first. Speaker Johnson just did it this past weekend. But that both times there's been a backlash from the far right, and they're urging them to shred the deal, basically.
So the Freedom Caucus is back in style here. Chuck Schumer says House conservatives are trying to bully their own speaker. If there is a CR, Jonathan, I don't know if you're even hearing details on this level. Do we have a sense of duration? Because I'm pretty sure Mike Johnson won't want to have this conversation a third time.
Yeah, I mean, the idea, at least leading into today, was that they would do a CR into either February 2nd, which is, if you remember, there's 2 deadlines now for government funding.
Yeah,
Some expire January 19th, some other agencies expire February 2nd. So they would do a CR until then, or sometime into mid-March. And the idea would just be they just need time to actually craft the bills that meet the spending levels that they just agreed to. And it would basically just buy themselves time to do the kind of legislative work that goes into this. Now, the idea that they might tear the whole thing up, that throws a whole new wild card into the mix. And we're kind of waiting to see where Johnson comes down. Democrats are not in favor of this. And it seems like Senate Republicans are opposed to it, too. They would just like to avert a shutdown. So you've got basically the House Freedom Caucus against everybody else.
Well, I guess this kind of brings me to my question, Jonathan. It feels like we have had time. What does time change? Because you had time, you were facing a deadline, got a debt ceiling deal done. They didn't like it. Kevin McCarthy started to be in trouble. Then you had time to figure out funding, pass a continuing resolution. We know that got Kevin McCarthy into trouble. You bought yourself more time, though. You bought yourself more time again. And we keep finding ourselves back in this same place where it really just seems to be it gets figured out, or the speaker loses his job. Is that not, frankly, where we are, and time does not change that at all?
Well, the time thing in this case, we thought, again, when we thought there was a spending deal, is that in those previous agreements, there was not an agreement as to what the actual spending level should be. Well, there was in the debt ceiling deal, and then Republicans said
the Fiscal Responsibility Act. I thought that's exactly what it was.
That's a law, yeah.
Right, but then they said they wanted to go back against that. They reopened negotiations. But then they agreed to those same numbers, basically. And the idea was like, okay, now we're solid on those numbers. Let's just write the bills that meet the funding levels that we just agreed to. And that was kind of the process of just drafting the bills and the floor time that it takes in the Senate and House to get those things through. Now, again, if they're changing the numbers, then, yeah, we are kind of back to the whole drawing board again.
Well, we can see the dysfunction. Yesterday, conservative Republicans brought all House action to a halt in protest against starting the debate on completely unrelated bills. This feels familiar. We saw this right before Kevin McCarthy got fired, this kind of stuff. What does that mean for Mike Johnson then?
Yeah, we did see the exact same thing before McCarthy got fired. And let's remember, it's become commonplace now, but it's virtually unprecedented before last year to see the majority party kind of sink their own bills on the House floor in this way. So I think it means that there is some anger against Johnson for sure. I think that people are threatening him. I think what it shows, first of all, is that the Freedom Caucus still has the power sometimes to override almost the entire rest of their party, because the rest of the House was almost entirely fine with Kevin McCarthy as Speaker. They were fine with this spending deal, even if they didn't love it. Yet this small faction of Republicans keeps disrupting it. I do still wonder if they would take the action to oust another speaker. The last one resulted in basically 3 weeks of total chaos, and they got probably the most conservative person they could get who could actually win the votes. And we're seeing that it's not really producing different results. So I don't know if they want to go down that road again, but they've certainly opened the questions to it, and we're going to see how it plays out in these next few days.
Well, you've got quite a job ahead covering this, Jonathan Tamari. Great work at Bloomberg Government. Find Jonathan on the terminal and on the website, Bloomberg.com. It's great to see you, Jonathan. Kaylee, this will continue to unravel as the early states get to voting in the next 2 weeks. Talk about split screens.
Yeah, talk about a busy month. January is a doozy. already.
Said it.
This is Bloomberg.
Your company news headlines on
Bloomberg Professional Service. CVS is going to be closing dozens of pharmacies inside Target stores. Right now, we do have shares of CVS. They are trading a little change, down less than 0.1%. Target lower now by 1.1%. American aviation regulators have opened a formal investigation of Boeing following last week's accident on one of its passenger jets, escalating a crisis of confidence unfolding at the U.S. plane maker. A major reversal today for Hertz, announcing it plans to sell a third of its American electric vehicle fleet and reinvest in gasoline-powered cars because of weak demand and high repair costs for its battery-powered fleet. The rental giant says the sales of 20,000 EVs did begin last month and will continue over the course of 2024. Craig Trudell covers the automotive industry for Bloomberg News from our London newsroom.
I mean, it's just fascinating to me because I think back to when Hertz announced that they were going to buy a ton of Teslas. This was 2021. We were still in kind of, the meme stock, era. It was very clearly, to me, it seemed like a play on the part of, just bankrupt Hertz to really generate interest in the company and interest in their strategy going forward. And it made Tesla a $1 trillion company.
And Tesla right now down 2.6%. Hertz shares, they're tumbling by 3.1%. Those are some of our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Record cold temps expected for the Iowa caucuses, and they keep getting colder, and they keep adding more snow. Huge questions about turnout, and we'll depress ourselves with an update on that coming up after world and national news. Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. Donald Trump is not staying quiet. Today, he blasted New York's civil fraud trial against him during a surprise closing statement in court. His impromptu speech did not last long, though. It was cut off by Judge Arthur Engoron as the former president claimed the case was a political witch hunt. The judge has already ruled Trump is liable for fraud, so the trial is largely focused on several remaining claims and the amount of damages. Trump spoke with reporters outside the courtroom.
They owe me damages for what they've done. We have a great company. We're a very innocent company. We did everything right.
Prosecutors are presenting their closing arguments this afternoon. A verdict is expected in weeks, maybe even months. Following a barrage of criticism, the Pentagon's Inspector General is taking a look at Secretary Lloyd Austin's decision not to tell his subordinates, as well as the president and Congress, that he was in the hospital. As Bloomberg's Irv Chapman reports, lawmakers are not happy about it.
The ranking Republican on the Armed Services Committee, Senator Roger Wicker, was one of those raising questions.
Where were the chief staff people when this occurred? Who did they tell? Who instructed them not to bring this to the attention of the president? Where were the staff judge advocates giving the advice there?
Wickers asked if he was joining the call for Secretary Austin to resign.
The secretary is not going to resign. At this point, I have not made that call.
Wicker said if the secretary was not specifically in violation of federal law, Congress should rewrite the law to clarify it. In Washington, Irv Chapman, Bloomberg Radio.
Harvard University is now facing a lawsuit from Jewish students who claim the school has failed to punish campus anti-Semitism that has soared after the Hamas attack on Israel. The suit says Harvard administrators failed to enforce policies that should protect Jewish students from anti-Semitic speech and conduct. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Joe and Kaylee.
Thanks, Nancy. It's become a habit now, a daily thing where I'm watching the local newscast, the local weathercast specifically, but it's the local stations in Des Moines that have really attracted my attention. And for them, even for them, this is going to be really bad. We've talked about the cold, but it's getting colder.
I don't even know if we can describe this as cold. It seems like an inadequate description for temperatures of -20 and wind chills of -30 to 40 degrees Fahrenheit, mind you.
Yes, biblical. A Wall Street Journal reporter tweets, Nikki Haley talking about the weather today, quote, "It's going to be so cold, I don't even know what -15 is. I was complaining when it was cold in Iowa in October." Are you ready for the latest?
Oof.
KCCI, Channel 8, Des Moines. All right, can we get this turned up? Can we hear this?
Snowfall amount 6 to 9 inches over parts of western and northern Iowa, 9 to 12 inches for places like Fort Dodge over toward Humboldt, Iowa Falls, down toward Ames and Marshalltown, 6 to 9 inches in the metro. We're going to be on that cusp there, though, where we can see higher amounts.
Tomorrow.
And then the bitter cold settles in coming up on Saturday with lingering snow flurries. It's possible by Saturday evening we drop below zero and we stay below zero for air temperatures all the way into Tuesday afternoon.
The whole time we're there.
Literally.
So it's going to be below zero tomorrow, I guess, by the time we get there Saturday, and it'll stay there for the duration. How are we going to get there, though? There's another snowstorm tomorrow.
I don't know. Cross your fingers, Joe. Bundle up.
You mentioned something about hypothermia.
Yeah. Apparently, if we're outside for longer than 10 minutes.
This is for caucus goers as well.
Exposed.
Yeah.
That's when hypothermia could set in.
So
if you
we
are
have
not
10
adequately
minutes.
prepared.
Okay.
Yeah, so run.
That's
basically.
nothing. We'll just
when
not
you're
spend much
outside.
time outside.
Yeah.
We'll let you know how awful it looks tomorrow, I guess, because this could impact turnout. It's not just about Joe and Kaylee. Bloomberg Business Week starts right now.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week. We're live on Bloomberg Radio. Also, of course, on YouTube and Bloomberg Originals, our streaming service. There's a lot going on today, Tim.
Yeah, it feels like this week is really a roller coaster. Well, a roller coaster ride today, I would say, as investors reacted to the hotter than expected inflation print that we got at 8:30 this morning, Carol. We're going to have the latest on the trade. We got Mike McKee joining us. We got Emily Perfeo joining us. We're going to get eco. We're going to get equity movements in just a minute.
Yeah, we got to talk all about, of course, what's going on with those 11 spot Bitcoin ETFs. Man, I feel like that has consumed so much of our day today to kind of, all right, what's going on with the trade? What are the volume flows? What does it mean? We've got a great voice on it. There were 11 that were approved after yesterday's close by the SEC. Matt Hogan, he's Chief Investment Officer at the Crypto Index Fund Manager, Bitwise Asset Management. They have the lowest fee among the 11, joining us to talk about the activity he's seeing today and kind of what's the long game on all of this. We get a lot of smart people here, and I think we still are scratching our heads about
I've been on the phone with a lot of smart people today, and my head is still
why do we need
spinning.
it? What's the underlying value? What's the underlying use case? Does it matter?
Yeah, we're going to get all the answers to those things, right?
Are we?
Yeah, use
all
case.
Today?
Use case,
Done.
totally. We're going to get that. Hey, speaking of the long game.
Yes.
What's the long game for EVs? Because
good question.
The latest is that Hertz is shifting into low gear, maybe even no gear when it comes to
I
these
thought
EVs.
These were the guys. Remember when they were like
they bought 100,000 of them back in 2021.
We're like, oh.
That news powered Tesla to $1 trillion market cap. Excuse me.
Yeah. Wow.
Now it's at about $700 billion.
Yeah, it's interesting. We're definitely seeing Hertz take it on the chin today. Hey, and yes, it's a new year, and yet we've carried over a very serious old problem. We're going to explain. It's one that all of us on our morning call were like, yeah, here we go again. Like, this is still a problem.
Plus, happy almost 20th birthday, Facebook. I mean, Meta. We're going to get into
the metaverse.
Yeah, I was going to say there's there's an identity crisis going on. Let's just say that.
All right, we're going to get into Zuck's latest dream. We're, of course, talking about Mark Zuckerberg. Hey, and there's crossroads in global healthcare. There's a lot going on in the healthcare space. I do wonder how it is front and center when it comes to global leaders and all of those who are going to be gathering in Davos next week. We've got the CEO of Hackensack Meridian Health. I know this hospital system well. I've been
New Jersey-based
to it. Yep. He's going to be at Davos, so we'll see what he thinks is so important. Right now, though, what's important is what's going on in the trade. We've got kind of some volatility. Countdown to the close with our TV team starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Tim Stenevec. 4 straight days in a row, they've both made it into the office. A hearty welcome to our Bloomberg audiences across all of our Bloomberg platforms.
Are you impressed by that?
I am very impressed. Television, radio, originals. I got to get to it all, Carol Masser.
Keep going.
Stenevec. And of course, our partnership with YouTube.
I feel like I've been dissed, but that's okay.
Well, the market's getting a little bit of diss right now here. The Russell down about 0.8%. Bitcoin fluctuating between gains and losses on the day. I don't know what you guys have been watching, but I'm told that something big happened just a few hours ago.
Those spot Bitcoin ETF started trading.
What are you talking about right now?
Well, all right, we're focusing on that. But, we were just talking about me feeling dissed in the markets. There's a bunch of folks that were former customers of FTX, and they feel a little bit dissed right now. And they're trying to get a judge to basically say, listen, all of those Bitcoins that we had, apparently, I guess the settlement is saying that they've got to value the Bitcoins going back to, November 11th, 2022, when FTX filed bankruptcy. And they're saying, no, that's not what we want. Look at the run-up that we've seen in Bitcoin. Why don't we get it at today's price? They also, I think this is interesting, don't want to be paid in the digital coin. They want greenbacks.
Okay, that is interesting because they had this in crypto, but I think it makes sense given that back then the price of a Bitcoin was sub $17,000 and now it's upwards of close to $50,000. Romaine, but it raises the question of what would be a fair way to pay these folks back? Would you take an average of the price over a certain period of time? Would you Because it's like you can't really take the highest price and pay them there. I mean, that doesn't really make sense.
Well, the question I had, and this is a fascinating story to me, though, but who actually has custody of those actual coins right now?
Good point.
And I guess that's part of the issue, right? I guess if they could deliver the coins back to them, that would make the most sense. Just give them back to them and then let them cash out if they want to cash out.
Yeah.
But the fact is, my understanding is the court doesn't necessarily have that, so they just basically have to come up with the value and pay out that value.
There's a lot of hard questions there that I don't know how to answer. So I'm going to pivot entirely because there's another really fascinating story on the terminal out right now that actually doesn't have to do with cryptos, but it does have to do with
cryptos?
Cryptos, yeah. Cryptocurrencies, you know, because there's more than
like
just
cryptos?
Bitcoin.
Is that what you said? Cryptos?
Gen Z today, I can't keep up.
It's not Gen Z. Let's put that on the record. Let's talk about EVs. Let's talk about Hertz because Hertz is selling 20,000 of its EVs in a shift back to gas-powered cars. This is quite an about face. Exactly. And we're showing Tesla there too because 80% of their fleet thereabouts is Tesla.
Yeah, 80% of the EV fleet, which is around 11% of Hertz's total fleet. So it's a significant number of vehicles. There's a lot of implications here. I mean, a big part of the story is the changing view of EVs and the experiment essentially that Hertz was doing not working out. Remember when Bloomberg News broke the news of this story back in 2021, this actually got Tesla over $1 trillion market cap.
Yeah.
That's now fallen down to about a little more than $700 billion, Romaine. But it shows the way that the reception of EVs is not what everybody thought.
It's a sign of the times.
It's certainly not, but particularly in the rental market, and there's been so many anecdotal stories since they rolled this out of how a lot of customers really didn't want them, that some found issues that they couldn't charge the vehicles in a way that they needed to utilize them. Hertz itself made the point that the repair costs on those were much higher than on gas-powered vehicles, which I'm sure must have factored in their decision as well, Carol.
Yeah, they're still going to, though, keep buying. They've got agreement to buy a bunch from GM and Polestar. So I think, I don't know, do we just, I don't know, it says it. But, you know, is it just that we have the time frame long in terms of EV adoption? Maybe it's just going to take longer. I don't know, but it doesn't look so good. It's certainly not for Hertz shares today. All right, guys, that's a wrap across platform, radio, TV, YouTube, Bloomberg Originals. We'll see you at 4 p.m. Wall Street time to cat you down to the close on this Thursday.
Now you've thrown it all away. Now it cuts like a knife.
All right, so you know the news. I was listening in at 8:30. I stop everything. I'm out of my shower. I'm like, I got to listen to Mike McKee breaking down the CPI report.
Wait, what time was this? How did you get here so?
Actually,
tell me what the timeline here.
I think I was done, and I was like walking out.
Okay,
the door.
because you were got here before I did, and I listened to Mike McKee on my
But I was walking out the door, and I'm like, I had to stop.
Did you take a helicopter
you
here,
walking
Carol?
in a towel.
Don't go there. Well, speaking of that, a hotter than anticipated inflation data tempered market bets on a Fed rate cut in March. Let's get to it. Let's get to the breakdown. Michael McKee is with us. He's Bloomberg News international economics and policy correspondent here in studio. Also with us, lucky for us, is Yelena Shaletyeva, senior U.S. economist at BNP Paribas. Mike, as I said, in studio, Yelena over at BNP's offices in New York City. Welcome, welcome, welcome. So, Mike, it sounds like hotter than expected, but I feel like it's not terrible. Is it a major rethink for all of us?
No.
Okay.
It's not. It was something of a rethink for futures traders, but not for anybody who'd been sort of paying attention, because it was expected that we would see headline go up. It went up 1/10 more than the consensus for the month, but the core was right on at 0.3, and then the core year over year went down as forecast. So there's still some progress there. There were some areas that were a little bit of a surprise. Used cars went up, and they've been going down, and there was an expectation they would still be going down. Gasoline prices went up a little bit during the month, something you didn't think about. And then insurance, medical and especially auto insurance have gotten more expensive, and that just doesn't seem to stop. And it's very interesting with this Tesla story today in Hertz, because the idea is that, as I understand it, that cars are getting more complex because of the computers and stuff, and so insurance companies are raising rates because they feel they may have to pay more.
Interesting, right?
Yeah, that is. The areas of stickiness were really interesting. Hey, Mike, I kind of want to go off script and get your take on a redhead that's crossing the Bloomberg terminal right now. We're hearing from Christine Lagarde, who's speaking in an interview on French television, that rate cuts can start once data confirm an inflation pat. path, and that the rate cuts, I should say, can't give a date for ECB rate cuts, though the ECB is likely at peak rates. Any surprises there?
No, it's basically, I think the various central banks are passing around a song sheet, and they're all.
Yeah, I was going to say, it doesn't sound too different than what I've heard from other central banks.
It's the idea that the inflation path down to the target of 2% is exactly what Loretta Mester told us today, what Jay Powell's been saying, what John Williams said yesterday. That there's nothing really new there, and can't give a date for ECB rate cuts. Why would you want to do that?
I want to mention another headline from her, because she says history suggests a Donald Trump victory would be a threat, and that under a President Trump for a second term, U.S. interests not aligned with Europe. So some other stuff in terms of about geopolitical, something we've been talking about.
That is interesting, because normally a central banker, especially somebody else's central banker, wouldn't get involved in U.S. politics. And so it's kind of interesting. I'll let the people who write for Bloomberg Opinion expound on that, but it's kind of interesting that there is enough fear of Donald Trump that people would say that.
We hear it a lot, and I've heard it from top folks at some banks off, not wanting to necessarily go on record or say who they are, but that is one of their biggest concerns about what that means. Hey, Yelena, forgive us as we went through some of the headlines. Talk to us about what jumped out for you in the inflation read. We also had weekly jobless today, and of course, Mike's great conversation with the Fed Cleveland Bank President Loretta Mester.
I think March is probably too early in my estimation.
And you were listening to them. I was trying to make sense of it here on the desk as well. But what really jumps out to us here is that there are a lot of impediments to a fast decline in inflation. And that is seen everywhere in pretty much every single major component of CPI. So whether it's core goods, we see that the declines in core goods were interrupted this month. It was because of used car prices. Yes, we do expect a little bit more room for disinflation here, but with what is happening in the Red Sea, the developments there that may push shipping prices higher, that may prevent further significant improvement on that front. In terms of shelter, housing has the activity in housing has picked up, and that may prevent a more significant decline in shelter prices. And of course, core services ex shelter, that depends a lot on what happens in the labor market. And labor market remains, tight. We saw another low reading in jobless claims this morning. So the bottom line is that this data just adds to evidence that the Fed may not need to rush to cut rates. So we are expecting the first rate cut in May, not in March.
So on that, let's get to a little snippet of Mike's conversation with Fed Bank of Cleveland President Loretta Mester, who, as Mike said, this report didn't really change her mind, and she did weigh in on that March rate cut. Here's what she had to say.
I think March is probably too early in my estimation for a rate decline, because I think we need to see some more evidence. I think the December CPI report just shows there's more work to do, and that work is going to take restrictive monetary policy.
So, Mike, come on in. Your conversation, I was listening to it as I was working through and getting ready for our show. What was the most significant? Is it that what she said, or is there anything that you took
I think
away?
you would take what she said about March as important enough, because she's a voter, and she's been hawkish, but I think she probably is reflecting what most people are thinking, because certainly that was what John Williams was saying yesterday. It's just too early. But I've been looking at the futures pricing for March, and after she spoke, it backed off a little bit, and then came right back again. And one of our eco team people in Washington sent me a message that says, when are the markets going to start listening? I have no idea.
10-year is just below 4%. It's been kind of like staying at 4%.
Yeah, well, the Fed
solidly.
really influences the two, and that went down. The yields went down on the 2-year today. But the 10-year is still up now. Is that because of deficit issues? The government came out with a big deficit number today, and that could be influencing it, as well as the idea that inflation is going to take longer to go away.
So, Yelena, how many, come on back in here, Yelena Shaliatova. Given what we've learned in the past few weeks about higher for longer, which I would argue is not anything new, but it seems like the market is not necessarily paying attention to that, as Mike paraphrased one of our colleagues there. How many rate cuts do you have priced in for this year? And repeat again, once again, when you see them starting.
So we see them starting in May, and basically the Fed cutting it at every remaining meeting this year. But in terms of when the markets will start listening, I think we need to really get attuned to what the Fed officials are saying about the labor market. So Governor Waller is speaking next week, and that's probably going to be the highlight of next week in terms of the Fed speak. He was very early on talking about the beverage curve and how the labor market can normalize without seeing significant increases in the unemployment rate. But will he if he starts talking about the labor market, that maybe, there are some risks to weaker developments there. So that could be a signal to the markets that the Fed is really attuned to both sides of their mandate, not just inflation, but they're also starting to look at what is happening in the real economy and in the labor market. And, Loretta Mester kind of hinted at that as well in Mike's interview. So that's when we're probably going to see some reaction.
She did talk, as I'm focusing on balancing the Fed balancing both sides of the mandate this year, right?
Yeah, well, they're concerned with making sure that unemployment doesn't skyrocket, while at the same time keeping the pressure on enough.
Hey, Mike, just in the last minute that we have with you, earnings kick off tomorrow. We hear from some of the biggest banks over the next few days. Is there anything that these CEOs or executives could say that would change the path of the Federal Reserve? Does the Fed pay attention to the commentary from CEOs like this?
Well, they do, but they're talking to them all the time, so it won't be new news to them. But basically, what we'll all be kind of watching for on the economic side is what the set-asides for bad loans are. How bad do the banks think that lending is going to be? So far, it hasn't been terrible. And then what kind of business they're seeing in credit cards and deposits. How are customers perceiving the economy these days? Are they depositing more money? Are their savings accounts going up, or are they borrowing more? The data we've seen from the Fed is they're borrowing more to spend.
Quickly, 10 seconds. Is there an economic data point or something that you're watching on that front? Next thing?
Well, we got that earlier this week, the credit numbers.
No, but I mean in terms of eco data in general.
Well, we get PPI tomorrow and retail sales next week.
Okay.
So stay tuned.
Okay, I will. When I'm not watching the spot
After
Bitcoin
your
ETFs. It was a cold shower this morning. The hot water heater's not working. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street, and we begin with a number of headlines from the Bloomberg Professional Service involving ECB President Christine Lagarde. She says rate cuts can start once data confirm the inflation path, but she also told France Television that history suggests Donald Trump's victory would be a threat. Lagarde said under Trump, U.S. interests are not aligned with Europe's. Lagarde's remarks came in an interview with France's 2 TV. We are looking at a down day now. Stocks have been fluctuating, with the S&P now lower by 5 to 47.77, a decline of 0.1%. Dow Industrials lower little change, down 3 now, a drop of less than 0.1%. NASDAQ, the composite index, down 10, a drop there of 0.1%. CPI Thursday, as we have been discussing, the 10-year now at 3.98%, back below 4. We have got the 2-year 4.28%. Spot gold, little changed, up less than 0.1%, 2024. And West Texas Intermediate crude up 1.2%, 72.20. Big day for Bitcoin today. Bitcoin now up 2.1% as those ETFs start trading. We've got Bitcoin at 46,931. Linda Dissel is senior equity analyst at Federated Hermes, and on surveillance this morning, she told us 2024 will be harder than last year.
Are we going into recession now, or did we have a rolling recession already? And you know what? It doesn't even really matter, because if we go into recession, our dividend stocks are extremely cheap. Nobody's been looking at them for years. And if we're not going into recession, then the early cycle stuff, that's that small cap, particularly growth stocks, and those financial stocks are really inexpensive. They've been hit hard, 50%.
Sources tell Bloomberg a U.S. national security review of Nippon Steel's takeover of United States Steel is unlikely to conclude until late this year and may extend into 2025, far longer than the companies have publicly signaled. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Charlie's been covering it. We've been covering it, watching the trading in those 11 spot Bitcoin ETFs that were approved by the SEC after the close yesterday. An interesting story just crossing, though, having to do with Vanguard's offering, and this on a day where we saw Bitcoin moving in a big way to the upside, surging past 49,000 for the first time since December of 2021, but it's moved off of that, so we've seen a fair amount of volatility, Tim.
Yeah, that story, Vanguard's brokerage arm will not offer trading in ETFs that invest directly in Bitcoin. That's according to a spokesperson. This story just crossing by our own Paige Smith and Catherine Doherty. Well, tracking all the ins and outs and curves along the long and winding road to a spot Bitcoin ETF is Bloomberg Intelligence senior ETF analyst Eric Balchunas. He joins us on Zoom from New York City. Also on it is Bloomberg News cross-asset reporter Emily Graffeo. She's here in our Bloomberg Interactive Brokers studio. Emily, let's start with you. I just want to talk about how these 11 ETFs are trading.
Or not trading in the case of Vanguard.
Well, that's...
Sorry.
Well, but that makes sense. I mean, what do we know about fund flows into them? Can we make any conclusions on the first day?
The conclusion on the first day that we can make is that this is a historic day for ETFs. This is likely to be, for the Grayscale Bitcoin Trust, ticker GBTC, it might be the largest or the second largest first day of trading for an ETF ever. Right now, we have about $2 billion of shares exchanging hands. The total for these 11 funds in total is about $4.2 billion. So these are massive moves.
That's what Eric Balchunas put out, that there might be $4 billion or so, right, in the first day.
Of the total volume traded for all of these ETFs. So, you know, and maybe Eric will dive into this, Grayscale Bitcoin Trust, it has already existed since 2013. So this was converted into an ETF.
Yeah, go to any airport and you'll see an ad for it.
Exactly, yeah, I know, it's
crazy,
everywhere.
Right?
But at least for the first day of trading as an ETF, it is topping these records. And even the funds that are beginning trading today and were not converted from a trust, look at the iShares Bitcoin Trust, ticker IBIT, that's seeing almost $1 billion. Right now it's about $999 million.
Was the uptick, though, right out of the gate? Because it feels like
it's been, so the value, the trading volume has pretty much been picking up all day. I've been staring at the volume all day, and it's just steadily climbing. We're now at 4.2. In the first 2 hours, I think it was about $2 billion. So it's been pretty consistent all day of this trading activity.
Eric, come on in. Would you consider this a success in the first day of trading?
Oh yeah, I mean this obliterates all the records pretty much. IBIT alone will break BITO's first day. Now there is some complication because there was a couple ESG ETFs that BlackRock put out where it had one giant institution come in at 2 billion, and so that one creation made for a volume of 2 billion. So it's a little complicated, but let's just say this: BITO, which was one of the most successful launches, IBIT is going to trade more than that. Looks like IBIT's going to finish at about 1.2 billion. The whole group of them, 2.2 billion. Now, GBTC, I don't really count. It does count towards the story, but it's not a fresh new ETF. And when you think about a fresh ETF, and I've been doing this a while, I call it the ETF Terradome. Going into the ETF world with nothing is like a newborn being like shoved into the Amazon jungle. All right? GBTC came with all this volume. It's been around, like you said, it's advertised on airports. The rest came in as newborns. So this is like comparing a grown person with a newborn, in my opinion. And I'm going to stick to the newborns that I will include GBTC because the fact that it traded 2 billion is alone massive. And get this, BITO has traded almost 2 billion, which will be a record day for it. And it's not even part of this race, really.
Well, speaking of the newborns, let's say there are 10 newborns out there, Eric. Not all newborns, at least as when it comes to trading volume, were created equally. I mean, it looks like there are some haves and have-nots when it comes to activity right now. Should we read into that?
Sure. Well, I'm definitely reading into it. I mean, this is basically a horse race. We've never had a bunch of ETFs lined up to launch on the same day, hence the Cointucky Derby phrasing we're using for this, and the horse race memes, which I've been drawing up all day instead of working. So if you look at BlackRock, they're going to be like a lead horse. And then next you got Fidelity, then you got ARCB, all them, and Bitwise, all them over 100 million. That's a monster success. You have 4 that I would call smash hits by any measure. Then you go the second half a little less. Franklin, 64 million, pretty good. HODL, 24, but we'll call those like, back of the pack. And then there's a couple below 10 million. And so just as I figured, at the end of the day, there's going to be one GLD stud liquidity, probably the BlackRock one. Then there's going to be like upper middle class. Then there'll be a middle class. Then there'll be like 1 or 2 poor people who like just didn't ever get it going. And ultimately, you will see some liquidations. So that's how it goes in any category. And it will probably go that way here.
Whoever said the investment world was fair. What's really funny.
You got to ask which one's Seabiscuit.
I'm just going to say, and Eric is amazing, but you definitely need to get sleep this weekend. All right, so Emily, come on in, because I do wonder if they're not all going to be the strongest players or get the most volume or activity or attract the most investors. Should we assume that there's going to have to be some consolidation later on, that a couple of funds are just not going to make it?
Yeah, I think there are some expectations. I was speaking with Athanasios Serafagis, who works with Eric, and he said that he might expect some of these to close, but we really have to see. And I think it's interesting because this is just the first day of trading. So like you had mentioned at the top of the hour, there are some brokerages that a lot of retail investors use, like Vanguard, like Merrill, where you can't even buy the funds yet, maybe not. Maybe you'll never be able to. We'll have to see if they change that rule. But this was really just, the institutional trading. So we could see more organic flows coming in the weeks, in the months ahead when these funds are actually added to more broker-dealers. I actually spoke to one financial advisor today who said, I want to buy this. I can't yet. It's not on my platform yet. But when it is added, I will be buying it. And then, of course, the actual flows we won't be able to see until at least tomorrow or beyond that.
So is the price of these funds, forgive me if I sound kind of stupid, but is it related to the price of Bitcoin? Is it related to the demand of the funds? Like, what is really driving the trade? Eric, let me throw that to you first. Like, what is it?
Yeah, so I think for advisors and people who are not like hardcore crypto people, they think this is a mission. All right, that's a whole different like mindset. Everyone else thinks this is a little hot sauce to put on an otherwise boring portfolio, 60-40, low cost. It's a beautiful thing, but they got to wait 30 years as these things compound. Compounding returns is the magic that we're all here for. But that's boring. You got to wait 30 years. So there's, I think, a growing hot sauce bucket in every portfolio. This is where Cathie Wood lives. Cathie Wood and Bitcoin have a lot in common.
Yeah.
This is a, what if they're right? And I don't want to kick myself in 10 years. That is what is going to get people to make a small allocation to this, even if they don't really understand it.
But just to confirm, Eric, it tracks the price of Bitcoin, and the price that we see has nothing to do with people buying or selling it. It has to do with the price of Bitcoin, right?
Well, yeah, they're intertwined. I mean, the price of Bitcoin moves as it does. Now the ETFs will be a player in the price of Bitcoin because if they get flows, that's a 1-for-1 buy for Bitcoin. Okay. So flows equal buy Bitcoin. Outflows equal sell Bitcoin. But there's many other things that are buying and selling Bitcoin. So if the ETFs make up, say, 2-3% of the Bitcoin market, that would be like around what it is for gold.
Last question, Emily, 25 seconds. So now what? Like, what do you, as someone who watches this, have to focus on?
I really want to see the flows. Maybe we'll get some tomorrow, depending on when these trades settle. But like, this is the trading volume that we got today. Tomorrow, we'll be able to start seeing which funds actually had net inflows, because trading volume doesn't tell you if it's buy or sell.
And is there a difference between kind of what the funds were kind of already planning to kind of have for the fund versus like kind of new organic interest, right? Will we get that distinction?
We'll see that. We'll see those net inflows or outflows tomorrow. Because like Grayscale Bitcoin Trust, there's a lot of trading volume. Might be some selling in there too.
You guys are amazing in the coverage. Bloomberg Intelligence Senior ETF Analyst Eric Balchunas, and of course Bloomberg News cross-asset reporter Emily Grafeo. Thank you guys.
Hey, let's get check the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Israel is facing accusations of genocide at the International Court of Justice in The Hague in the Netherlands. South Africa, led by President Ramaphosa, brought that case. It's urging the UN court to act to put an end to Israel's military campaign on Gaza, which has killed over 23,000 Palestinians. That's according to their health ministry. John Dugard is one of the lawyers representing South Africa in this case.
In announcing this decision, President Ramaphosa publicly expressed his abhorrence for what is happening right now in Gaza, which is now turned into a concentration camp where genocide is taking place.
Ahead of the case, Israeli Prime Minister Benjamin Netanyahu said Israel was fighting Hamas, not the Palestinian population, and that they are acting in full compliance with international law. Israel will present its defense tomorrow. Iran is in possession of an oil tanker carrying Iraqi crude oil that was heading for Turkey. Iranian state media reports it's retaliation for the confiscation of this same oil tanker by the U.S. last year. This all comes after weeks of attacks by the Iran-backed Houthi militias that have been targeting shipping routes in the Red Sea. Congress is facing another looming government shutdown deadline. Senate Majority Leader Chuck Schumer today said he's aiming to pass a short-term funding extension next week.
It has become crystal clear that it will take more than a week to finish the appropriations process. So today, I am taking the first procedural step for the Senate to pass a temporary extension of government funding so the government does not shut down on January the 19th.
Global news 24 hours a day, whenever you want it, with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board. We begin with a developing story headline right off of the Bloomberg Professional Service. Tesla is going to be halting most Berlin site output on the Red Sea conflict. That, according to Reuters, the news service says most Tesla Berlin output will be halted between January 29th and February 11th. Red on the screen, it is a down Thursday, a CPI Thursday, a Bitcoin Thursday. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks have pared their losses, helped by the two-year yield falling to 4.27%. The Dow is currently down 14 points. S&P's drop 8, while the Nasdaq declines by 15. The U.S. 10-year yield at 3.98%. Gold is little changed. Oil is in the green. But Bitcoin had a wild ride today, which rose as much as 6.7%. Is now higher by just 1%. Among the main 11 S&P sectors, only tech and energy were in the green. Utilities and real estate were under pressure. And leaders to the upside in the Dow, Salesforce and Nike, while Verizon led to the downside. In deal news, Novartis has backed away from pursuit of Cytokinetics. And in Europe, Lagarde said the ECB is likely at peak rates. In the telecom space, the EPA called AT&T and Verizon executives to Washington to discuss lead cables, sending those stocks down intraday. And wrapping things up, the banks kick off earnings season tomorrow. JP Morgan, Wells Fargo, Citigroup, and Bank of America all report in the pre-market. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. We got you covered on those bank earnings. Yes, count on Bloomberg Radio to shine tomorrow morning. And by the way, to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just got about 17 and a half minutes left in today's trading session. Bit of a volatile one, as we know. Dealing with some economic news, dealing with just kind of where we go next year.
Yeah.
In terms of Fed policy, the economy. Yeah.
And you know what?
What?
Looking through our next guest investments, thoughts and changes. Did you see anything on spot Bitcoin ETFs?
You know, I did not.
Okay, that's okay. We got some
Probably
fixed
not
income. We got some equities. Let's get to our drive to the close with Samir Samana, Senior Global Market Strategist at Wells Fargo Investment Institute, joining us on Zoom from Charlotte, North Carolina. Samir, good to have you with us. I know you did not send us any thoughts on the new spot Bitcoin ETFs, but can we just start there? And because it's what everyone's talking about today and yesterday. Do you have any thoughts on this new asset class being available through ETFs?
You know, big picture, we've talked about how crypto and especially Bitcoin, have kind of matured over time and probably do have some, allocation within a well-diversified portfolio. And I guess, having it be a little bit easier to implement probably isn't a bad idea. I think that being said, this has been so well telegraphed and the price is, close to almost doubled over the past 6, to 8 months that, probably be a little bit cautious with respect to kind of timing and adding that allocation over time. But I think more broadly, I think it just speaks to how much momentum, positive sentiment there is in these markets right now.
Yeah, it is kind of interesting. I mean, are you fielding a lot of questions though, Samir, about people like, hey, Samir, how do you feel about this, new round of ETFs, if you will, spot Bitcoin ETFs? Like, should we have some exposure to them? Because as our Eric Balchunas said, like, what if these guys are right, that this becomes something significant in our world in terms of Bitcoin more broadly?
Yeah, I mean, thankfully, we've been talking about this for a few years now, and, there have been other ways to gain exposure to the asset class. So, hopefully, this is one of those things where at least, some of our clients have had a chance to kind of get exposure through those, other means. I think that being said, it is good to kind of maybe have that vehicle available going forward. But again, I think the tricky part is just it's just so overdone right now that, people probably fall in one of two camps. Either they probably are kind of more on the savvier cutting edge and maybe have already figured out how to do it, or they probably don't fully understand what Bitcoin and crypto are, and they're probably going to be much more hesitant. So I get the sense that those who want to be in are probably in at this point.
Yeah, you make a really good point. Hey, I just want to get your take on, take a step back and just think about the global economy. We got inflation data that came in a little hotter than expected this morning. Surprising to me, Carol, that we didn't see more of a move when it came to yields, given that inflation data was a little hot. But as Mike McKee and Yelena Shuleyeva
We did
pointed out,
pop like on the news a little bit.
did, but
Like
it didn't hold, right?
No, it did not hold.
Yeah,
we backed off.
and that was a little surprising to me. But like they said, things are moving in the right direction. Samir, I mean, does it make you think differently at all about asset allocations or your outlook for global fixed income, given that, investors think and they've priced in a series of rate cuts this year, and it seems like this last mile of inflation is going to be a bit tougher to get down?
Yeah, I mean, I think it'd be fair to say that at least the long end of the Treasury rates curve is probably priced for perfection. I mean, we literally just this week rolled out an alert, downgrading long-term fixed income from most favorable all the way back down to neutral. We've kind of gone, to that favorable positioning around 4.25 and kind of stuck with it throughout kind of that move up to 5% on the 10-year. And then this recent move lower just left us scratching our heads with respect to, again, to your point, that last mile inflation will be very difficult. Real rates as measured by current inflation relative to the 10-year is still pretty, net kind of low, right? You're not really getting compensated on that long end to take the risk if inflation is going to kind of get stuck in this 3 to 4% range, depending on which figure you're looking at. So from our standpoint, again, this is a great time to maybe park out in the short end, but we probably wouldn't be taking a lot of risk on the long-term end of the curve.
Yeah, it does make sense, right? We're getting much more clarity when it comes to expected monetary policy. We know it's tricky as we get near the end of this cycle for the Fed to get it exactly right and not overdo it. But it does feel like we have a lot more viewership, if you will, or view when it comes to the short term. Having said that, on the equity side of things, Samir, I'm looking at the 11 major industry groups in the S&P 500 this year, and energy is the second worst performing. It's down about 2.5%. We've seen a lot of consolidation, a lot of deals happening in this space. You guys are upgrading the energy sector from neutral to favorable. Let's start there. How come?
Yeah, so that same alert, we upgraded energy and we downgraded financials. Happy to speak to both. On the energy front, I mean, look, if the market's going to run on soft landing, right? If the Fed has somehow engineered this, which maybe we're a little skeptical, but let's say they actually have engineered this. Well, in that scenario, I can't imagine oil sticks in the low 70s, which is pretty much where it is right now. I can't imagine that you don't have at least some additional profitability on the energy equity side. And so this soft landing narrative has pretty much left energy kind of by the wayside. And honestly, if there is a little bit of an economic, stumble, we think that, energy prices and crude prices probably already reflect, what could be kind of a mild to moderate recession anyway. So, for all those different reasons, we saw probably as close to a free lunch based on valuations, based on this narrative that's kind of taken hold and just the relative performance.
Why are you skeptical that the Fed can pull off a soft landing?
Just because it takes, so much in terms of being able to judge the lags. I think there's a lot that, we're seeing right now with respect to the consumer hitting in their pocket. I just read a headline today on Bloomberg talking about how delinquencies are rising on credit cards. So, when you take all those different things into account, and the fact that, a lot of people, for whatever reason, either they're not selling their homes or they're not moving or they're not taking out new loans, have been able to avoid those higher interest rates. The problem is eventually you will have to buy a new car, buy a new home, move, all those different things. And when you do, there's a pretty good chance that you're going to be paying a rate that's maybe 2 to 3x what you last paid.
All right, going to leave it on that note. Hey, Samir, thank you so much. Samir Samana, Senior Global Market Strategist at Wells Fargo Investment Institute on Zoom from Charlotte, North Carolina. He mentioned those credit card delinquency. The rates have exceeded pre-pandemic levels, while the share of borrowers making only the minimum payment climbed above 10% for the first time since 2019. This is according to a Federal Reserve Bank of Philadelphia report. So, yeah, that can be very troubling.
That's why we're going to wait to hear from the big banks, including Bank of America, tomorrow about what they're seeing when it comes to loan loss provisions and charge-offs from credit cards.
Yeah, it's a big one. All right, guys, we and gals and all living
Everyone.
things. All living things. We're about 10 minutes away from the closing bell. Carol Master, Tim Stanovic. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. The Dow just turning higher. S&P, NASDAQ, they do remain lower. Vanguard's brokerage arm will not be offering ETFs, not trading in ETFs. It invests directly in Bitcoin. That according to a spokesperson. Meanwhile, Bank of America's Merrill Edge says it is still evaluating whether to provide that service. That according to a source. The first American ETFs that directly hold Bitcoin off to a strong start. Billions of dollars changing hands in a historic first day of trading for the long-sought investment vehicles. First day out for a number of spot Bitcoin ETFs. Trading started earlier today. Anastasia Amoroso is chief investment strategist at iCapital.
I don't know about buying it today, but yes, I do think that investors should consider buying a small portion of Bitcoin to the portfolio. I mean, the news that we got today is really groundbreaking in terms of really legitimizing Bitcoin as an asset class. It is a volatile one. It is really a tech asset class. I kind of group that with the unprofitable tech, but nevertheless, there could be a significant return potential.
And you can hear more of that conversation on the Talks podcast. You can download it wherever you get your podcast. Bitcoin right now up 0.8%, 46,317 on Bitcoin. American aviation regulators have opened a formal investigation of Boeing following last week's accident on one of its passenger jets, escalating a crisis of confidence that is unfolding at the plane maker. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 4 minutes left in today's trading session, getting ready to wrap up on this Thursday. We got to talk a little bit more about that story that Samir just mentioned. I think it's interesting when it comes to credit card delinquency rates.
Yeah, it's the most read story on the Bloomberg terminal in the last hour. Credit card delinquency rates have exceeded pre-pandemic levels, while the share of borrowers making only the minimum payment climbed above 10% for the first time since 2019. This according to a Federal Reserve Bank of Philadelphia report, Carol. Almost 3.2% of card balances were at least 30 days past due as of the end of September.
All right, so this is from the Philly Fed, and that, okay, percentage means nothing right until we give it context. So that's the highest figure in more than a decade, and it is up by over 40 basis points from the previous quarter. The share of debts that are 60 and 90 days late also jumping. Greater consumer fatigue or fragility is, I guess, what they are saying, the Philly Fed. Responding to the signs of greater consumer fragility, banks are granting fewer credit line increases and reducing limits more frequently. Its data covers loans by large banks with at least $100 billion of assets. Guess what we're going to be asking?
Connection lost.
JPM, BAC, all of them.
Yeah, tomorrow we're going to start to get, as they kick off earnings season, that's
Look at
the
those
thing
charts,
to listen
right?
to. Yeah, so the numbers point to pressure on U.S. household finances after a post-pandemic surge in the cost of living that wasn't always matched by higher incomes. So about 10% of credit card borrowers now have an account balance that exceeds $5,000. That's according to the Philadelphia Fed. And at interest rates this high,
yeah,
what happens each month when you're not paying that off or only paying the minimum balance?
Yeah, exactly, right? It continues to build. It's also, you've got to pay more as those rates have gone up, and that means that's less that you've got to spend on other things, or you start to feel crunched. And we talked about that at the same time. Banks are cutting borrowing limits, which means that consumers are tending to use more of their existing credit lines. This study found roughly 1 in 10 card users has a balance that reaches 95% of their limit, and a similar share only makes the minimum payment every month, the most since 2019. I know we're repeating some of this stuff, but it's, I think, a big deal.
I think it's a really big deal. And, Samir Samana just brought it up, and he said this was one of the concerns that he has about the economy.
Most read, as you said, on the Bloomberg in the past 60 minutes, so definitely catching people's attention. Also catching people's attention on this Thursday is those spot Bitcoin ETFs. They are definitely trading, and it's interesting to see. We'll get more information tomorrow when it comes to the flows. Right now, though, we're going to talk about the trade overall with our TV colleagues. That's because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help us take us beyond the bell. It's a global simulcast with our friends Carol Massar and Tim Stenovic. Welcome to our audiences across all of our Bloomberg platforms on this Thursday afternoon. A mixed day here for stocks, a bid coming into treasuries, and wow, an incredible day in terms of volume and volatility for the crypto space.
Yeah, absolutely. And maybe no surprise, right? When it comes to the crypto space, we see volatility. I don't know if you guys saw this, though. The most read story on the Bloomberg, it just crossed a little while ago. Credit card delinquency rates have exceeded pre-pandemic levels. This is from the Philly Fed, so it's interesting. We continue to see signs that consumers are definitely feeling some stress here.
Okay, Bank of America, Wells Fargo, JP Morgan, Citi, all reporting tomorrow morning. You guys know this. I beat this drum every quarter. What I want to hear from these companies is how consumers are doing, the cash that they have in their accounts, what they're doing on their credit cards, and if those delinquencies are rising.
Yeah, and all of that is driven by this perception that things are not necessarily getting less expensive. The CPI report today was hotter than expected. My favorite quote that I read today was, "It was not great news for stocks, but it might not be fatal either," which kind of explains the price action too.
Yeah, it'll be interesting too. I mean, I assume you're referring to that Philly Fed report.
Yes.
And I thought it was interesting too because, I mean, every time we bring up that increase in delinquencies, we always have all these people come on the program and they talk about this ratio isn't as high as it would have been during the financial crisis, and even delinquencies are higher. It's not necessarily across the board for consumers. So it's always hard to know whether this increase in delinquencies, this increase in credit card balances is something to really get scared about.
No, it's absolutely, and hopefully the banks can give us some clues as to whether or not they are concerned about what consumers are having to deal with in terms of their own personal debt.
Yeah, and we're going to talk a little bit more about that as we do get those earnings kicking off tomorrow morning. As for today, a relatively muted day for U.S. equities. And wow, take a look at, for those folks watching on television now, those percentage changes on the day, it's basically unch across the board. The Dow Jones Industrial Average higher by 15 points, so it's in the green. That's a uptick of less than 0.1%. The S&P 500 lower by less than 0.1%. The NASDAQ basically unchanged on the day because it's just such a small margin. You can't even calculate it on a statistical basis. A little bit more activity when it comes to the price action in the Russell 2000. That did close lower, more meaningfully, 15 points lower, 0.7%.
Yeah, unchanged. But if you look at the S&P 500, I mean, not huge, but about a 1.2% gain from peak to trough, if you will. And if you look at the S&P 500, Scarlett, you've got about 216 names to the upside, 284 downside, and 3 unchanged.
And just real quickly, too, I think it's interesting, too, because we came into this morning, one of the big meetings we had here at Bloomberg, we were talking about this run back to a record high for the S&P 500. And every day it seems like it's going to get there, and then you sort of bump up into this resistance.
Can I tell you what the S&P has done so far this year? Anyone want to take a guess without looking at the terminal?
I'm going to say unchanged.
Up 0.2%.
It's in the green.
Wow.
So unchanged.
Gotta go check my 401k tonight.
I know. Well, the Dow is up 0.06%. How about that? All right, let's take a look at the sector
They have one of those
performers.
steaks, one of those Zuckerberg steaks, with the, what was it, macadamia nuts and beer?
Yeah, that sounds kind of good right now. All right, let's talk about the best performing and worst performing groups here. Consumer durable and apparel up 0.9%. Software services and chip companies each gaining at least 2/3%. On the downside, telecom losing more than 2.5%. Autos, that's really Tesla dragging that group lower, down by 2.5%. Utilities also in the red.
All right, guys, let's get to some of the individual gainers in today's session. Netflix, number 1 in the S&P 500, number 2 in the NASDAQ 100, finishing with a gain of just shy of 3%, but off its highs of about 5.25% earlier in this session. What happened was you also saw this options calls also surging to about $500. It was led by $500, I should say, $500 calls. So Netflix, $492 and change, finishing the day. A note from Citigroup out, citing optimism about the company's ad-supported subscriber tier, saying a recent update from the company, which I believe happened at CES earlier this week, suggests Netflix's ad tier has seen an acceleration in adoption, right, Citi? So putting that out. They've got a neutral rating and a price target of 500, so we're almost there when it comes to Netflix.
Are you on that Netflix ad on the advertising tier, or you actually pay?
No, I pay.
I think we pay.
Yeah.
Well, you'd see ads if you didn't. What about, do you guys? Any of you guys do ads?
Too many out there.
No. I just pay for not have ads.
It's kind of frustrating.
Yeah.
We've gotten spoiled. All right, so let's move along. The number 3 gainer in the S&P 500, also among the top gainers in the NASDAQ 100, Palo Alto Networks, again, moving up to its highest level since July of 2012. You might remember yesterday, Morgan and Citi both raising their price targets on the stock, so that one finishing with a gain of about 2.3%. Marvel Technology up in a top name, number 1 gainer in the NASDAQ 100. Semiconductor, as we know, B of A raising its price target to 80 from 68. Maintaining a buy rating, telling investors that the firm's discussions with NVIDIA and Marvell were very positive at CES, so they were talking about 2 different companies, but so they kind of liked what they heard. So Marvell, an outperformer. And I just want to throw in Hashdex Bitcoin Futures ETF, DeFi. That one is actually higher on the day, about 2.5% to the upside. Just thought I'd throw in one of those names.
You had to do a little bit.
We've been looking
Bitcoin.
at them.
Yeah, 1 of 11, right?
Yeah.
One of 11.
What's the year to date gain, Carol?
Very funny. You're funny today.
Oh, thank you. Just today.
Just today.
Hey, let's look at some of the decliners here.
Uh-oh. I think I'm not feeling well. I'll let my bosses know.
Okay. Let's start with Tesla. You heard Scarlett mention this as one of the drags in the S&P 500 today. Down 2.9% on the day. A couple of big news items relating to Tesla worth keeping an eye on. The latest, that Tesla will halt most car production at its factory near Berlin. That's happening later this month and into February due to a lack of components over supply chain issues related to the conflict into the Red Sea. The other big story that sent shares lower this morning was that Tesla is boosting pay for its U.S. plant workers. This according to a flyer posted at Tesla's facility in California that our colleagues here at Bloomberg News saw. We don't know how much of a raise workers will get, though it did say they'd get a, quote, market adjustment pay increases. Just the latest bump in a non-union automaker here in the U.S. and one that the UAW is trying to unionize. Also, we learned in a filing this morning, we were talking about Hertz earlier, that they're planning to sell 20,000 EVs, many of which are Teslas, and shift back to those gas-powered cars. Tesla finishing down by 2.9%. Hertz, by the way, falling 4.3%. And then sticking with transportation, let's look at Boeing as we continue to monitor the fallout from the near calamity last Friday on that Alaska Airlines 737 MAX 9. Boeing down 2.3% today. The latest is that the FAA opened a formal investigation into Boeing and said the company's, quote, manufacturing practices need to comply with the high safety standards they're legally accountable to meet. And I will end with crypto and look at shares of Coinbase, which actually reversed earlier gains to fall 6.7% today. There is debate over the effect that the ETF approval will actually have on Coinbase. Some analysts say that it will be a net positive for Coinbase because they're custodians for some of the ETFs that hold Bitcoin. Other analysts say, well, it's actually a net negative for Coinbase because if you can buy Bitcoin so easily using these ETFs, then you don't have to pay the fees that Coinbase actually charges you when you buy that Bitcoin and other crypto on Coinbase. Shares falling 6.7% today. We should note that Coinbase shares were up nearly 400% last year, by the way. So take this move with a grain of salt.
Yeah, I do wonder how much of this was kind of sold in news. We should point out, like Marathon Digital ended the day down about 13%. Riot was down 16%. Hive was
But what about
down
that reversal
8%,
that we saw?
And back was
That
down
was
about
weird.
10. I think, who knows? But I do think that some of this is just kind of the repositioning. You had so many people that were trying to front run this announcement by the SEC. Maybe some of those people cashed out and new people cashing in, and well, we'll see what happens over the next few days. Let's check in on what's going on in the yield space here. We did actually see some activity there here. A shift in the yield curve once again here as we continue to see it, but this time is to the downside. 9 basis points on that 2-year yield, and that you can definitely thank that CPI report that we got this morning here for that move, as now a lot of people are having to really rethink their rate expectations as it came in, I guess you can call it hot, if you will. It was higher than, I guess, what economists expected, not necessarily too outsized. All right, guys. Tomorrow starts earnings season officially.
Finally.
I don't know how you're going to celebrate. I'm going to celebrate by taking the day off, but we do get some big
With
names,
macadamia
including
nuts
J.P.
in
Morgan, Bank of America, Citi, BlackRock, Wells Fargo. I don't know if you have Delta, United Health, a bunch.
Yeah, it's been a long week already. I mean, we've had some pretty big data points, right? Whether it's CPI, whether it's the start of the Bitcoin ETF, the approval of Bitcoin ETFs, and then the start of trading for them, and now bank earnings as well. I was going to throw in the 30-year Treasury auction, but that didn't actually really move things today.
Yeah. Well, I'm just looking at the bank stocks that are going to report tomorrow. I mean, Bank of America ended down about 1.3%. J.P. Morgan was down about 0.5%. Wells Fargo pretty much unchanged, and the KBW was down about 1% here. So looking forward to this. I think this is going to be hopefully, some clarity, some outlooks from some of the CEOs, and get an idea of kind of maybe we get some helpful information in terms of where the Fed goes.
Yeah,
from here.
well, so that's what I want to hear is, as I mentioned, what these companies and what these banks, Carlette, say about, credit cards and how much cash consumers have. But I also want to know about wages and to what extent they're paying their employees more. And I'm not talking about, the investment bankers at these companies. I'm talking about the people who work on the ground in the banks. And if they're having to raise prices to attract and retain employees, if they're still doing labor hoarding, what that looks like, because that'll give us a good idea of the labor market and if it's changed significantly.
No, that's a really good point, although you'll have to get commentary on that, because if you just look at the numbers in the earnings statement, it's going to reflect all the pay for the investment bankers.
Exactly.
So you don't get a good picture of that.
And I don't get a question on the call
I'm a
either.
little
That's the
confused.
problem.
Why is Tim dissing the investment bankers? They are the salt of the earth for these.
When you look at the averages, we call those outliers, Romain.
Hey, on a serious note, though, I mean, how many people have we spoken to, economists, about the jobs data that basically says that while you are seeing tightness now in the market, people aren't necessarily laying off people or cutting things. They're just not hiring as much as they were, which is actually a good thing.
Right, not laying off, labor hoarding, but for those who do get laid off, it's taking them a little bit longer to get a job on the other side. So, all right, guys, that's a wrap. Looking forward to what Friday may bring from Romain and Scarlett.
Romain's off tomorrow.
Oh, you are?
Romain's going to meet with Macadamia nuts.
Romain.
Oh,
yeah, Zuck invited me out to his Hawaiian island there.
Oh,
man, you're just living the life.
It's a long flight, but enjoy.
All
Mary
right.
Ellison.
Be careful.
Have fun.
Don't eat too much.
Take some pictures, post on social media.
Let us know what the bunker really looks like.
I will.
All right, we will see you. Some of us will see you tomorrow. That's a wrap for our cross-platform radio, TV, YouTube, Bloomberg Originals. We'll see you guys tomorrow. All right, everybody. We've been talking a lot about this, right? In terms of what's going on in the EV market.
Yeah, it feels to be like a rollback in the ramp up to EVs. Shares of Hertz selling off, falling as much as 6.5% today, before they ended up closing down just about 4.3%. This after the company said in a filing that it plans to sell a third of its U.S. EV fleet, Carol, and reinvest in gas-powered cars due to weak demand and high repair costs for its battery-powered options.
Right. It's a sharp reversal from just a couple of years ago. And remember, everybody, in 2021, Hertz said it would buy 100,000 Teslas to electrify its rental car fleet.
We broke that news here.
We did. And it made all of us be like, oh, wow, this is really happening. That news back in 2021, by the way, sent Tesla's market cap over $1 trillion for the first time. It really was kind of a watermark, if you will.
Things have changed quite a bit, though. Tesla now at a market cap of around $720 billion, give or take a few bill here or there. Car companies are scaling back their EV plans. So we bring in a voice that we've gone to over and over again to understand just what exactly is going on when it comes to the shift, or lack thereof, to EVs. It's Bloomberg News auto reporter Keith Naughton. He joins us on Zoom from Detroit. Keith, I got to tell you, I was so surprised to hear this early this morning, thanks to a filing that Hertz filed, because I thought Hertz was the company that was shifting its fleet to EVs. What are your thoughts?
They made a try at shifting their fleet to EVs, and their CEO said they got ahead of themselves. As it turns out, again, like with the purchase situation, consumers weren't as interested in them as the companies thought they would be. So if they're a hard sell to car buyers, they've proven to be a hard rent to car renters.
You know, I was wondering too, Keith, I mean, are we going to start to see, because there's kind of maybe a supply glut, if you will, of EVs, that these prices start to come down? If you've got Hertz selling, I mean, one of the things that certainly has been, I feel like for us personally, my family, that they've just been expensive. And I know Tesla's been cutting prices, I get it. But I do wonder, are we seeing a lot more supply of people just trying to get rid of them, and that we'll start to see lower prices?
Well, that will certainly be the case as, Hertz sells off a third of its fleet. And all those Tesla price cuts were also hurting Hertz's balance sheet as well, because those were assets they had on the balance sheet that kept reducing in value because Elon was cutting prices to try to stimulate demand. It's kind of a vicious cycle.
Can I tell you guys a story?
Please.
Okay. So last Christmas was the Christmas of 2022, the huge blizzard on the East Coast that shut down the Buffalo airport and grounded so many different Southwest flights. You remember this, right? It was a catastrophe.
Right.
A good family friend of ours was trying to get from the Washington, D.C. area up to Massachusetts near Boston. And their flight was canceled, but they needed to get up there. They went to rent a car, and they ended up with an EV. And we said, don't do it. It's in this cold weather, it is going to be so difficult to do this. They said, this is the only option we have. We're going to do it. Carol, Keith, it took them days to drive from DC to Boston. God. It was because of the cold weather. It was because of charger availability. Keith, this doesn't surprise you, does it?
No, not a bit. In fact, my daughter, who's also an automotive journalist, has a story out this week about renting a Tesla from Hertz and also encountered several difficulties, including getting it charged up here in cold Michigan. So that's the thing that, particularly in the rent scenario, think about that. If you own one, you know, you can charge it up in your garage or you know where all the chargers are in your neighborhood. But if you're in a town you've never been in before and you get an electric vehicle, where's the charging station? And will I have chargers at my hotel? I don't know.
Keith,
so, you know,
yeah. Sorry, explain the cold part a little bit here and the way that the cold weather deteriorates the battery.
Yeah, it just depletes the charge. I mean, you can see that in your iPhones if you go to cold places as well. You know, cold weather just sucks juice out of your battery and you can go to bed at night. I've had this experience with your car charged, you know, at 80%. And if it's below freezing outside and you come back in the morning, you could have lost 20, 30% of your charge just because of the cold.
Not to mention, when you're driving it, you also have the heat blasting, which ends up using more of the energy as well. So you're not going as far, Carol, based on a charge.
Houston, we've got a problem. So in this story, though, Keith, includes that going forward, it talks about Hertz is going to obviously watch demand at its dealerships, but it says its agreement to buy 175,000 EVs from GM over the next 4 years and another 65,000 from Polestar may take much longer to complete. So they're going to still do it. It's just the time frame has changed.
Right. My colleague David Welch spoke with Hertz's CEO today, and the Hertz CEO is very interested in the sort of lower priced EVs that GM in particular has coming. You know, GM is going to redo the Bolt, which is their $30,000 EV that just went out of production. They're going to do a new one. They also have a Chevy Equinox SUV that's coming that should be more affordably priced. So, you know, Hertz is looking at that. But one thing that you shouldn't minimize is also the repair cost factor. What Hertz is saying is that EVs are twice as costly to repair as their internal combustion engine cars. This was eating into margins significantly and eating into cash flow. So that's another reason they're trying to back away from the EV business.
It's so funny that you say that because I remember I think the first time that, or the last time that we talked to you and this came up too, and Tim and I, right in the newsroom, we were like, why aren't we hearing a little bit more about the repair issues?
Well, you know, Matthew Prince, who's the CEO of Cloudflare, he was tweeting over the last couple of weeks. Keith, I don't know if you saw this, but he was complaining about how expensive his Rivian and this is CEO of a publicly traded company, by the way, so he can afford it.
Yeah.
He's got a Rivian, and he was complaining on Twitter about how out of control it was to explain. I think it was the rear windshield window. And Keith, he said it was thousands of dollars to replace because it was connected to some camera or sensor. I mean, explain why these things cost so much to fix.
Well, there's a few reasons. One of them is the technology. It's leading edge technology that hasn't reached wide sales volume yet. So those parts are going to be more costly. Another factor is the battery itself. For safety reasons, because of the risk of a fire with those big lithium-ion batteries, those high-voltage batteries that power these cars, you need to, at a minimum, drain all the juice out of them and disconnect them before you do a repair. But if you're going to weld the car, if you're going to put the car through a hot paint shop to give it a new paint job, then you have to take the battery out entirely. That adds labor and cost, and that drives up repair costs.
$4,200, according to Matthew Prince, Cloudflare CEO. That's the quote that he got to replace a cracked rear windshield on his electric Rivian, that goes without saying, his Rivian truck. That's a lot of money.
Yeah, that's a lot of money. Hey, anything in terms of Hertz? You guys have done some great reporting on, about hybrids that have taken off this year. Is Hertz thinking, well, maybe we bring some hybrids into the fleet?
Yeah, they have hybrids in the fleet, and hybrids, are, a good alternative because you're never going to run out of juice because the juice can also be gasoline. But they are, reducing your carbon footprint. So you get a little bit of the best of both worlds.
Hey, Keith, just 20 seconds. You're not writing off EVs, are you?
No. Oh, no. I mean, EVs are still going to grow at a faster rate than the overall market this year. It's just much slower. than the automakers expected.
Yeah, we talked about like it's just timing. Timing is changing. Hey, Bloomberg News auto reporter Keith Naughton, thank you always.
He's the best of both worlds.
He really is the best of all worlds.
Yeah.
He's joining us on Zoom from Detroit. I just love it. Just straight to the point, great reporting, just so much fun. All right, folks, this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:20 on Wall Street. We do check markets all day long here at Bloomberg. A volatile day on Wall Street. CPI Thursday, Bitcoin Thursday. We had the Dow Jones Industrial Average holding on to a 15-point gain today, up by about 0.1%. S&P lower by 3, little change there, down by about 0.1%. NASDAQ up barely, up 0.5 point today, little change. NASDAQ 100 index full of big tech stocks up today by 0.2%. 10-year yield 3.97%. The 2-year 4.25%. Spot gold up $4 the ounce to $2,048, up by about 0.2%. And West Texas Intermediate crude up 1.8%, $72.64 a barrel. Bitcoin up today by 1%. at 46,409 on Bitcoin. Next stop for Wall Street, bank earnings. We got you covered. Tomorrow morning, we'll be hearing from the likes of JP Morgan Chase, Citigroup, Wells Fargo, and Bank of America. JP Morgan Chase down 0.4%, Citigroup down 1.8%, Wells Fargo down today by 0.1%, and Bank of America down 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, so appreciate it. Charlie Pellet there with the latest on the world of business and markets. Hey, here is something sobering. Every day, more than 120 people in the U.S. are killed with guns. Twice as many are shot and wounded, and countless others, Tim, are impacted by acts of gun violence.
I got some even more disturbing numbers for you. Since 2015, over 19,000 people have been shot and wounded or killed in mass shootings. In 2022 alone, over 600 people were killed, with over 2,700 wounded. Both the number of mass shooting incidents and the number of people shot in them have increased since 2015, reaching a high of 686 mass shooting incidents. Carol, that was just in 2021.
Yeah, we see them all the time, it feels like. It's a problem. It's an old one, and it's one watched by the Johns Hopkins Bloomberg School of Public Health. Their latest thoughts in a new report, Defending Democracy, Addressing the Dangers of Armed Insurrection. With more on it is Joshua Horowitz. He's co-director of the Center for Gun Violence Solutions at Hopkins, the Johns Hopkins Bloomberg School of Public Health. He's on Zoom from Baltimore. And a reminder that the school is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Mike Bloomberg, by the way, also a donor to groups that support gun control, including one that he helped launch, Every Town for Gun Safety. Joshua, nice to have you here with us. Again, the problem does not go away. Talk to us about the report, though, and how you guys wanted to look into it and research it, especially as we are, counting down to another presidential election here with a matchup between two candidates that have met up before.
Yeah, thanks for having me. I really appreciate you guys covering this topic. And as you mentioned, gun violence, in 2021 and 22 has certainly been on the rise. We have seen some reductions in 2023, but it's uneven and not across the board everywhere. So it's still a gigantic problem, a gigantic public health problem, which is one of the reasons that we're so passionate about this. But in this new report, there's been a lot of proliferation of firearms, especially assault weapons, AR-15s, a lot more open carry and concealed carry in this country. And not surprising, that's bleeding over into our politics, into our democratic process. And what we're trying to do in this report is to give policymakers and executives tools to make sure that the voting places are safe, that our legislatures are safe, and that our democracy is safeguarded from people who are trying to threaten that with firearms. So that's what this approach is about. We have a number of recommendations in this report, including limiting carry of open carry of firearms and concealed carry, making sure that we further regulate paramilitary activity, limiting firearms in polling places and legislatures, and making sure that we use all the tools at our disposal, that when we know someone's in danger, someone's threatening an elected official, threatening the democratic process, that we use some of these new extreme risk laws or red flag laws that states have passed to make sure that we prevent armed political violence.
I'm sorry, are we talking about the United States here?
We are talking about
because it doesn't sound like we are, I have to tell you. I cannot believe we're talking about this.
Tim mouthed to me while you were talking, right? I can't believe we're doing this.
This is not normal, Joshua, that we're talking about people being the concern about people being threatened by gun violence when they're exercising their democratic right to vote.
Look, I don't want to remind us that Gabby Giffords was obviously almost killed while exercising her right to meet with her constituents. We have seen armed political violence at state capitals. We've seen armed political violence in Charlottesville, the Unite the Right rally. And obviously, in January 6th, we saw a violent insurrection at the Capitol. Now, fortunately, D.C. actually has some good laws, some of the laws that we're recommending. But, in these other states, some of these other states don't have it. And there's been lots of incidents of voter intimidation. So we need to jealously guard our democracy. And you're right. It's hard to believe we're talking about the United States, but it is something that we must prepare for.
So in this research, you also have a stat, half of those surveyed and it refers to, I guess, some of the research that was done, agreed at least somewhat that in the next few years there will be civil war in the United States. About 2% of the respondents in that same study thought violence was at least somewhat justified, and to achieve a wide array of political objectives, reported being very or completely willing to kill someone to advance an important political objective. I mean, I'm not sure I understand how we got here. But I feel like in talking with our Josh Green, we have talked a lot about the political divisiveness and the rise of populism on both sides that maybe helped us here coming off of the financial crisis. Having said that, I feel like there's no will to kind of de-arm or unarm the United States.
Well, I think we got here, I think because we've really allowed a really ridiculous interpretation of the Second Amendment, where there's, even elected officials talk about the individual right to fight government tyranny, and we have to combat that. The Second Amendment is about the individual right to serve in an armed militia under state control. It has nothing to do with individual rights to take up arms against the government. So I think that's number one. But number two, states are doing things about this. More states need to do that. But we've seen recently Virginia and Colorado take strong action to protect their legislatures, their polling places, and what we're getting across here is that we need to do that in every state. Because there's no reason people should be intimidated to go into the polls. There's no reason that you should have to walk through an armed gauntlet to go lobby your legislature or get exercise your First Amendment rights. So we're out of balance here in the United States, and it's hurting our democracy.
Well, I just want to try to understand the argument for why people should take guns to these places. What have you heard in terms of pushback when you've tried to work with these legislatures in different states to enact rules about this? I mean, what do they say if they don't agree with you?
Well, I have a lot of experience in Virginia because I've spent 20 years working in that state capital, and for 18 of those, we had to contend with people who are armed within our hearing. When we were at a hearing, there were people who were armed in the hearing rooms. Through the halls of the legislature and in polling places. And, they make an argument, well, look, I have a right to carry a gun wherever I want to be safe. And my point is, well, you're in the state capitol, there are law enforcement all over the place. And what you're doing is really intimidating other people from exercising their votes and exercising their rights. So it's a mix between, I just want to exercise my right, which I don't buy at all. And the second thing is I need to have a firearm with me at all times for self-defense, which I don't buy either, especially in those locations. So I'm not sure it's a rational argument. I think it's a much more emotional argument. But again, we have elected officials in this country who are giving cover to that type of idea, right? I mean, during the inauguration in 2000, Ted Cruz wore a mask that said, "Come and take it." That's a militia slogan. Right? That's what they often say in Latin, mulan labe, come and take it. So we have elected officials at the highest levels giving cover to this. And, in addition to all the things we need to do from a policy perspective, we must condemn this idea.
Joshua, I feel like folks who are listening or watching right now are like, yeah, we've been talking about this for a long time. They know that, something happens, we get a headline, everybody reads it and moves on, unless they are, impacted personally. What do you say to the public at large about this situation, which has been going on for years now, right? And as you say, some states are making progress, but what would you say to the public at large about this situation and maybe what needs to be done or how they should be thinking about it?
Number one, wake up. I mean, I wrote a book about this in 2009, warning people that this was going to happen. And people said, oh, no, that will never happen. And then we have an insurrection at the Capitol, right? And so what I'm asking, instead of just saying, oh, yeah, go to the next headline, this is an opportunity to talk to your state legislators, to talk to your policymakers, to make your voice heard and saying, I want the right to vote. I want the right to petition and talk to my legislators without the threat of armed insurrection. And we need to be able to articulate why this matters and what needs to get done. And I encourage people to read our report, Defending Democracy. It's on our website to give you all the tools you need to have a cogent argument about this. So if you're sick of it and you're sick of seeing it, get off the couch, make your voice heard, read the report, all the tools are there to really be effective advocates in this space.
All right, we really appreciate your time and getting to discuss this subject. It's so important and it is amazing. And like I said, not a new problem, it's an old one. So appreciate it. Joshua Horowitz, co-director of the Center for Gun Violence Solutions at the Johns Hopkins Bloomberg School of Public Health on Zoom from Baltimore.
Yeah, reminder, the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. And Mike Bloomberg is also a donor to groups that support gun control, including Everytown for Gun Safety.
Quick headline, Apple directors Al Gore, James Bell, they will be retiring. All right, now let's get to world and national news. Nancy Lyons in D.C. Hey, Nance.
Secretary of State Antony Blinken is heading back to the U.S. after an extended week-long trip to the Middle East. He says he did receive commitments from some nations to forcefully respond to Houthi attacks on commercial vessels in the Red Sea.
We have a number of countries that have made clear that if it doesn't stop, there'll have to be consequences, and unfortunately it hasn't stopped. But we want to make sure that it does, and we're prepared to do that.
The Times of London is reporting the U.S. and the U.K. will carry out airstrikes on Houthi military targets in Yemen tonight. With a partial government shutdown just 8 days away, House Speaker Mike Johnson is actively discussing reneging on spending levels that were agreed to with Democrats after getting pushback from his far-right colleagues. He told reporters today he's made no commitments. That increases the possibility of a shutdown, and that worries Jared Bernstein, the chair of the White House Council of Economic Advisors.
The idea that we would want to kick the ball in our own goal with an unnecessary government shutdown when I think majorities on both sides want to avoid that is absolutely counterindicated right now.
Jared Bernstein speaking with Bloomberg Sound On. Some star power on Capitol Hill today as the Senate Banking Committee took up legislation to help stop the flow of fentanyl into the U.S. Musician Jason DeFord, and also known as Jelly Roll, says he wants to be part of the solution. He admits he was part of the problem before serving time in prison for drug dealing.
I hurt people. I was the uneducated man in the kitchen playing chemist with drugs I knew absolutely nothing about, just like these drug dealers are doing right now when they're mixing every drug on the market with fentanyl, and they're killing the people we love.
DeFord is urging passage of the bipartisan Fend Off Fentanyl Act. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with the developing story headline right off the Bloomberg Professional Service. Apple directors Al Gore and James Bell will retire. Also, Wanda Austin will be joining Apple's board. Again, two retirings at Apple. Directors Al Gore, James Bell will retire. Also, Wanda Austin will be joining Apple's board. Those headlines right now on the Bloomberg Professional Service. Turned out to be a mixed Thursday today. Wall Street saw a volatile session. Stocks and bonds whipsawed after hotter than anticipated inflation data. Tempered bets on a Fed rate cut in March. S&P 500 index today did move lower. Again, volatile day with the S&P down 3 points. Little change there, down less than 0.1%. The Dow was up 15, a move higher right into the close. NASDAQ gained by 0.5 point today. Little change there on the NASDAQ Composite Index. 10-year yield, 3.96%, back below 4%. 2-year, 4.24%. Spot gold up $4 the ounce to $2,028, up by just about 0.2%. West Texas Intermediate crude up 1.8%, $72.67 a barrel. Bitcoin Thursday today, and we did see Bitcoin today advancing by just about 1% on Bitcoin today. Now, what about a soft landing for the U.S. economy? Samir Samana is Senior Global Market Strategist at Wells Fargo Investment Institute, and he was a guest today right here on Bloomberg Business Week.
And I just read a headline today on Bloomberg talking about how delinquencies are rising on credit cards. So, when you take all those different things into account, and the fact that, a lot of people, for whatever reason, either they're not selling their homes or they're not moving or they're not taking out new loans, have been able to avoid those higher interest rates. The problem is eventually you will have to buy a new car, buy a new home, move, all those different things. And when you do, there's a pretty good chance you're going to be paying a rate that's maybe 2 to 3x what you last paid.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Morgan Stanley close to an agreement to pay $200 to $300 million to resolve a years-long U.S. investigation into its employees' handling of stock sales big enough to move markets, a probe that rattled major clients and reverberated across the industry. Recapping, stocks ended a volatile day mixed. S&P moved lower, little change, down 3 points. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, one of the things that we've talked about for a long time is, and following the SEC approval of spot Bitcoin ETFs, is what it would do to the price of Bitcoin. Volatile trading. We've been looking at a lot of things. We've definitely seen a bit of a volatile trade today.
Yeah, we really have. So Bitcoin surged past 49,000 for the first time since December of 2021, trading commencing on the first U.S. ETFs that invest directly in the biggest cryptocurrency, only to back off and go below 46,000. Right now, Carol, remember, this trades 24/7.
Right.
Right now, Bitcoin's at 46,300, let's go ahead and say. So kind of a big swing today.
Right, exactly. All right, so a voice Bloomberg has often talked to about the trade overall and what's been going on in the crypto world is one of the 11 that got the SEC approval for its spot Bitcoin ETF. We're talking about Bitwise. Matt Hogan is back with us, Chief Investment Officer at the Crypto Index Fund Manager, Bitwise Asset Management, joining us on Zoom in New York. And Bitwise, it's a little
Bitcoin,
bit, yeah, I know.
Bitwise.
Their ETF down about 4.7%, but we did see a lot of pressure on most of these names. Matt, good to have you here. I've got to say, all of us have been burning the midnight oil this week because of you guys. Welcome back to Bloomberg. What can you tell us about the first day of trading, fund flows? What are you seeing?
FDR.
There I am. Thank you so much for having me.
You got it.
It has been a very long and an exciting day. I think this has been a tremendous reception for Bitcoin ETFs after 10 years. Across the suite, you saw more than $4 billion in trading volume. Obviously, not all of that will translate into net inflows. And while we won't know the flows for a couple of hours, I can tell you here at Bitwise that we experienced significant demand on the buy side. Investors coming into Bitcoin, into our ETF, BITB, the lowest cost Bitcoin ETF to launch today. We saw substantial demand, and you'll see inflows in the hundreds of millions of dollars.
Okay, let's talk about these fees. What's the break-even level of assets that are needed for this fund to be profitable?
Yeah, these funds are relatively simple products at the end of the day. They take Bitcoin and hold it with a regulated third-party custodian. It's not like our other products where they're index funds and oversight and the same level of management. This do one very simple thing. So in constructing these products, what you do is you price them as low as you can to economically deliver it to clients, because the less they pay, the more they keep. Obviously, at 20 basis points for BITB, we're planning on this being a very large product. We think the market for these products is measured in the tens of billions of dollars or more. At those levels, it become very sound businesses. But we're pleased at Bitwise to have a broader business to build this on top of, and that helped us get to this aggressive price point.
Sorry, did you say the break-even level? I might have missed it.
Yeah, I didn't provide a break-even level specific to this ETF, but
can you give me a range?
Look, I think these ETFs will be a success if they're $1 billion or more.
Okay.
Well, and, is this for retail or wealth advisors? What is your expectation about who is going to be ultimately the investor for this?
Yeah, I think a lot of investors go towards ETFs because they give them a great deal of peace of mind. They're not buying Bitcoin on an app or an offshore exchange. So I think there'll be some retail demand. But the real market here is financial advisors. Financial advisors have been wanting to access Bitcoin for a number of years. We know because we talk to them every day, and they want to do it through an ETF. And that's a really big market. That's a $30 trillion market. Take your figure. But that's a new market that's been unlocked. That's the primary audience for these ETFs.
I'm guessing, too, we've been talking about a lot, Matt, in terms of an advisor, they're going to say, why wouldn't you maybe just throw a small portion of your portfolio? Because as our Eric Balchuna said, earlier, what if all these guys are right in the crypto world and Bitcoin really does become something substantial longer term? So what kind of allocation do you think some of these advisors might be? Is it a fraction of a percentage? What is it? How small? And how small can it be and you guys still do very well?
Yeah, absolutely. That's a great question. I do think until the ETF, advisors could just say, I can't access it. They no longer have that excuse. They can access it in a regulated low-cost ETF like BITB. I suspect most advisors will be looking at a 1% to 5% allocation. And again, this is a very large market, and more people than just advisors can make that allocation. But if we see those kind of allocations become the norm, again, you'll be looking at this market being, tens and tens of billions of dollars. I've seen estimates up to $200 billion. So this is a very large market, even at those small allocation sizes.
So 1 to 5%, you guys are in it then for the long term, no problem.
Absolutely, we're in it for the long term. We've been in this market for 7 years. We expect to be in it for another 70. This ETF is a big part of that puzzle, and we're excited to get in the market.
A big part of the conversation that we've been having over the last few days, over and over again, is the question about utility when it comes to the actual Bitcoin as a currency. We know that stocks provide future cash flows. Some provide dividends to their shareholders. Fixed income, if you buy bonds from the government, they're backed by the full faith and credit of the U.S. government. But Bitcoin exists as this different asset class. What's the case for utility here?
Yeah, there's a near-term case for utility and then a long-term case for utility. The near-term case for a utility is a non-sovereign store of value like digital gold, a way to protect yourself and exist outside of the fiat system, which is subject to debasement and inflation. And that's driven Bitcoin's returns up to this point, and I think will continue to be the primary driver for a few more years. Long-term, the destination where Bitcoin is going is to be an alternative settlement rail for the world. The world may not always want to settle its primary transactions on politically controlled currencies. Before Bitcoin can offer that potential, it has to be much, much larger and much, much more liquid and much, much more established than it is today. That's why this ETF is actually important for Bitcoin, because it pushes us further on that journey. Are we there yet? Yeah. By no means. Could we be there by 2030 or 2035? That's Bitcoin's ultimate destination. We took a big step forward today.
Matt, yes or no? The first time there's a hack, is everybody going to run for the exits?
Oh, there's never been a hack of the core Bitcoin blockchain. One of the beautiful things here is these Bitcoin are held in regulated third-party custodians. So it provides that peace of mind.
All right. Good. Good to check in with you. Matt Hogan, thank you so much at Bitwise Asset Management. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple directors Al Gore and James Bell are retiring. Wanda Austin will be joining Apple's board of directors. A major reversal today for Hertz, announcing it plans to sell a third of its American electric vehicle fleet and reinvest in gasoline-powered cars because of weak demand and high repair costs for its battery-powered options. The rental giant says sales of 20,000 EVs began last month and will continue over the course of 2024. Craig Trudell covers the automotive industry for Bloomberg News in London.
I mean, it's just fascinating to me because I think back to when Hertz announced that they were going to buy a ton of Teslas. This was 2021. We were still in kind of, the meme stock, era. It was very clearly, to me, it seemed like a play on the part of, just bankrupt Hertz to really generate interest in the company and interest in their strategy going forward. And it made Tesla a $1 trillion company.
And today we saw Hertz shares decline by 4.3%. Tesla today was down 2.9%. Sources tell Bloomberg a U.S. national security review of Nippon Steel's takeover of United States Steel Corp is unlikely to conclude until late this year. and may extend into 2025. That is far longer than the companies have publicly signaled. And those are some of our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenivek and Carol Masser. We're live in the Bloomberg Interactive Brokers studio in New York. Let's head to Washington, D.C. now for a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. President Biden is expected to make a statement tonight. As we're hearing, the U.S. and the U.K. are reportedly carrying out targeted strikes against Houthi military targets in Yemen. The Times of London broke the news of the plan this afternoon. The Houthis have been ramping up their attacks on commercial ships in the Red Sea. Donald Trump is not staying quiet. Today, he blasted New York's civil fraud trial against him during a surprise closing statement in court. His impromptu speech did not last long, though. It was cut off by Judge Arthur Engoron, as the former president claimed the case was a political witch hunt. The judge has already ruled Trump is liable for fraud, so the trial is largely focused on several remaining claims and the amount of damages. Trump spoke with reporters outside the courtroom.
They owe me damages for what they've done. We have a great company. We're a very innocent company. We did everything right.
The verdict is expected in weeks, maybe even months. In Los Angeles today, President Biden's son, Hunter, pleaded not guilty to federal tax charges. Well, following a barrage of criticism, the Pentagon's Inspector General is taking a look at Secretary Austin's decision not to tell his subordinates, as well as the President and Congress, that he was in the hospital. As Bloomberg's Irv Chapman reports, lawmakers want answers.
The ranking Republican on the Armed Services Committee, Senator Roger Wicker, was one of those raising questions.
Where were the chief staff people when this occurred? Who did they tell? Who instructed them not to bring this to the attention of the president? Where were the staff judge advocates giving the advice there?
Wickers asked if he was joining the call for Secretary Austin to resign.
The secretary is not going to resign. At this point, I have not made that call.
Wickers said if the secretary was not specifically in violation of federal law, Congress should rewrite the law to clarify it. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Tim.
All right, Nance, thank you so much. Nancy Lyons in D.C. So, paper crowns.
Yeah, I'm going to apologize to Elizabeth. I don't think I told you, Elizabeth, that we're doing this, but we have to, we have to do this one. It's the most read story in the last hour on the Bloomberg terminal. It's by our own Daniela Sartori Cortina, who writes all about how Burger King is asking its restaurants to put good vibes ahead of order speed. So what that means, Carol, if you walk into a Burger King, you can walk out with a cardboard crown because...
What?
Yeah.
I'm so there.
Because they're going to offer cardboard crowns to every customer. No exceptions.
So if you're like a guy who's 38 years old, no kids in the car, you got to say to him, do you want a crown?
Yeah.
Yeah.
Well, so here's what Deborah Derby, the CEO of Burger King's largest U.S. franchisee, Carol's Restaurant Group, said. You can't help but smile when you say that, and he can't help but laugh back. It forces the extra 2 minutes of engagement. Wow, 2 minutes of engagement is a lot of engagement.
Yeah.
Especially if
Chop,
there's a
I just
long
want
line.
kind of like, give me my burger and fries. The burger chain giving